So hi guys, welcome to the marathon lectures from Srinivasa CA and CMA by Srinivasa faculties. Okay, so right now you may be watching the accounting or auditing or law, whatever the subject. Out of 8 subjects, you may be watching any subject. I don't know. This is just an introduction video from me. Now, what important thing that you need to do right now is don't directly skip to the subject. Don't directly fast forward the video. Please watch this video without any interruption. Even when you're watching the marathon, we have given below the description timestamps. If you click on a particular timestamp, you will go to that particular chapter. But what I sincerely advise you, please watch this entire marathon in the same order. Suppose we uploaded 12th hour, don't directly go to the 5th hour and start watching. Watch in the same order because there is a structure that we follow so that you get the best understanding. Getting it? And further, after this 1 or 2 minutes, getting it, there is my another video which is merged, which is already merged. Please watch that also because that is an instruction to be followed while watching the marathon, what material to be used, all that also I covered. So the initial 5-7 minutes of my content, please do not skip. Please do not skip. So you're going to get some guidance on how to watch this marathon. Then you can directly start with the subject. That's it. Getting it? So take care. Continue watching. And please do not watch at higher playback speed. Some students think watching at higher speed, 1.5 times, 2 times the speed, dangerous approach. See, your objective of listening to the marathon class is not to listen, but to learn something. Learning, you should not make it fast. If at all we can cover the video in 5 hours, we would have covered in 5 hours, no? See, suppose I uploaded 10 hours marathon. If at all we can cover it in 5 hours, we would have taken it in 5 hours, right? Why the hell we take 10 hours? Why the hell we take 20 hours? So if at all you're watching at 2 times the speed, 1.5 times speed, you are not actually learning. You're only listening to the words. You are not learning. You're not analyzing. Analysis will not transmit. Understanding, you'll not get the emotion exactly. Whatever the emotion or intensity the faculty is teaching, if at all you're watching at higher speed, higher playback speed, you will never get that intensity. You will never get that connection. You just listen and leave. See, this is the reason why students, in spite repeat many a times, they still do not recollect. They still do not understand the content. Some students say, sir, some students may be faster in learning. If at all you are very fast in learning, try to listen the song at 1.5 times speed. Take any one particular song, try to listen at a higher speed. See whether you are connecting or not to it. You are listening, no? Music is audible, song words are audible, vocals and music, everything is audible. But why you are unable to connect? Connection is required with the subject. In order to establish that connection, please listen to the subject at standard speed. Even though you may be very smart, you may be very intelligent, just try that intelligence while listening to the songs also. Listen to a song at 2 times the speed. Emotion is important. In anything, any work you do, emotional connection is required. So please watch the entire content at standard speed. And I'm telling you, if at all you want to try 1 hour, if 1 hour you watch at standard speed, another 1 hour you watch at higher speed, you check back yourself where you are learning better. I think that is the best judge, that is the best decision. Just try that and then do. Because many people in YouTube are misguiding students saying, listen at higher speed, revise more number. No, that's not. Listen at standard speed. Your revision, number of times revision will naturally reduce. That's it. So continue watching the video. Thank you. Have a nice time. Bye-bye. So, hi guys. First of all, thank you very much for, encouraging our institutes, rest of us CA and CMA to this level. Anyhow, so here is a good news for all of you. From Srinivasa, again in respect of November 2022 exams, we are going to upload again all updated marathon classes, revision classes. Okay, we are once again uploading the videos or revision videos for November 2022 exams. And we are doing it for all 8 subjects. So who are the faculties that first of all taking all these marathon revision classes? And myself, I will take audit and I will take some 2 or 3 important chapters of company law. And so nothing but P5, mainly I'll focus on, paper 6. And Satyaraju sir will focus on paper 1 and paper 5. So you'll be getting approximately 20 plus 20, 40 hours of marathon for accounts and advanced accounts put together. Then Subramaniam sir will be taking paper 2 part A, company law main chapters. And Harish Krishnan sir will be taking paper 7, which is EAS and SM marathon. And Vikita madam is taking paper 2B, other loss marathon. And Samba sir is going to take paper 4, income tax, separate marathon for 12 hours. GST, some 10 hours, separate marathon. And Srinivasa Reddy sir, paper 3, costing marathon, approximately we are going to upload for 15 hours. And coming to our another faculty, paper 8 part B, Naga sir is going to take economics marathon. And same Samba sir is going to take paper 8 part A, financial management marathon class. So from the entire Shrestha team, we are going to give you all 8 subjects revision marathon classes on YouTube. Now, first thing that you might get a doubt. So what are the things or what are the materials that you are going to use for these marathons? So before that, where you will find this marathon on the YouTube? Very simple. You just open caramharsha. Okay, there is a YouTube channel. So go to that home videos and there is a playlist. Here you will find a playlist separately for November 2022 marathons, revisions, CA, Inter. So in this playlist, you will find all 8 subjects. Now immediately you might get a doubt. Are all 8 subjects uploaded right now? No. By 10th of the September, you may be watching this video. You may be watching this video, on the date on which it was uploaded, or even maybe later. I don't know. Getting it? By 10th of September, all subjects except auditing, we will upload. Audit subject new marathon, we will upload after September 20. After September 20, audit related subject marathon will be uploaded. And you know what? The all revision classes, entire revision marathons are absolutely in English. Because we Shrestha is having 1500 plus students across 20 states in India. Not 20, I can say 26 states I think we have covered. Some 2 or 3 northeast states only we have not covered, but 26 states we are having admissions. So obviously, for us, the students across India, we can't use any particular regional language. So we have to stick to English. So entire explanation will be in English. Now, coming to a few questions which you need to understand. Okay. One. We have uploaded in May 2022 exams some video classes, marathon classes. I am telling you the same revision classes with slight modifications we are uploading. Some for few chapters we re-recorded like 1 or 2 chapters wherever there were amendments. But actually speaking, for May attempt and November attempt, the subject, the material, everything is exactly same. Because right now we are in September month 2022, right? If at all you go and check icai website, what is the latest material available? November 2021 edition, October 2021 edition. So typically for May attempt, whatever material we are using, the same material we are going to use for November. I hope you are getting it. And now so we are using a particular material, right, for marathon, where you can download this marathon, where you can download this particular material which is used in the marathon classes. So there is an app in Shrestha for SHRE, Shrestha for CA and CMA. There is an application called Shrestha for CA and CMA. You will find right side, above me, there are 2 logos. First logo is there white color logo. That logo. If you type this name in the Play Store, you will get that logo. Getting it? Only from Android you can download the material. Suppose if you do not have an Android phone, please use somebody's Android phone and download the material. Okay, so in this application, you just download and log in. We have given in the main menu. If you go to the application, there is something called main menu. Just after opening the app, left side top, you will find main menu. Click on that, you will find study material. Inside that, November 2022 and May 2023, there are materials. Please download the materials. PDF copies, please download and keep it with you, so that it will be useful when you're watching the revision class, so that whatever faculty is actually using the material, so it is with you in hand. That's it. If at all you want to have a hard copy, you can buy that hard copy on the same application. But I don't think you require a hard copy, because it's a revision class. So whatever you already have gone through, whatever material you already learned from, please stick to that material. Take our revision classes as a additional guidance. And I'm telling you, you're going to enjoy the subject like anything from, See, generally in YouTube, you'll find many subject related marathon, but for all 8 subjects at a single place with a particular standard, uniform standard, you'll rarely find. So here, our institutes, rest of us CA and CMA is giving you that option. Getting it? So I hope you understood what we are going to deliver. Now, what are the topics that we are going to cover approximately, if at all you ask me? So, if you look at paper 1, accounting, we are going to upload 2 videos. Approximately both the videos put together will be 20 plus hours. So, these are the chapters: fundamentals, incorporation, introduction to accounting standard frameworks, AS2 and AS12, financial statements of company, bonus, investment accounts, redemption of debentures. That's it. We are not covering anything else from accounts subject. And paper 2A, company law, if you look at, me and Subramani sir, both of us are taking in this case the classes. Like if you look at accounts of companies and dividend, audit and auditors, these 3 chapters related revision I will take. Rest of the chapters, basic, incorporation, share capital, deposits, charges, these chapters revision will be handled by Subramaniam sir. Then other laws, all these topics are being covered by Vikita madam. And paper 3 costing, all these topics, 100% of all the chapters are being covered by Srinivasa Reddy sir. Okay. Then part 2, see, costing video will be uploaded in 2 parts. Both together will be 15 to 16 hours. Then paper 4A, income tax, we are going to cover 5 heads of income, clubbing provision, set up and carry forward, chapter 6A, return of income, TDS and TCS. And GST, we are going to cover almost all the chapters. Then advanced accounts, introduction, few accounting standards, amalgamation, reconstruction, liquidation, partnership, consolidation. All these topics we are going to cover as part of revision. And accounting, advanced accounting is also being uploaded in 2 parts. Accounts, you will have 2 parts videos. Advanced accounts, you will have 2 parts videos. Sorry, company you will have 2 parts. Sorry, costing, you'll have 2 parts videos. Then coming to auditing, ignore auditing right now because I have not yet uploaded the marathon. Then paper 8A, financial management, these chapters. Paper 8B, these chapters. Even paper 7A, paper 7B also we are going to upload all the subjects. I told you where you will find all these videos. You will find that in the Play Store. Open caramharsha, open playlist. Inside that you will find November first playlist, November 2022 marathon. So in that playlist you will find all the 8 subjects video. By the way, you will find all these videos by 10th September maximum. Getting it? So actually I'm recording this video on 4th September. So right now after this video I'll be uploading the marathon videos. And this video will be a common video in all in all marathon videos, whatever I'm going to upload, 12 hours videos. In all the videos, this video right now whatever I'm recording will be a common video, so that every time whoever is watching a new revision class will not miss all this. Now one more important thing, now who should not watch this marathon class? If at all you are a first time learner. Now many people will ask me, sir, is it useful for a first time learner? No, this is not for first time learners at all. This is for those who are going to write exam. Okay, those who are just about to go and write the exam. No, for them only this is. See, a subject is completely covered in 20 hours. 100 marks paper is hardly being covered in 20-24 hours. A regular course will be 120-150 hours. Imagine we are reducing 1/5 time. It's a revision. First of all, understand revision is useful. Revision class will be useful only for those who already prepared the subject once. You may have prepared in self-preparation method or you may have taken coaching. That doesn't matter. That doesn't matter. But those who already prepared once, only for them this is useful. For others, strictly I'm saying not at all useful. Because don't waste your time. But I'm telling you, those who already have gone through books, who already wrote 1 or 2 attempts, getting it, or who are first timers. Maybe you are first time you're writing in November, but you already gone through the coaching. For you, these marathons are going to be a best thing in your preparation. Definitely after watching this marathon, you will definitely get a new look on the subject, new idea, new perspective on the subject, so that within next 1.5 month you can plan your preparation perfectly. That's it. Okay, take care, have a nice time. So continue the classes. Getting it? So this is an intro video. First I'll upload this normally, then again I'll upload this as part of the revision videos. Getting it? So continue. Thank you, have a nice time. Bye bye.
Very good morning, students. Welcome to CA Inch Paper 3 Marathon session. for cost and management accounting. Myself, CA and CMA Srinivasa Reddy, practicing chartered accountant and faculty for cost and management accounting. So hope you are all doing well, and welcome to this marathon session. So short video about 5 to 10 minutes about the marathon session. What are the topics we are going to cover in terms of marathon session? So these are all things I'm going to discuss in this for the first 5 to 10 minutes. Okay. Now, this is all about myself. A 5 times all India rank holder in CA and CMA, state third rank in intermediate examinations, and 98 marks in terms of accountancy in CIPCC, 86 marks in cost and management accounting. So I worked with Bharat Petroleum Corporation Limited, which is a Fortune 500 company. And I worked with Anandam company as an intern, and I'm the partner in Shrikant and Srinivasa Chartered Accountants. This marathon session is purely about examination oriented session and conceptual oriented session. So this marathon, I'm assuring that this marathon covers you important questions and theory part of cost and management accounting. So for this, what you need to do is that you need to I've prepared a marathon material covering the questions, Shrestha costing material, and solutions. You also need to keep ICI study material and ICI referencer for quick revision for theory part. So for few chapters, the theory part I'm covering from ICI referencer for quick revision. And at the end, I'll be discussing the exam preparation strategy for this paper 3, cost and management accounting. Now, in terms of the topics, I'll be taking you to the marathon material. So this is a marathon material which you have prepared, and I have given the brief glimpse of what are the topics we are going to cover in this marathon. So we have 15 chapters in paper 3, cost and management accounting. So this sequence is not as per ICA. This sequence was prepared by myself. I'll be discussing all the chapters based on this sequence only. Now, this sequence is more of examination oriented, so please understand that also. Now, starting, I'm discussing with the marginal costing, standard costing, activity-based costing, and budgets and budgetary control, service costing. I'm sure that for the first 5 chapters, you will be getting 50 marks from these 5 chapters, 5 into 10 marks. Employee cost, cost sheet, unit and batch costing, job and contract costing, material cost accounting system, process and operation costing, joint and byproducts and overheads. I'm discussing approximately 1 hour each. An introduction to cost and management accounting, which is a theory chapter, I'll be discussing for an half an hour. This time may change from 1.25 hours to 1.5 hours, depends upon the topics we are discussing. Okay. In this video, I also discuss what I'm going to discuss in marginal costing. What are the questions I'm going to discuss from marginal costing? Like in terms of marginal costing, I want to discuss what is the meaning of marginal cost and profit statement, marginal costing, what is period cost, product cost, PV ratios, what is break-even point and cash break-even point, how to calculate BVP in case of shelf life, BEP in case of multiple products, etc., etc. Key factor analysis, relevant make or buy decision, shutdown point, indifference point. What is the difference between absorption costing and marginal costing? How to prepare income statement under absorption costing and marginal costing? And I have selected few questions for discussion in the marathon session, like problem number 3, 8, 14, 17, and 20, and practice problem number 3 and 12 from the Shrestha material, and study material illustration number 16. When it comes to standard costing, yes, we'll be discussing the principles of standard costing, material cost variance and how to check material yield variance, labor cost variance with idle time, and alternative name of variance. Like for example, mixed variance, we can call it as gang variance, sub-efficiency as yield variance, variable overhead variances based on hours and output, fixed overhead cost variance, missing figure problems, ratios, 3 variances model. 3 variance model is very important because it is clubs both variable of overhead and fixed overhead. Okay. And a few questions as problem number 3, 4, 6 and class notes, and problem number 12 I'll be discussing. Similarly, activity-based costing. So when ABC is important and in which cases ABC is supposed to be followed, meaning of activity, cost object, cost driver, and differential between traditional costing and activity-based costing. What is the meaning of cost distortion? What is the hierarchy stages in activity-based costing? Hierarchy in activity-based costing. What is meant by ABM? What is analysis under ABM? What is manufacturing cycle efficiency? What is activity-based budgeting? And a few important topics. And problems also, I have selected 5 problems. 2 problems with 2 different chapters. Very important. Activity-based costing with standard costing, activity-based costing with the marginal costing. There is important question in calculation of gross hours in problem number 2. So in terms of budgets and budgetary control, what is the meaning of budget, classification of budget, what is meant by budget manual, flexible budget versus fixed budget, cash budget, ZBB, zero-based budgeting, performance budgeting, and few budget ratios like capacity ratio, activity ratio, efficiency ratios, standard capacity usage ratios. Those I'll be discussing here. And question number 8, 12, 15, and 16. Service costing is introduction to service costing, different service cost units, transport sector, hospital sector. Those questions also I will be discussing. So these 5 chapters is very important. I am assuring that each chapter will be getting 10 marks in the examination. Employee cost, yes. What is direct employee, indirect employee? What is the treatment of idle time, overtime, remuneration methods, half-say bonus methods, half-say premium plan, Rowan premium plan, labor turnover. What is the causes of labor turnover? What is the difference between job evaluation and merit rating? What is how to calculate profit foregone in case of employee turnover? And few problems. Problem number 2, 5, 12, 13, 14, and 28. Cost sheet, I'll be discussing the total theory from our quick revision material, and I'll be discussing illustration number 3 in study material. Unit batch costing, what is the treatment of spoiled and defective work? What is batch costing? What is EBQ, economic batch quantity? What is the difference between job and batch costing with problem number 4 and 5? Job and contract costing, yes. What is job cost code? Treatment of spoiled and defective work. Most of the time we feel that only questions are important, but there are some important theory part like spoiled and defective work treatment. What is the meaning of terms used in contract costing? Yes, this is the chapter which you can fetch another 10 marks. Material cost is procurement procedure, material reach, stores ledger, difference between bin card and stores ledger, inventory control levels, minimum level, maximum level, average level, danger level, etc. Economic order quantity, ABC analysis, FSN analysis, VED analysis, HML analysis, input output ratio, input inventory turnover ratios, material issues, method of issues, FIFO method, LIFO method, and treatment of abnormal and normal loss of materials, difference between waste and scrap versus defectives. Question number 2, 7, 9, 12, and 30 will be discussed. Cost accounting system, yes. What is integrated cost accounting system, non-integrated accounting system, entry flow of accounting systems, what are the items included and excluded in financial accounts and cost accounts, reconciliation between financial accounts and cost accounts, partial plan versus single plan, and what is the disposition of variances. Okay, with problem number 3, 4, and 15. Process and operation costing. Here major important is equivalent production units, normal loss, abnormal loss, and in some cases you'll be getting abnormal gain. And inter-process profit is one important question in terms of process costing. Problem number 3, 10, 12, 14, and 16. Joint and products. What is the meaning of joint product, co-product, byproduct, split off point, apportionment of joint cost at split off point? What is the methods of allocation of cost and treatment of byproducts? And along with question number 1, 4, 5, 9, and 10. Overheads is last chapter in terms of practical chapter. What is cost allocation, apportionment, reapportionment, and absorption? For the methods of allocation, blanket overhead rate, multiple overhead rate, treatment of overhead variance, concepts related to capacity, practical capacity, normal capacity, etc. Treatment of certain items in cost accounting, and two-tier Michelin rate, along with the questions. In terms of introduction to cost and management accounting, what is the meaning of cost, cost accounting, cost accountancy, cost management? What are the objectives of cost accounting, uses of cost and management accounting, cost object, cost center, cost driver? What are the responsibility centers, and what is the evaluation of responsibility centers? Elements of cost, difference between cost accounting and management accounting? What are the different methods of costing and techniques of costing? What are the different types of cost? So this is what broadly I'm covering in terms of this marathon session. So marathon session is this. I wanted to finish in somewhere about 15 hours. So maximum topics I wanted to cover in terms of costing. Few important uh, questions also I'll try to explain here, so that you'll be full aware about the paper 3 cost and management accounting. Students, please understand, this is a marathon session. That means I assume that you have already listened to our classes and you are having aware about the costing, and this is more of recapitulation, and I'll be discussing what is important, maybe some topics which you might have left, which are important for examination. Those I'll be covering in terms of this marathon session. Okay. So with this small introduction, we'll move to the respective chapters of marathon session. Okay. Yes. Come on. Next chapter, we are discussing about the marginal costing. It's the first chapter in our marathon session. So in terms of marginal costing, we'll be discussing what is marginal cost and cost and profit statements under marginal costing, and period cost and product cost, PV ratio, cash BEP, normal BEP in case of multiple products, BEP in case of shelf life, margin of safety, decision making, shutdown point, indifference point, etc., etc., with a few questions in terms from our material. Please understand, students, this is one of the very important chapter. I'm expecting at least 10 to 15 marks from this chapter. It can be more than 10 to 20. So in between 10 to 20 marks we're expecting from this marginal costing chapter. Okay. Now, so I'll explain all the concepts one by one, so that later on we'll go with the questions. Okay. Marginal costing. Now, what is the meaning of marginal cost? Marginal cost is the cost of incremental cost of producing one more unit extra. Now, in terms of Standard Institute of Management accounts, the marginal costing is a system in which variable costs are charged to cost units. So variable costs are charged to cost units, and fixed costs are charged against full against the aggregate contribution. Now, if you want to understand properly about the marginal costing, you need to understand two important topics called product cost and period cost. Now, so don't assume that marginal costing is all about formula, sir. So this is a very important introduction to the marginal costing. Product cost or inventorable cost. Inventorable cost means those are considered for inventory valuation. That means those costs are considered for inventory valuation. That means, so what are period cost? Period cost are cost incurred irrespective of production. That means these costs are incurred based on period. Based on period means what? Based on time. Now in terms of absorption costing and marginal costing, see carefully. Both are techniques of costing. Absorption costing and marginal costing. In any type of costing, we need to do the inventory valuation. Now, when it comes to inventory valuation, under marginal costing, please understand that only variable manufacturing cost are considered for inventory valuation. That means we'll be having variable non-manufacturing cost, fixed manufacturing cost, fixed variable, fixed non-manufacturing cost. Now, in terms of marginal costing, this we call as product cost and period cost. Under marginal costing, only this is a product cost. Remaining all are period cost. Those are not considered for inventory valuation. If you remember accounting standard 2, there are some expenses which are considered for inventory valuation. There are some overheads which are not considered for inventory valuation, right? Now, under marginal costing, only variable manufacturing costs are considered as product cost. Whereas, what about variable non-manufacturing costs like selling and distribution expense, variables like commission or paying, sales commission? That is a variable non-manufacturing cost. Those are not considered for inventory valuation. That is not a product cost. Fixed manufacturing cost and fixed, those are period costs. Those are not considered for inventory valuation. Whereas under absorption costing, variable manufacturing cost, fixed manufacturing cost are considered as product cost. Whereas variable non-manufacturing cost and fixed non-manufacturing cost are period cost. That means the difference between absorption costing and marginal costing is an account of what? Treatment of fixed manufacturing cost as period cost under absorption costing. Any fixed cost or period cost under marginal costing. That means when you're doing inventory valuation, you should consider only variable manufacturing cost under marginal costing. Whereas under absorption costing, if you remember our cost sheet also, so these two will be form part of cost of production. These two form part of what? Cost of goods sold and cost of sales, correct? That means under absorption costing, our cost sheet is based on absorption costing. Variable manufacturing costs and fixed manufacturing costs are product cost. Whereas under marginal costing, only variable manufacturing costs are period cost. Only variable manufacturing costs are product costs. So this is the major difference between absorption costing and marginal costing. Now, when it comes to marginal costing, what SEMA defined is that, sir, under SEMA, Standard Institute of Management Accounting, marginal costing is a system where variable costs are charged to cost unit. That means they are be charging to cost unit. Cost unit can be product, service, or etc. And all the fixed costs are written off against full contribution. Now you need to understand what is the profit statement under marginal costing. If they ask you profit statement under absorption costing, consider cost sheet. Profit statement under marginal costing, understand. Now, first one is revenue or income less what will be reduced less variable cost which are of production cost. Then you will be getting a contribution. What is the meaning of contribution? Contribution is the amount contributing towards the fixed overheads. If recovered, it is contributing towards your profit. This contribution is called contribution from manufacturing. From this, I need to reduce variable non-production cost like selling and distribution. Then you will be arriving at contribution net. This is the contribution. From this, we need to reduce fixed cost, whether it is manufacturing or non-manufacturing, you'll be arriving at one minute. You'll be arriving at profit. Now, from this, what you can understand is that sir, contribution is the amount which is recovered, which is recovering towards fixed cost. If recovered, the balance would be profit or loss. Now, in terms of this, we need to understand the important things here. Sir, here contribution is equal to sales minus variable cost, or contribution is equal to fixed cost plus profit or loss. If it is a loss, it is a minus amount. Now, here we will be calculating PV ratio. PV ratio is what amount? Profit volume ratio. Contribution divided by sales into 100. You can also calculate if 2 years data is given, change in profit divided by change in sales, because in 2 years fixed cost remains same, right? Change in sales into 100, or change in contribution divided by change in contribution divided by change in sales into 100. So this is the profit volume ratio. Here we need to understand a concept called CVP analysis, cost volume profit analysis. In terms of this cost volume analysis, if you see, this is units, this is cost and revenue. Now this is the fixed cost, because it is common throughout the up to certain level of activity. This is variable cost. This is total cost. This is total revenue issue. At some point of time, total revenue and total cost is same. That point is called BEP point. The angle which is formed at BEP point is called angle of incidence. More is the angle of incidence, more is the amount of, less is the break-even point, more is the amount of profit. Okay. Now, let us come to PV ratio we discussed. Now, break-even point is that break-even point at BEP, profit is equal to 0. That means when the profit is 0, when contribution is equal to fixed cost, correct? Because contribution minus fixed cost is 0, then contribution is equal to fixed cost. At which level at BEP, contribution is equal to fixed cost. How to calculate BEP, sir? BEP units. If you want to calculate BEP units, it is fixed cost divided by contribution per unit. If you want to calculate BEP in value, whenever there's a contribution, I should multiply with sales sum. So then into selling price. So I'll be arriving at the fixed cost divided by PV ratio. If you want full detail session, you need to listen to our regular classes, right? So fixed cost divided by PV ratio. Now, that means total sales is equal to, sir, once my break even is reached, anything more than break even sales is called margin of safety sales. Sir, if in case of margin of safety sales, what happened is that in case of margin of safety sale, see here, once, for example, if you have recovered your fixed cost in 500 units, for the next any units you have sold, let us assume I'm selling another 100 units beyond this 500 units. I need to incur only the variable cost, because variable costs are incurred when there is a production. Fixed costs are will not be incurred because the total fixed costs are recovered in the 500 units. So now obviously sales minus variable cost, what you'll get? Contribution. There is no fixed cost. So that remains what amount? Profit. So at margin of safety sales, contribution is equal to profit. Contribution is equal to profit. At break-even sales, contribution is equal to fixed cost. Now at margin of safety sales, contribution is equal to what amount? Profit. That means margin of safety sales is equal to profit divided by contribution per unit. If you want margin of safety sales in value, profit divided by PV ratio. So this is very important. Okay. Now we have worked out BEP. Now in terms of BEP, there is a call cash BEP, because in fixed cost you may have some expenses which are of non-cash in nature, like depreciation. So in case of cash BEP, it is total cash fixed cost divided by contribution per unit. If I want units, if I want value, total cash fixed cost divided by PV ratio. Okay. Now in case of BEP, in case of shelf life, very important. If you remember question number 3, I think 1 minute. If you take it to question number, I think this question is not there. I'll take it to the material. Normally in case of BEP, if it is a more than one period, so what we'll do, we'll use either FIFO issue or LIFO issue. But in case of shelf life, you should use only FIFO one. I'll take it to the material. 1 minute. Because it's a very important question. I wanted to stretch on it. Now, see the question number 17, our question, material. A dairy product company manufacturing baby food with a shelf life of 1 year furnishes the following information. Shelf life. In January 2015, the company has an opening stock of 20,000 packets, whose variable cost is 180 per packet. In 2015, the production was 1,20,000 packets, and expected production is 1,50,000 packets. Expected sales for 2016 is 1,60,000 packets. In 2015, the fixed cost per unit was 60. It is expected to increase 10% in 2016. The variable cost is expected to increase by 25%, and the selling price for 2016 has been fixed at 300 rupees per packet. You are required to calculate the break-even volume for 2016. Now here, we are calculating break-even point in case of opening stock. That is very important. That is only the thing which you need to understand here. Now, what is the production in the last year? What is the production? Opening stock is how much amount? 20,000. So I'll write down here. How to calculate it? So opening stock is How many units? 20,000. What is the cost of opening stock? Because in marginal costing, your inventory is valued at which cost? Variable manufacturing cost. That is what I discussed at the beginning, right? Now, what is the cost of last year? So variable cost is how much amount? 180 rupees, correct? Now, current year, you are selling at 300 rupees. Now, what is the current year production? Production was 1,20,000 packets. Expected production is 1,50,000 packets. What is expected? Say 1,60,000. What is the fixed cost? Sir, in calculation of BEP, normal formula is what? Fixed cost divided by contribution per unit. But contribution per unit is different because for opening stock, contribution is 300 minus 180, which is equal to how much amount? 120. Whereas for the current year units, 300 minus 180 into variable cost is expected to increase by 25%. That means how much amount? 180 into 125 percentage. 225. So 300 minus 225, how much amount? Only 75 rupees. Now I know fixed cost. What is my fixed cost last year? What is the current last year production? 1,20,000 into 60. How much amount? 72 lakhs. But this is expected to increase by 10%. 72 lakhs into 110 percentage. How much amount? 72 lakhs into 110 percentage. 79 lakh 20,000. How much amount? 7. So total fixed cost. What is the BEP point? At BEP point, total fixed cost should be recovered. What is the fixed cost I'm supposed to recover? 79 lakh 20,000. Now, normally you may use FIFO method, LIFO method, or weighted average. But in case of shelf life, you should use only FIFO method. Normal understanding is that, sir, if the product is having shelf life, first I'll sell those units, then the current production. For example, you are doing a milk selling business. You have yesterday's milk and current day milk. Which milk will you sell first? Yesterday's milk, because that is having a shelf life. Now, from opening stock, how much contribution I'm expecting? From opening stock, 20,000 packets are available. What is the contribution from opening stock? 20,000 into 120 rupees. Correct? How much amount? 24 lakhs. Still, I need to recover how much amount? 79 lakh 20,000 minus 24 lakhs. How much amount? 55 lakh 20,000. Now, this 55 lakhs should be recovered from which year production? Current year production sales. So that means current year produced and current year sold. What is the contribution from each unit? 75. So 55 lakh 20,000 divided by 75. How much amount? 73,600. Is your BEP 73,600? Obviously no. Your BEP is 73,600 plus opening stock of how much amount? 20,000. So total BEP is how much amount? 93,600 units. So you need to calculate like this. If it's a normal break-even point, it is very easy. So fixed cost divided by contribution per unit. If you're having an opening stock, if question is specifically says to follow FIFO method, LIFO method, you need to follow similar method. But if the question is absent and if it is having a shelf life, you need to follow FIFO method. That means opening stock units are sold first, then the current year produced goods. Now, for example, 79 lakh 20,000 is the total revenue. Total fixed cost to be recovered. From opening stock, I'm selling 20,000. I'll be getting 24 lakhs. Still, I need to recover 55 lakhs 20,000. 55 lakh 20,000 divided by what is the contribution from existing produced units? 75 rupees. So 73,600. So total BEP would be 73,600 plus 20,000, which is 93,600. Very important from examination point of view. Okay. Right. Now, so BEP in case of shelf life, we have explained with problem number 17 in our material, right? So that point is covered. Now, next point. BEP in case of multiple products. When sales mix are given in quantity, when sales mix are given in terms of value. In terms of quantity, simply find contribution divided by fixed cost divided by average contribution per unit. That means if the sales mix ratio is somewhere about 2:3:4, you should multiply with the contribution, the respect unit, then you get the total contribution. So that fixed cost divided by contribution, you'll get the BEP units. That BEP unit should be in the ratio of 2:3:4. When it given is in terms of value, fixed cost divided by multiple PV ratio. So you need to multiply the sales value mix with the respect to PV ratio. Then fixed cost you should divide by the respect to PV ratio. Then once you get the BEP sales value, that should be in the ratio of 2:3:4. So normally in IPCC or CA inter level, they'll be asking based on quantity. So your sales mix into respect to contribution per unit, you'll get average contribution. So fixed cost divided by average contribution per unit. Okay. Now in terms of margin of safety, when the margin of safety is more, that means the fixed costs are less. So BEP is recovered earlier. So you'll get more, it indicates more amount of profit. Okay. Now how will you calculate margin of safety? Means profit divided by contribution per unit, you'll get margin of safety quantity. If it is a profit divided by PV ratio, you'll get the margin of safety sales value. And finally, always remember total sales is equal to break-even sales plus margin of safety sales. Okay. Now, in the examination, if they ask you, if they give you only margin of safety sales, calculate profit. If they ask you, simply find out the contribution at margin of safety sales. That would be the total profit of the organization, because at break-even sales, profit is 0. At margin of safety sales, your contribution is the profit. So that is what one way of understanding this concept. Okay. Now, margin of safety sales, we have worked out profit divided by PV ratio. So you can work out, if they ask you, profit is equal to margin of safety sales into PV ratio, because the contribution at margin of safety sales is only the profit. That is a simple formula. Okay. One more thing is the sales required to earn desired profit. Sales required to earn desired profit. Simple. Normally sales formula is what, Amma? Sales formula is what? Contribution divided by PV ratio. Correct? Yes or no? Contribution is equal to what? Sales into PV ratio. So sales is equal to contribution divided by PV ratio. Now instead of contribution, I'll be writing as fixed cost plus desired profit plus desired profit divided by PV ratio. If you want to find out the quantity, always remember contribution per unit. If you want to value, you need to divide by PV ratio. Okay. So this is one important concept which many times you'll ask. Okay. Angle of incidence I also discussed. Now, next important point is that indifference point. What is indifference point? Indifference point, the level at which profits are same or the level at which costs are same for two methods. For example, you wanted to conduct a party. You have chosen two hotels. In case of hotel A, variable cost, that means food cost is 300 per plate. In case of B, variable cost, that is food cost is 400. Rent of A is somewhere about 50,000. B is somewhere about 40,000. Now, if they ask you what is indifference point, so tell me at which quantity both remains the same. That is, we call as what indifference point. Now, for example, if I calculate it for 100 participants, I'm doing roughly. What is my total cost? 100 into 300, how much amount? 30,000 plus rent, how much amount? 50,000. What is the cost? 80,000. In this case, 100 into 40, how much amount? 40,000 plus fixed cost is 40,000. How much amount? 80,000. Tell me at 100%, the profit of both the levels remains what amount? Same. The calculation of this 100 participants is only indifference point. That means at indifference point, costs are same, obviously when the costs are same, profit also remains the same because sales is constant, right? The level at which profits are same or cost is same, the total cost is same, is called what? Indifference point. Now, how will you calculate indifference point, sir? Indifference point is equal to difference in total cost divided by difference in variable cost. Difference in total cost, 50,000 minus 40,000, how much amount? 10,000 divided by difference in variable cost, 400 minus 300, how much amount? 100. How many participant? 100 participant. That is how you got the total cost under both the methods remains what? Same. Now, if your participants are less than 100, which I am supposed to choose? This is a decision making. If my participants are more than 100, what do we choose it? If your quantity is more than indifference point, choose where variable cost is less. If your quantity is less than indifference point, choose where fixed cost is less. That means if I get 80 participants, if I expect 80 participants, now what is my cost in this case? 80 into 300, which is 24,000 plus 50,000. How much amount? 74,000. In case of B, 80 into 400, 32,000 plus 40,000. How much amount? 72,000. Tell me, what did I say? If your quantity is less than indifference point, choose where your quantity is, choose where fixed cost is less, correct? Now tell me where the fixed cost is less. Under B, it is fixed cost is less. That is the reason cost is how much amount? 72,000. Now, if my quantity is 120, what is my cost here? 120 into 300, 36,000 plus 50,000. How much amount? 86,000. Whereas here 120 into 400, how much amount? 48,000 plus 40,000. How much amount? 88,000. Tell me, if the quantity is more than indifference point, choose where variable cost is less. Where variable cost is less, option A, because your cost is only 86,000. So simple. How to calculate indifference points? The difference in total cost divided by difference in variable cost. Now, in case of decision making, if the quantity is less than indifference point, choose where fixed cost is less. In case of quantity is more than indifference point, choose where variable cost is less. That is the indifference point. Now, next one, shutdown point. Now, shutdown point is where you need to close your operations. Now, obviously, in case of shutdown, there are some savings in the fixed cost because your variable cost will not incur, but there will be some savings in fixed cost. When the firm has to close down, when a firm has to shut down is that if your contribution is insufficient to meet the available fixed cost. Now, for example, assume that at 100 units, sales is 100 rupees per unit. 100 into 100, how much amount? 10,000. Variable cost is 80 rupees. So 8,000. What is our contribution? What is the contribution? 2,000. Your fixed cost is somewhere about 6,000. Now tell me, what is our loss? Our loss is 4,000. Tell me, if you're getting a loss, normally you'll understand that you need to close the business. But what if I continue? For example, if I continue if I shut down the business, I can save only 3,000 rupees as fixed cost. That means my total fixed cost I'm bifurcating into avoidable fixed cost and unavoidable fixed cost. What is avoidable fixed cost? Sir, if the firm has shut down, these costs can be avoided. What are unavoidable costs? Even the firm has shut down, the costs are supposed to be incurred. What would be there? For example, you have kept a security guard for safeguarding our machinery. Even if firm is shut down, you need to incur that cost. That is we call as unavoidable fixed cost. There are some avoidable, for example, electricity. So there is something called you are using two spaces. Now, if I shut down, I can keep all material at one space. I can save one fixed cost. That is we call as avoidable fixed cost. When the firm is supposed shutdown point is equal to avoidable fixed cost divided by contribution per unit. Now, in case of this avoidable 6,000, if the business is continued, you are incurring a fixed cost of 6,000. The business is shut down, you are incurring a fixed cost of 2,000. Let us assume. Now, tell me what is avoidable? 4,000 you can avoidable. What is the contribution per unit amount? 20 rupees, 200 units. Okay. Now, for example, up to 200 units, you need not close down the business. If the volume is, so if the volume is less than 200 units, you can close down the business. If the volume is more than 200, no need to close down the business. Not work out. Now, at 100 units, what is our loss amount? 4,000. If the units are 200 units, I'll take 220. Now, what would be sales? Sales is 220 into 100. How much amount? 22,000. Less variable cost, 220 into 80. How much amount? 220 into 80. 17,600. Now, what is your contribution? 4,400. Fixed cost, how much amount? 6,000. So, what is our loss? 1,600. Now, tell me, 4,000 loss is better or 1,600 loss is better? 1,600 loss is better. That means if your quantity is, if you are decided, if you can sell more than shutdown point, continue the business. If you cannot sell the shutdown point units, you need to close down the business. That means if your expected sales is less than 200, please shut down. You can save some amount in terms of fixed cost. If your sales volume is more than 200, please continue the business. That is the decision making in terms of what a shutdown point. Okay. Now, differential cost. Now, what is the meaning of differential cost? Differential cost is the change in the cost which results from adoption of an alternative course of action. That means, as of now, I'm decided to produce and sell 100 units. Now, I wanted to move from alternative course. That is, I wanted to produce and sell 150 units. The extra cost of producing 50 units is called what? Differential cost. Or you are already producing 150 units. Now you decide to produce 100 units. Now this is also differential cost. If the differential cost is increasing, that is we call as incremental cost. If the differential amount is decreasing, that is called decremental cost. Both are form part of differential cost. But if the cost is increasing, that is called incremental cost. If the cost is decreasing, we call as what? Decremental cost. Now, in terms of this is a concept called shutdown point. So many decisions will be taken in terms of shutdown point. Now, next point is key factor analysis or limiting factor. Key factor analysis or limiting factor. What marginal costing suggests that? What marginal costing suggests that? Sir, if the contribution is positive, if the contribution is positive, you can, the contribution is positive, you can produce and sell as much as you can sell. But there is some constraint in terms of resources. Now, for example, I am producing 3 products, A, B, and C. The contribution is like this: 100, 120, 150, 60, 70, 90. Now, what is my contribution? 40, 50, and 60. Normally, if I want to give suggestion under marginal costing, so if I'm having resources, you can produce and sell all the three products. So there is no, 1 minute. There is no restriction, because every product is giving positive contribution. Please go and sell. But now, for example, for all these three products, I need mission hours. I'm having only one mission, and to that, in a day, I can use only 100 mission hours. Now tell me whether this 100 mission hours I can use it for A, B, or C, because A need 100 hours, B need 100 hours, C 100 hours. If there is no resource constraint, I can produce A and sell A, produce B and sell B, produce C and sell C. There is no restriction, there is nothing like that. But whenever there is a limiting factor, or whenever there is a limits my production, I need to consider my decision making here. Now, in such a case, the decision is not based on contribution per unit. The decision is based on contribution per limiting factor. Now tell me, for example, each unit of A will take 2 hours. In case of B, it will take 4 hours. In case of C, it will take 5 hours. Now tell me, if 100 hours if I use it for A, now tell me how many units I can produce and sell. Each unit 2 hours means I can use 50 units of A. I'll get a contribution of 40. 50 into 40, how much amount? 2000. This is a contribution. In case of B, 100 divided by 4, that means I can produce and sell only 25 units. I'm getting a contribution of 50. 25 into 50, 1250. In case of C, 100 hours I can use it for producing C only. 100 divided by 20 units. Each unit I'm getting 60 rupees. How much amount? 1200. Now tell me, even the contribution per C is high per unit, but that is not fetching me big amount of profit. That is the reason whenever there is a limiting factor, my decision should be based on contribution per unit, but not contribution per, the decision should be based on contribution per limiting factor, but not based on contribution per unit. Now what is how to calculate contribution per limiting factor? Contribution per unit divided by number of hours required. 40 divided by 2, how much amount? 20. 50 divided by 4, how much amount? 12.5. 60 divided by 5, how much amount? 12. Now, if I give ranking 1, 2, and 3, that means first, to the extent possible of demand, first I should produce and sell A. If A demand is completed, for example, I can sell A only 30 units, whereas I have a capacity to produce and sell 50 units, but my demand is only 30. So what I will do, I will produce and sell only 30. That means out of 100 mission hours, 30 I will use it for A. So 30 into 2 hours, 60 hours is gone. What is balance? 40. Now next alternative ranking, I should give it for what? B. That means, so remaining 40 hours, I'll use it for B and sell it off. The second ranking is based on C, I'll use it for C. That means whenever there is a limiting factor, your decision should be based on contribution per limiting factor. Maybe it can be an hours, it can be labor hours or mission hours, etc. Now, if I go by that ranking only, I can maximize my total contribution. So this is the important topic in terms of key factor analysis. So examples of key factor analysis: shortage of raw material, shortage of labor, shortage of plant capacity, so sometimes demand unavailability, and cash unavailability. So all these things will take a decision making for key factor analysis. Okay. Now, the next point is difference between absorption costing and marginal costing. I already discussed at the beginning. Now, what is the major difference between absorption costing and marginal costing is the treatment of fixed factory overheads. Under marginal costing, this is a period cost. So not considered for inventory valuation. Under absorption costing, this is product cost and consider for inventory valuation. So difference of profit between absorption costing and marginal costing is also because of the treatment of fixed factory overheads. Now tell me, fixed factory overheads is what amount? Period cost under marginal costing, whereas it is a product cost under absorption costing. So period costs are not considered for inventory valuation. Only the product costs are considered for inventory valuation. So this is the topics in terms of marginal costing. So we have decided what is marginal cost and profit statement and marginal costing, BEP, margin of safety, and we have discussed BEP in case of multiple products and case of shelf life, key factor, angle of incidence, key factor analysis, relevant and irrelevant costs in decision making. So those costs are relevant for decision making. Those we call as relevant costs, like opportunity cost. Okay. Now replacement cost, etc. Irrelevant costs in decision making is that there are some costs which are irrelevant for decision making, like your sunk cost, which are already incurred. So those are irrelevant for decision making. So relevant costs and irrelevant costs in decision making. So this is one important topic even in CA final, relevant cost and irrelevant cost. So to be termed as relevant cost, it should have characteristics of future cost, and it differs under different conditions. Now, for example, I'll explain few costs, like historical cost is irrelevant for decision because these are all incurred in the past. Sunk cost is irrelevant for decision making. Committed cost, that means already incurred, already decided to incur, so that will not get deferred in the future. So that is irrelevant cost. Opportunity cost, yes, now I'm doing job, I can go for practice, or now I'm doing practice, I want to go for job, so your cost get changed. So opportunity cost is relevant cost for decision making. Notional cost or imputed cost, both are of opportunity cost, that is also relevant for decision making. Shutdown cost is what a relevant cost, because we're going to take a decision making. If the shutdown happens, there are some costs which can be avoided, like avoidable fixed costs. So those we call as what a relevant cost. Okay. So this is one of the important point. And then in terms of our material, distinction between absorption costing and marginal costing. So I'll also explain with in terms of a question. So that's it. Now let me move to the questions so that I'll explain few questions which are important in terms of marginal costing. Now come to the question number 3. PQR Limited has furnished the following data for 2 years. Sales for 2015, 8 lakhs. 2016 information is not given. Sales is missing. PV ratio in 2015 is 50%, whereas PV ratio in 2016 is 37.5%. Margin of safety sales as a percentage of total sales, 40%. And in terms of 2016 it is 21.875%. There has been a substantial savings in the fixed cost in the year 2016 due to restructuring process. The company could maintain its sales quantity level in 2015 and 2016 by reducing the selling price. Now see here, whatever the units you have produced in 2015, it is still remaining 2016. That means whatever the variable costs incurred in 2015, the same variable costs you have incurred in 2016. The reason is that sales quantity level is same. You have reduced only selling price. That means variable cost remains same, correct? That means whatever is the variable cost in 2015, the same variable cost in 2016. Now sales is 8 lakhs. Contribution is 50%, correct? Now, if the contribution is 50% means, so what is the contribution number? Sales into PV ratio, you'll get contribution 4 lakhs. So 4 lakhs. Now, what is the variable cost here? 4 lakhs. Now, see here, and PV ratio into margin of safety sales, what you're going to get a profit ratio. So 50 into 40%. So profit would be how much amount? 20%. Yeah, 37.5% into 21.875%. You'll be getting 8.208%. Now you'll be getting profit here. Now, you know that the PV ratio in 2016, how much amount? 37.5%. Variable cost remains 4 lakhs. Then you can arrive, if it is 37.5, this would be how much amount? 62.5%. So 100% would be the sales. So how much amount you'll be getting? You are getting 6,40,000. So you're getting how much amount? 2,40,000. You know profit figure. So sales into profit figure, you'll get the profit. So the balance would be what amount? Fixed cost. So sales for 2016, fixed cost for 2016, break-even sales. Break-even sales is what? Fixed cost divided by PV ratio. So you will arrive fixed cost, you can divide by PV ratio. The important point here is that PV ratio into margin of safety sales, you'll get the profit ratio, profit as a percentage of sales, because whatever the contribution on margin of safety is only profit. So that logic we are applied here. And second important point is that they have maintained same quantity of sales. They have reduced only selling price. That means variable cost remains the same. So there would be no change in the variable cost. So that variable cost remains same. So based on that, we have worked out sales number, fixed cost, and BEP. So this is a one important topic question in terms of question number 3. Problem number 8, you are given the following data. Sales is given for 2 years, profit is given. So how will you work out PV ratio? Change in profit divided by change in sales. You'll get the PV ratio. Break even point. So for 1 year, you know sales, you know PV ratio. Sales into PV ratio, how much you'll get a contribution. Contribution minus profit is nothing but then fixed cost, because contribution is equal to fixed cost plus profit. So your fixed cost is equal to contribution minus profit. Profit when sales are 1,80,000. 1,80,000 into PV ratio less fixed cost, because fixed cost is same under both the years. Sales required to earn a profit of 12,000. What is the formula for sales required to earn a profit? Fixed cost plus desired profit divided by PV ratio. Margin of safety in 2016, 2 ways. Margin of safety sales you can work out in 2 ways. Now, for example, you know what is our fixed cost in 2016? You know PV ratio. Fixed cost divided by PV ratio, you'll get what break-even sales. From the total sales, if you reduce break-even sales, you'll be arriving the margin of safety sales. That is a one way. Second one is profit divided by PV ratio, you'll get the margin of safety sales. Either way, you can work out. Okay. So this question is also simple. So unknown limited manufacture and sales its product R9. The following figures have been collected from cost records of last year for the product R9. So direct material, direct labor, factory overheads, general administration overhead, selling and distribution overheads are given. So, and the fixed cost is given. Now that means cost of goods sold. Last year, 5,000 units were sold at 185. From the given data, find out the break-even sales, profit earned during the last year, margin of safety, profit if the sales were 10% less than the actual sales. Now you see a total cost of variable part and fixed part is given, correct? Now, so in terms of this, so now you know cost of sales is equal to cost of goods sold plus variable selling and distribution plus fixed selling and distribution. Now cost of goods sold, how will you arrive the cost of goods sold? How much amount they are given? Now, for example, 5,000 units into 185 is our sales, which is 9,25,000. Direct materials, how much they are given? 30% of cost of goods sold. Now, cost of goods sold is equal to direct material plus direct labor plus variable factory overheads plus fixed factory overheads plus variable admin overheads plus fixed admin overheads. Now, if I consider direct material is what 0.3 percentage of COGS. Direct labor is how much amount 0.15 of COGS. Variable factory overheads is 0.1 of COGS. Fixed factory overheads how much amount 2,30,000. Where admin overheads is 0.02 of COGS plus 71,000. Now COGS is equal to 3,10,000 plus what are all these COGS if I add 0.45, 0.55, 0.57 COGS. So one COGS minus 0.5700 COGS would be 0.43 COGS is equal to 3,10,000. So COGS would be 7 lakhs amount. Correct? Now consider this 7 lakhs amount into this formula. Cost of sales is equal to COGS of 7 lakhs plus what is the variable selling and distribution overheads is given a 0.04 of cost of sales. Fixed is how much amount 68,000. So cost of sales is equal to 7 lakhs plus 0.04 of COS plus 68,000. So you'll get 0.96 cost of sales is equal to 7,68,000. So cost of sales would be how much amount 8 lakhs. Now you can work out simply by using that one. So now you can know what is the material part, labor part, because if the cost of goods sold, you should work out based on 7 lakhs into 30%. Now, if it is a cost of sales, 8 lakhs into 4%. So your total cost of sales would be 8 lakhs. Now, what is our sales value of 5,000 into 185? 5,000 into 185 means how much amount? 9,25,000. 9,25,000 minus cost of sales, how much amount? 8 lakhs. Your profit would be 1,25,000. Now, your fixed part, you know, variable part, you know, sales minus variable part will get the contribution. From contribution, find out the PV ratio. Break-even sales is equal to fixed cost divided by PV ratio. Profit earned during the year 1,25,000. Margin of safety, two ways, profit divided by PV ratio. Profit if the sales were 10% less than actual sales. If the sales are reduced, then only your variable cost will get changed, but not the fixed cost. That is a point I want to explain in this question. Okay, right. Problem number 17, you can work out. It's a simple question. So now let us come to problem number 20. XYZ Limited has a production capacity of 2 lakhs units per year. Normal capacity utilization is reckoned as 90%. Sir, while calculating fixed factory rates, you should consider the normal capacity. Standard variable production costs are 11 rupees per unit. The fixed costs are how much amount? 3,60,000 per year. Variable selling costs are rupees 3 per unit and the fixed selling costs are 2,70,000 per year. The unit selling price is 20. In the year just ended 30th June 2016, the production was 1,60,000 units and sales were 1,50,000 units. The closing inventory on 30th June was 20,000 units. The actual variable production costs for the year were 35,000 higher than the standard. Calculate the profit for the year under absorption costing method and marginal costing method. The difference, I already said, it should be an account of fixed factory overheads. Now, let me take you to the solution here. From solution, I'll try to explain. Now, see here. Now, what is your sales amount? 1,50,000 into, and the sales, if you see the selling price is 20 rupees, right? So I am working under absorption costing, then I'll be working at the marginal costing later. Now, production cost, sir, what they said, sales is 1,50,000, closing stock is 20,000. Then opening stock would be how much amount? 10,000, right? So that is how you need to work out, because they said closing stock is 20,000 and you have produced only 1,60,000, but sales is 1,50,000. That means opening stock is 10,000. Now tell me, under absorption costing, stocks are valued at which rate? Stocks are valued at the product cost. Product cost includes both variable and fixed part. That is very important. Under absorption costing, product cost includes both variable factory overheads and fixed factory overheads. 10,000, if you see, what is the variable production cost last year? 11, because opening stock valuation is from the last year production cost, right? Variable part is 11. And if I see the fixed part, the fixed cost last year, how much amount? 3,60,000. Normal capacity is 2 lakhs into 90%. How much amount? 1,80,000. So how much you'll get? 2 rupees. So 11 plus 2, how much amount? 13 rupees into 10,000, 1,30,000. Now add production cost current year. So what did they say? Sir, actual variable production cost were 35,000 higher than the standard. Now tell me, under absorption costing, your inventory cost includes both variable factory overheads and fixed one, right? Variable production cost and fixed production cost. Now 1,60,000 I have manufactured. 11 rupees is variable part, 2 rupees is fixed part, 13 rupees. For that, 35,000 is higher. So 21,15,000. Now what is the closing stock, sir? So closing stock is from the current year production, right? 21,15,000 is incurred for 1,60,000. What is the closing stock amount? 20,000 rupees. So your cost of goods sold is 30 lakhs, 19,80,625. From this, I need to reduce only the selling and distribution overheads, whether it is variable and or fixed. Variable selling cost, how much it is? They said 3 rupees per unit. How many units I have sold? 1,50,000. 1,50,000 into 3, how much amount? 4,50,000. So 1,50,000 into 3, 4,50,000. Fixed selling cost 2,70,000 per year. So that is remains same. So cost of sales is 27 lakhs. Under absorbed overheads, because in terms of absorption costing only, if you remember the standard costing, unabsorbed fixed, unabsorbed overheads. Now the unabsorbed overheads treatment is 3 types. You can take it to P&L in the same year, you can carry forward for the next year, or you can adjust among cost of sales, cost of goods sold, and cost of production. Now I'm taking into P&L here. Now see here, now your normal capacity is how much amount? 1,80,000, because you are recovering based on 1,80,000 units, whereas you have produced only 1,60,000. So under absorption, budget is 1,80,000. Budget is how many units? 1,80,000 units. Actual output is only 1,60,000. You'll get a volume variance, right? That is a disposition of variances. Now for this 20,000 units, how much is under absorbed overheads? 40,000. So that amount of cost under absorption is, it is addition to cost. So your profit will get reduced by 2 lakh. Total profit is 2,59,375. So because, sir, whether this under absorption, over absorption will be there in the marginal costing, sir? No. The reason is that under marginal costing, the fixed production overheads are not considered for inventory valuation. That means there is no recovery of concept here. That means only under absorption costing only you will have this under absorption or over absorbed overheads. Okay. Now this is under which costing system? Absorption costing. How much amount? 2,59,375. Now let me move to marginal costing. Now in terms of marginal costing, sales under both the methods remains what? Same, 30 lakhs. Opening stock, because under marginal costing your inventory is valued at only the product cost. The product cost under marginal costing is only variable production cost. Fixed production costs are not considered. Only variable production costs are considered for inventory valuation. What is the amount? 11. Production cost 1,60,000 into 11 plus extra cost of 35,000 and closing stock 17,95,000 for 1,60,000 and into 20,000. You'll be getting the contribution manufacturing. From contribution manufacturing, if I reduce variable selling cost, what is the variable selling cost? 2 rupees per 3 rupees per unit. So 1,50,000 into 3, how much amount? 4,50,000. So you'll be arriving at contribution net. 1 unit reduce here. Now from that, I'll reduce the total fixed cost, whether it is a fixed production cost or fixed non-production cost, because any fixed cost is period cost under marginal costing. So 3,60,000 and 2,70,000, you are getting a profit of how much amount? 2,39,375. Now see carefully, what is the difference of profit under both the methods? What is the profit here? 2,59,375. What is the profit here? 2,39,375. Tell me what is the reasons for this, sir? Only because of considering fixed factory overheads in inventory valuation. Now, if you see here, I'll write down here. What is the inventory opening stock value under absorption costing? 1,30,000. And what is the opening stock under marginal costing? 1,30,000. This is 1,30,000. Marginal cost is 1,10,000. Okay. This is opening stock. Closing stock valuation under absorption costing. How much amount of closing stock? 2,64,375. Under marginal costing, 2,24,375. If you see here, the marginal cost, the inventory valuation under absorption costing is more, because when you include more amount of cost in inventory valuation, that means inventory is more valued. Now, if I see, I have one example earlier somewhere about when I'm doing articles, I have a client where we are doing audit. He asked me to include interest cost under inventory valuation because he wanted to raise the inventory, which is not correct. Now, under absorption costing, when the fixed production costs are included, your inventory valuation is higher, even in terms of opening stock and closing stock. Now, see here, the difference of these two, what is the difference in opening stock? 20,000. What is the difference in closing stock? 40,000. Now, see here, when it comes to absorption costing, if you take as a base 2,59,375, see here, the profit is higher because closing stock is more in term. Closing stock is higher, which is 40,000. Opening stock, how much amount? 20,000. Now, in 2,59,000, you have included 40,000, 20,000. Because of inclusion of 40,000, your profit is increased. So reduce 40,000, add 20,000. You'll get 2,39,375. Or you can do in similar way. So 2,39,375. So your inventory got undervaluation in terms of closing stock, because more is the closing stock, more is the profit. Because opening stock will reduce the profit, closing stock will increase the profit. Under marginal costing, your inventory is valued at lower cost by 40,000. Now you need to include to get the absorption cost. It's a reconciliation between absorption costing and margin costing. So if you see here, so 2,59,000 add difference in opening stock, less difference in closing stock, you'll arrive at the profit at marginal costing. Or if you're deriving profit from profit as per absorption costing 2,59,375, you reduce the difference in stock, you'll arrive at the profit at marginal costing. I can also say another way of working is that what is your closing stock, opening stock difference of inventory? 10,000 units. For 10,000 units, for 10,000 units, 2 rupees of fixed production cost is included in inventory valuation under absorption costing, not included under marginal costing. So 10,000 into how much amount? 20,000. So 20,000 profit is higher in absorption costing. 20,000 profit is lesser or lower in terms of marginal costing. That 20,000 is only the difference of profit under marginal costing and absorption costing. Understood? So while calculating profit under absorption costing and marginal costing, in terms of absorption costing, please include in opening stock and closing stock the fixed production cost, and also give the effect of under absorption or over absorption under absorption costing. Whereas under marginal costing, so don't include fixed production cost. Your inventory is valid only at the variable production cost, and you will not have any effect of absorption, under absorption or over absorption. Okay. So this is how you need to work out the profit as per absorption costing and profit as per marginal costing. Now, practice problem number 3. Simple. PQ limited is a following. I don't know why I have given. So capacity is 2 are different. Production overhead 1 and production overhead 2. So you need to calculate at 100% capacity. The selling price reduced by direct material and labor is 8 rupees per unit. That means your contribution, what would be its break-even point? So you calculate at 100% the production overhead of 1 and production overhead of 2. Then if you work out by contribution per unit, you'll be arriving at the break-even point. Okay. Now, in case of practice problem number 12, here the sales mix in value is given. When the sales mix in value is given, you need to calculate the PV ratios multiplied by this sales mix. You'll get the composite PV ratio. Fixed cost divided by composite PV ratio, you'll get the break-even sales in value. That value multiplied by respective value will get the break-even sales. Now let us assume that your fixed cost is, if it is a quantity is different, if it is a value. Okay, fixed cost divided by composite PV ratio, 33.33 into variable cost as a percentage of selling price is given. So if variable cost ratio is given, variable cost is 60, what is the PV ratio? 40%, B 32%, C 20%, D 60%. When variable cost ratio is given, 1 minus variable cost ratio would be the PV ratio, correct? Now you multiply this 33.33 into 40%, 41.67, 16.67 and 8.33. So you'll get composite PV ratio, fixed cost divided by PV ratio, you'll get the break-even sales. That break-even sales you multiply, if you want to calculate break-even sales for A, it is that amount into 33.3%, that amount into 41.67% for B, that amount into 16.67 for C, that amount into 8.33%, which is of D. If the quantity is given, you should multiply the sales quantity mix with the respective contribution. You'll get the average contribution per unit. Fixed cost divided by average contribution per unit, you'll get the total BEP units. That BEP units quantity should multiply with the respective quantity mix to get the BEP of the respective unit. And if you want to get the sales, respected BEP units into selling price, you'll get the respective BEP sales. Okay. Now, illustration number 16, which is about decision making, right? X Limited supplies spare parts to an aircraft company Y Limited. The production capacity of X Limited facilitates production of any one spare part for a particular period of time. The following are the costs and other information for production of the different spare parts of A and B. Part A per unit, part B. LI usage 1.6 kgs, part B 1.6 kgs. Mission time for mission P is required to produce part A for 0.6 hours, part B 0.25 hours. Mission time, mission Q 0.5 hours and 0.55 hours. Target price is 145 and part B target price is 115. Total hours available, mission P 4000, mission Q 4500 hours. Alloy available 13,000 kgs at 12.5 per kg. Variable overheads for mission hours, mission P 80 rupees, mission Q 100 rupees. Identify the spare part which will optimize the contribution at the offered price. That is the first point, correct? Now, see here. Now, mission P 4,000 hours are available. Mission Q 4,500 hours are available. Now, only one part can be produced at one time, right? If this 4,000 hours of mission P is given for part A, how many units I can produce? Sir, 4,000 divided by mission P, how many units it take? 0.6 hours. So 4,000 divided by 0.6, 6,666 units. Part B, 0.25 hours is required. So 4,000 divided by 0.25, 16,000 units you can produce by using mission P. Mission Q, because every part you need mission P and mission Q, and alloy also is required, correct? Now mission Q with 4,500 hours, if I use it for part A, 4,500 divided by 0.5 hours, 9,000. Next one, 4,000 mission Q, 4,500 divided by, what is mission Q in terms 0.55? So 8,181. Alloy, if 13,000 kgs, if I use it for A, 13,000 divided by 0.16, sorry, 1.6, 1.6, 8,125. Now tell me, to produce part A, mission P support is required, mission Q support is required, alloy support is required. Now, even though I can produce 9,000, but mission P is not suitable, not available, that means mission P, I cannot produce 9,000 units of part A with mission P. So it is the least of the three. So maximum I can produce how much amount? 6,666 units of part A, 8,125 units of part B. You are understanding why you are getting like this? The reason is that even though one factor is abundant, there is another factor which is limiting my production. So always it is the lowest of the three which I can produce, correct? Now I'll work out the marginal costing. So I know that 6,666 units of part A or 8,000 units of 8,125 units of part B can be produced. I'll work out the profit because material cost 1.6 into what is the rate amount? 12.5. Variable at mission P. So your cost is 80 rupees and 0.6 hours, right? So 48 rupees per unit and 100 into 0.2, 0. Mission P cost is 80 into 0.25, 20. When it comes to mission Q, what is the cost of each hour of mission Q? 100. How many hours is required for A? 0.5. So 100 into 0.5, 50. 100 into 0.5, 55. And so you are getting 118 and 95. So price offered is 145 and 115. You'll get contribution per unit. Total contribution, you need to check it out. Tell me which is more beneficial, producing part A, because you can produce either part A or part B. If either of the units can be produced, then you need to use the limiting factor, then you need to calculate. But here the question says that you can produce either part A or part B. So that is the reason least of the three is selected. For that, we are calculated the profit, and wherever the profit is higher, that is we have considered. Second point, what did they say about second point? If Y Limited reduce the target price by 10% and offer 60 per hour of unutilized mission hour, calculate the total contribution from the spare part identified above. Now then tell me, so part A can produce 6,666 units. How many mission hours of A you use? For 6,666 total P, I'll use it 4,000. Q I need only 0.5 hours, right? So 6,666 into 0.5, 3,333. So how many unutilized hours are available for mission Q? So 4,500 minus 3,333. How much amount? 1,167. For that, you are getting a compensation, which is 1,161 into 60 rupees. How much amount? 70,000. But you are losing a contribution. Your reduction in price by 10%, causing fall in contribution of 14.5, because they wanted to raise the target price by 10%. So instead of 145, they'll offer only 90% of 145. So 145 into 10%, 14.5 into 6,666 units. How much amount? 96,657. Now, what is the contribution? Original contribution is 1,79,992. Extra, you are getting 70,020, but you are losing a profit of contribution of 96,657. Now, what is the contribution you are getting? 1,53,345. In such a case, it is better you manufacture part B. Understood? In the second case, because you are getting a profit of only 1,53,000, go with part A. So what did they say? Sir, original 1,79,982. For that, they wanted to give some compensation for unutilized hours, which is 1,167. You are getting, how you are getting 1,167. Total mission hours of Q, you are having 4,500. To produce part A of 6,666. Can we produce more than 6,666? No. The reason is that mission P is not supporting it. So this 1,167, I need to pay how much amount? 60 rupees. So add 70,020. But they wanted to reduce on the 6,667 units into 14.5. They want to reduce the price, which is 96,650. So net effect is how much amount? 1,53,345. Whereas part B, if I produce, even though you are giving compensation, you are losing in terms of sales value. Part A is not correct. You can go with the part B. So this is the question in terms of study material. So please understand that. So marginal costing, there is an unlimited number of questions they can give it. But if you are very confident about the each topic, like if you are able to understand differential cost, if you can understand cost in difference point, if you can understand shutdown point and break even sales, margin of safety, total sales, and difference between absorption costing and marginal costing and decision making, I'm assuring that you'll get 10 marks in terms of this topic. And in terms of theory part, if I'm missing, I'll just checking out. So the total overview is about, let me share our material here. Having page number 42. I say is well designed the theory part. So marginal costing, yes. Meaning of marginal cost and marginal costing. Characteristics of marginal costing, CVP analysis and short-term decision making. In CVP analysis, break-even analysis, margin of safety, angle of incidence, and contribution ratio. What are the characteristics of marginal costing? All elements of cost are classified into fixed and variable. Even in the semi-variable cost, they'll be bifurcating into variable part and fixed part. The marginal variable cost are treated as cost of product because those are of only direct material, direct labor, and variable factors are considered as product cost. Under marginal costing, value of finished goods and work in progress is also comprised of only marginal cost, because we will not consider any fixed part, whether it is productive or non-productive, will not consider for inventory valuation. Logic is there in CA final, so you'll have because standard costing and variance analysis you need to do under absorption costing, marginal costing. Yes. Fixed costs are treated as period costs and charged to profit and loss account for the period they are incurred. Prices are determined with respect to marginal cost and contribution margin. Profitability of all departments and product is determined with reference to their contribution margin. Many times question asked if it is a PV ratio, it should be profit by sales into 100. But under marginal costing, it is contribution divided by sales into 100. Meaning of terms, computation of this also we have worked out. Advantage of marginal costing, short, because if you remember in CA final, the chapter name is decision making. We'll be using the marginal costing for decision making. Short-term profit planning, simplified pricing policy. You record all the overheads. It shows the realistic profit, how much to produce. Now in this question of P and Q understood. More control or expenditure helps in decision making. CVP analysis, yes. Profit PV ratio, we have discussed. Break-even chart, cash break-even point, multi-product break-even incidence. Various formulas. These all formulas we have discussed, correct? So profitability in case of limiting factor, it is a contribution divided by key factor. Okay. So in such a case, you will not take decision based on contribution per unit, but you will take a decision based on contribution per limiting factor. Okay. So this is all about marginal costing. Please go through our material. This is only a LMR part. So our marathon session. So you'll be, if you are required more, just you need to go through our regular material. Okay. Thank you. We'll meet in the next session. Next chapter. Come on, students. Earlier chapter we have discussed about marginal costing. Now we are moving into standard costing and variance analysis. I am expecting at least 10 marks from this chapter. I'm expecting 10 marks from the standard costing and variance analysis. So what are we going to learn in this chapter? Okay, 1 minute. Standard cost is a what is meaning of standard cost? Standard cost is a predetermined cost. Standard cost is a predetermined cost. Right. Predetermined cost, which determines that what each product or service should cost under given circumstances. Now, in terms of our chapter, standard costing and variance analysis, we are discussing about variance analysis in paper 3. That is with respect to CA Inter syllabus. Now, sir, why we are supposed to work out variance analysis? Every organization will prepare budget at the beginning of the period. Budget at the beginning of the period. Budget consists of what? What is my budget income or budget revenue less expenses with respect to direct material, direct labor, direct expenses, variable overhead, and fixed overhead. These are my major elements of cost. At the end of the period, you will be having actual numbers. What is actual revenue? In terms of actual expenses, what is my direct material cost, direct labor cost, direct expenses, variable overhead, and fixed overhead? So we'll be arriving what is my actual profit. So you'll be having budget profit and you'll be having actual profit. Understanding the reasons between budget profit and actual profit is nothing but then variance analysis. Sir, for example, what are the elements of variance, sir? It may be because of revenue, that is sales. It may be related to material, it may be related to labor, it may be related to expense, it may be related to variable overheads, it may be related to fixed overhead. If it is related to material, that is we call as material cost variance. If it is related to labor cost variance, variable overhead cost variance, fixed overhead cost variance. So our CA incher, we are restricting ourselves to material cost variance, labor cost variance, variable overhead cost variance, and fixed overhead cost variance. Okay. Now, so total cost variance, see here, total cost variance. This is what we are briefly were learning in this total syllabus of this chapter. Total cost variance, material cost variance, labor cost variance, overhead cost variance. This time overhead cost variance includes both variable overhead and fixed overhead cost variance. Now, in terms of material cost variance is subdivided into material usage variance or quantity variance. Second one is price variance. If in case of more than one raw material being consumed, not purchased, one raw material being consumed, this usage variance is subdivided into yield variance and mix variance. So if there is no, if more than one material is not used, then you will be restricting yourself to usage variance and price variance under material cost variance. Now, in terms of labor, you will be having efficiency and rate variance. Efficiency, if more than one type of labor is being used, like skilled, semi-skilled, unskilled, you will be having sub-efficiency variance, or you can also call as yield variance, mix variance, or gang variance in terms of labor. In the examination, if they ask you to calculate gang variance, means mix variance only. If they ask you sub-efficiency, or it both remains same. Now, in terms of rate variance, so rate variance is simple. So rate variance, we are restricting ourselves to labor rate variance. In case of idle time, this efficiency would become net efficiency. Idle time we need to calculate separately, which is actual hours productive minus actual hours paid into standard rate. So always idle time is adverse, because idle time will not give profit to the organization. Now let us come how to calculate, we'll discuss later. Overhead cost variance I'm giving here is bifurcated into two categories: variable overhead cost variance and fixed overhead cost variance. Variable overhead cost variance is subdivided into efficiency variance and expenditure variance. In terms of fixed overhead cost variance, it is subdivided into volume variance and expenditure variance. In terms of volume variance, it is bifurcated into first calendar effect, capacity, and efficiency. There could be idle time even in terms of fixed overhead cost variance. So this is briefly what we are going to learn in terms of variance analysis. Now, three important points which you always supposed to remember while calculating the variance analysis. Three important points. First important point, standards should be incomparable with actuals. What does this mean, sir? In the question, if they're given standard data for one quantity and actual data for 10 quantity, standard should be considered for 10 quantity. So you cannot compare one quantity with 10 quantity. Standard data should be changed to the extent of actual output quantity. That means for one quantity, if you are using 10 units, for 10 quantity, standard should be how much amount? 100 units. that you can compare with the actuals. It could be 110 or 110 or 120 or 90. Okay. So this is the first important point. This all we have discussed in terms of our classroom material. Okay. 1 minute. Now, second point is that while calculating price variance or rate variance, actual quantity or actual hours should be considered. Because when you're going to the market, you will procure only for actual quantity or you'll be paid only for actual hours. Third one, while calculating quantity variance or usage variance, standard rate or standard price should be considered. If you are my student who have listened to the basics of standard costing, you will understand the three important logics. Okay. So this is the first part in terms of standard costing and three important topics which you need to understand. Okay. Right. 1 minute. Now, this is what up to this one. Now, let me come to material cost variance. Material cost variance. So I'll discuss material cost variance, labor cost variance, and variable overhead cost variance at a stretch, and I'll go to the problems of those three respective variances. Then I'll discuss the fixed overhead cost variance separately. Now, in terms of material cost variance, any cost variance, which is material cost variance or labor cost variance or variable overhead cost variance, it is the standard material cost for actual output less actual material cost for actual output. If it is a labor, if it is a material cost variance, if it is a labor cost variance, standard labor cost for actual output less actual labor cost for actual. Standard should always be compared with your actual output. Third one, variable overhead cost variance. Simple. Standard variable overhead cost for actual output less actual variable cost for actual output. This is common. Now, in terms of standard material cost for actual output means standard quantity into standard price. Actual material cost is actual quantity into actual price. Whenever in the question, sir, you can do formula wise or you can do tabular wise. So all our classes are based on formula, not concept wise. Sometimes we use the table also. Whenever you use a word like SQ, SP, AQ or SP, you should write down in the down what is meant by SQ, what is meant by SP, what is meant by AQ, what is meant by AP, or what is RSQ, everything, etc. It is very important in terms of examination. In his labor cost variance, stand hours into standard rate minus actual hours into actual rate. In terms of variable overheads also, stand hours into standard rate minus actual hours into actual rate. So these three will remain the same. Now, let me come to material cost variance. Fixed overhead, I'll come later. Now, in terms of material cost variance, I'll put all the three at a stage so that you'll understand variable overhead cost variance. In terms of material cost variance is what standard quantity into standard price minus actual quantity into actual price. Material cost variance is subdivided into usage variance or quantity variance and price variance. Quantity is what difference between two quantities, standard quantity minus actual quantity into standard price. Price variance, standard price minus actual price into actual quantity. This is the three principles we have learned, right? In our regular session, we have discussed with a wood example, right? Or table example. Now, in terms of labor cost variance, also stand hours into standard rate minus actual hours into actual rate. Instead of price, I'm using rate. Instead of quantity, I'm using hours. Labor cost variance is subdivided into efficiency variance and rate variance. Efficiency is what? Difference between stand hours minus actual hours into standard rate. Rate variance is what? standard rate minus actual rate into actual hours. This is what is I'm discussing in the three important principles. In terms of variable overhead cost variance, it is subdivided into efficiency variance and expenditure variance. Efficiency what? Standard hours minus actual hours into standard rate. Expenditure variance is what? Standard rate minus actual rate into actual hours. Okay, I'll put H here. So three important principles. That is what I'm discussing. In terms of usage variance, standard price; efficiency variance, standard rate; efficiency variance, standard rate. In terms of price variance, difference between two prices multiplied by actual quantity, actual hours, and actual hours. Okay. Now this variable overhead cost variance is completed. Now, in terms of material cost variance, if more than one raw material is being used, this usage variance is subdivided into yield variance and mix variance. If there is only more than one type of raw material, being consumed, what is important is consumed, not purchased. Okay. Yield variance, why yield variance will come into picture is that when the input output relationship is not maintained, you'll be getting the yield variance. Why mix variance? Now, when you calculate yield variance, you will move from standard quantity to actual quantity. Whether actual quantity is being consumed in standard mix or actual mix, that is calculated in terms of mix variance. Okay. Now, how you are calculating, sir? See here. Now, similarly, I'll explain here, then I'll go to. In terms of efficiency variance, if more than one type of labor is being used, you'll be having sub-efficiency or yield variance. And second one is mix variance or gang variance. Whatever the logic of this yield and mix remains the same even in terms of labor. Here we are using raw material. Here we are using more than one type of labor. Now, how will you calculate yield variance and mix variance? Two ways, sir. One is, now what we are supposed to do is that first one is standard quantity into standard price. We need to calculate revised standard quantity into standard price. Third one, actual quantity into standard price, actual quantity into actual price. Important point is revised standard quantity. What is revised standard quantity? Revised quantity, actual quantity in standard mix. That means if my actual quantity, let us assume I'm using three types of raw material, 1, 2, 3. The ratio of 1, 2, 3 is 30%, 40%, 50, 30. Sorry, I'll put like this: 20%, 30%, and 50%. 20, 30, and 50. So the standard quantity is standard quantity in this ratio, 2:3:5. What is revised standard quantity? Actual quantity. If actual quantity is somewhere about 1000 units. So revised standard quantity means this actual quantity I should mix in 2:3:5. Then you will arrive the revised standard quantity. Now see here, for example, we'll discuss in the question also. So the difference between standard quantity and revised standard quantity is yield variance. So 1 and 2. 2 and 3 mix variance. Sir, here I am mixing actual quantity in standard mix 2:3:5. Whereas actual quantity mix would be different. Then only we'll be arriving the mix variance. Okay. Now last one is actual quantity, actual price. See here, 3 and 4 pertains to price variance because actual quantity remains same. Difference is standard price minus actual price. So this is 3 and 4. In terms of usage variance, it is 1 and 3. How, sir? Standard quantity, standard price is common. Standard quantity and actual quantity difference is because of usage. Material cost variance is 1 and 4. 1 and 4 is what? Standard quantity into standard price and actual quantity into actual price. Okay. Now, yield variance we can calculate separately. So I'll discuss in the, when it comes to the question, I'll explain the second way of calculating yield variance. Similar logic we are using for labor cost variance also. Instead of standard quantity, I'm using stand hours into standard rate, revised stand hours into standard. What is revised stand hours? Actual hours in standard mix. So actual quantity into, sorry. actual hours into standard rate and actual hours into actual rate. In the question, they may give you directly actual labor cost. Then you don't need to wait for what is actual hours and actual rate. You can write out directly what is the total amount here. So if I take 1, 2, 3, and 4, difference is 1 and 2 in terms of if yield variance, mix variance is 2 and 3, efficiency variance is 1 and 3, rate is 3 and 4, and cost variance is 1 and 4. When it comes to variable or cost variance, I'll have only 3: standard hours into standard rate, actual hours into standard rate, actual hours into actual rate. So difference between these two would be the efficiency variance. Difference between 2 and 3 would be the expenditure variance. Total cost variance would be 1 and 3. Sorry, 1 and 3. So this is about material cost variance, labor cost variance, and variable overhead cost variance. Right now, labor cost variance in terms of idle time. So idle time variance is simple. Idle time variance is a part of efficiency, right? Idle time variance is actual hours productive minus actual hours paid into standard rate. This is always adverse. How will you take whether it is adverse variance or favorable variance? Sir, because of this effect, if my profit increases, that is favorable. Because of this effect, if my profit get reduced, that is adverse. Now, for example, standard quantity of material cost is 1000 rupees, sir, but I have spent 1200. That means whether I spend more or less more. When I spend more, my profit what gets decreased. When profit got decreased, this is adverse variance. Now instead of 1000, I spent only 800. Because of this actual profit, actual profit get increased. Then it is a favorable variance. This is how we need to consider whether it is a favorable variance or unfavorable variance. Unfavorable variance, we also try to call it as adverse variance. So this is about material, labor, and variable overhead cost variance. Now, let me take you to the questions of these three. Okay. So one more point, before I go to solution, let me tell you that point also. Material purchase price variance. So this is important point, students, because nobody will touch on this. Purchase price variance is not part of material cost variance, but this is calculated between what is my standard price minus actual price into actual quantity purchased. Normal price variance will be using only actual quantity consumed. If they ask you separate purchase, for example, in the question they give you what is actual quantity purchased and actual quantity consumed, please don't get confused. While calculating material cost variance, you should use only actual quantity consumed. If they ask you separately the material purchase price variance only, you consider actual quantity purchased. Understood? So this is with respect to material purchase price variance. Okay. Now, if you take it to our materials, so in terms of question number 1 and question number 2 is about just understanding. Question number 3 is about important point about the loss, normal loss. If you see the question number 3, standard cost of chemical mixture is as follows: 40% of material A at 20 rupees, 60% material at B 30 rupees per kg. A standard loss of 10% of input is expected in production. This is very important. If they are given 10% of input or 10% of output. Now, how to calculate this? See here. New share. I want to. If they are given 10% of input, that means if my input is 100, 10% would be 10, 10% of 100, which is 100, 90 would be the output. If they give you 10% of output, that means if I assume 100 to be output, 10% of 100 means 10 rupees would be the loss. So input would be how much amount? 110. So these two important points to be considered here. Okay. Next one. The cost records for a period showed the following uses. 90 kgs of material A at cost of 18 rupees per kg, 110 kgs of material B at a cost of 34 rupees per kg. The quantity produced was 182 kgs of good product. That means your actual output is how much amount? 182 kgs. Now see here. Let me take to the solution also. Costing solutions. Yes, here it is. Now see here. What is my actual output amount? 182 kgs, right? So this all data is already given. What is because actual quantity of said that what is actual quantity consumed? Let me take to Marathon question. So actual quantity is 90 kgs of material A, 90 kgs of material, 110 kgs of material B. So actual price is given 18 and 34, and actual quantity into standard price is also given. How will you calculate revised standard quantity? Revised standard quantity means actual quantity in standard mix, right? Now, what is my actual quantity? Actual quantity is 200. What is the standard mix given? 40% of material A and 60% of material B. So 200 into 40%, how much amount? 80. 200 into 60%, how much? 120. You multiply with this. So this is how you need to calculate revised standard quantity. Okay. Now, see here. How will you, this is important point is how to calculate standard quantity. Standard quantity for which output? Standard quantity for actual output. Now, what my question says that if my 100 is input, 10 would be the loss and output would be how much amount? 90. Correct? Now, what is my actual output now? 182. Standard quantity for which output? Actual output. Now, based on this, what is my standard input? Which is equal to, sir, 182 divided by 90 into 100. How much will be arriving? Which is arriving 202.22. So this is how. And again, this 202.22 should be in which ratio? 40% and 60%. So 202.22 into 40%, 202.22 into 60%. So 202.22 kgs. Now, if difference between 1 and 2 is what, yield variance, 2 and 3 is what? Mix variance. 1 and 3 would be usage variance. 3 and 4 would be price variance. 1 and 4 would be cost variance. Now, how to calculate yield variance straight away? How to recheck, sir? This is what is important in my class actually. Now, what did I say about yield ratio? Input output ratio. Sir, for example, question says that if you give an input of 100, you should get an output of how much amount? 90. Correct? Now, now what is my actual output? 182 kgs. Now, for 182 kgs, how much should be input? 202.22. How much? 202.22. Now the 2.22 kgs, 2.22 kgs, what did you say? You should consume 202.22 kgs, but you have consumed only how many kgs? 200 kgs. So whether there would be quality deficiency, so that is all not required. In terms of input output relationship, how much input I should give, how much output I should get. If I give an input of 100, if I give an input of 100, I should get an output of how much amount? 90. Correct? Now see here. Now see here. That is what I'm checking here. So for example, for 100 kgs of input, what is output should be 90. What is your actual output? 182. What should be input? 202.22. But you have consumed only how many kgs? 200 kgs. So you have saved how many kgs? 2.22 kgs. The standard cost of this 2.22 kgs is nothing but than your material yield variance. Now that is only I'm showing in the solutions. See here. If you see here, now, so standard cost of the 2.2 kgs, how will you calculate, sir? 5,257.72 5257.72 divided by 202.22 into how many kgs, 2.22 kgs. You have saved less. That is the reason your yield variance should get the positive. Understood? So for 100 kgs of input, your output should be 90. What is your actual output? 182. How much you should consume? 202.22 kgs. But how much you have actually consumed? Only 200 kgs. That means you have saved the cost of 2.22 kgs. Tell me, this yield variance and mix variance is part of which variance? Usage variance. Under usage variance, which price I'm supposed to consider? Standard price. The cost of the 2.22 kgs is nothing but then material yield variance. Now, so that is how you have got how much amount of material yield variance, how much amount? 57.72, which is favorable. Understood? So this is how we need to calculate. Even if you go to question number 2, you can see here. So you should consume 1200 kgs, but you have consumed how many kgs? 1220. So 20 kgs extra. 20. So you do normal table. For rechecking, you do like this. Now 20 kgs extra you have consumed more. So how much should be yield variance? 12,500 divided by 1200 into 20 kgs. How much it should be, 12,500 divided by 1200 into 20, which is equal to material, sorry, 12,500 divided by 1200 into 20 kgs. How much it should be? Let me take calculator. So your amount would be Excel. So calculate how much would be 12,500 divided by 1200 into how much amount? 20 kgs extra, correct? So 208.33. So that should be your. Now tell me whether it is adverse or favorable. Adverse, because you have consumed more quantity. Now if I go to your yield variance answer also, you will get same 208.33 adverse. So this is how we need to calculate in terms of normal loss and how to recheck the material yield variance. This is about question number 3. Now, next one is about question number 4. Question number 4. In terms of question number 4, see here, this is a missing figure question which they ask you for 10 marks. Here, the company produces product X using raw materials A and B. The standard mix of A and B is 1:1, and the standard loss is 10% of input. In the examination, please check whether it is 10% of input or 10% of output. You are required to compute the missing figures indicated by question mark. Now standard price is given. So first what we need to do is that you should write down the total table. Okay. Now with respect to this, important point is that assuming actual input to be X. Now for example, I'll do this question. In terms of question number 4, right? This is about material cost variance. So standard quantity into standard price, actual quantity into standard price, actual quantity into revised standard quantity into standard price, actual quantity into standard price, and actual quantity into actual price. Okay, now how many types of raw material are there? A and B. First, you write down what is the information given. Standard price is given, right? 24 and 30, 24 and 30, 24 and 30. Actual price, they are not given. Actual input of B is given, which is 70, correct? Now, actual price of A is given, which is 30. Now, what the information they are given? They are given yield variance to be, which one? Material yield variance. Not for A and B, they are given in total 270 adverse. Now, what the other information they are given? If we check the question, material cost variance of A is 0. B is how much amount? Don't know. Total I know. How much total? 1300 adverse. Sir, if A is 0, total is 1300, B means would also be how much amount? 1300 adverse. So one important question mark answer you can get even 1 mark. Okay. Now here the important assumption is that assuming actual input be X. Now, okay, if actual input is X, A would be how much amount? X minus 70. So here also X minus 70, 70. And if you see the ratio, revised standard quantity means what? Actual quantity in standard mix. What is an actual quantity? X. What is the standard mix? If you see the standard mix, what did they say? 1:1 ratio. 1:1 means 0.5x, 0.5x. Okay. Now, based on that, we need to calculate yield. We need to calculate other missing figures. X figure we should find out. Standard quantities we should find out. Actual price of B should also be found out. Okay. Now, this is the first important point. And assuming actual input to be X is the first important point to be considered in the solution. Next one. Now, what did they say about material cost variance? Material cost variance. Look to the question. Material cost variance of A. Material cost variance of A is how much amount? 0. Material cost variance of B is how much amount? They are given question mark. Total cost variance how much amount? 1300 adverse. Correct? Now, see here. Based on the material cost variance of A and B, we'll try to find out here. Now, material cost variance of A is 0. What is material cost variance of A? Standard quantity into standard price minus actual quantity into standard price. Sir, I don't know what is. I'll put it as standard quantity of A only. Okay, which is 0. Standard quantity of A into what is standard price? They are given 24. What is actual quantity? They are given X minus 70 into 30. If I take this one to this side, 1 minute. Standard quantity of A into 24 is equal to X minus 70 into 30. Then what is this? Standard quantity of A is equal to 30 by 24. How much would be 30 by 24? It is 1.25 into X minus 70. That means if standard quantity of A is how much amount? 1.25 into X minus 70. A is to B ratio is what? 1:1. If A is 1.25 into X minus 70, B would also be how much amount? 1.25 into X minus 70. Now, based on these two, I know total yield variance. What is my total yield variance? 270 adverse. Now, based on that, I'll try to find out X value. So remaining all figures will come into picture. So I'll explain only to this extent here. Okay. Now, material yield variance is equal to 270 adverse, which is 270 adverse is equal to so these two I should add, I should reduce it from these two, right? So 1.25 into X minus 70 into 24, correct? Plus 1.25 into X minus 70 into 34 minus 0.5x into 24 plus 0.5x into 30 is equal to minus 270. Now, if you calculate here, you will get the X value, because if you take 1.25 into 30, so 30 into X minus 70 plus 34 into, what is the rate they are given? It is also 30, right? 24 and 30, correct? So 30 into 1.25 into X minus 70. So 37 point, how much would be 37.5x minus 30 into 70 into 1.25, which is 2625 minus 0.5x 24, which is 12x plus 15x. 12 plus 15, 27x is equal to minus 270. So you need to calculate X value, which is X value is somewhere about 110. If X value is found out, yes. Now if it is 110, 110 minus 70, how much? 40. 40 into 1.25, how much amount? 50. It should be also 50. 0.5x into 110, which is 55, 55. X minus 70 means 40, 70, 40, 70. By using material cost variance of B, which is 1300 $, you can find out what is actual price of B. Now, this is a question because the important point is assuming actual input to be X. Assuming actual input to be X, and by using yield variance, this is a logic. So because 1:1 ratio, if A is found out, B is also same. So by using that, you need to find out what is the standard quantity of A, standard quantity of B. If standard quantity of A is same, 1:1 ratio, B would also be the same. Based on that, you will work out material yield variance. So you'll work out X value. By using X value, you can work out all the numbers. Understood? So this is the important topic in terms of material cost variance. Next one. Next question. Next question, would like to discuss about the question number 6 in Marathon. Correct? So Marathon, if you go, it is 6th question. The important point is that, so this is also missing figure numbers. The following information related to the labor element of X Limited. Number of workers in standard gang, 4 members, semi-skilled 3, unskilled 2, total is 9. Ratio is what? 4:3:2. Standard rate per hour is 6, 3 and 1. Number of workers in actual gang is question mark, but total is 9. Mix is different. Actual rate per hour is 7, 2 and 2. In a 40-hour week, the gang produced 270 stand hours. This is only important point which I want to highlight here. So normally what we need is that stand hours for actual output. Correct? Or, sir, what did they say? They produce 270 stand hours means they produce an output which can be produced in 270 stand hours. That means both are same. That means 270 stand hours means stand hours for actual output only. That is the reason. Even in terms of fixed overhead, in terms of absorbed fixed overheads, actual output into standard recovery rate. If actual output is not given, stand hours for actual output into standard rate. So that means the gang produced 270 stand hours means the gang produced 270 standard labor hours. Actual number of semi-skilled workers is 2 times the actual number of unskilled workers. If you can find out 1, then you'll get semi-skilled. So skilled would be 9 minus semi-skilled minus unskilled. Okay. The rate variance is given. Rate variance means what? Price variance. Standard rate minus actual rate into actual hours is 160 favorable. So if you work out for semi-skilled, so if semi-skilled workers, if you are able to arrive, then you can arrive unskilled workers, because semi-skilled is 4, then unskilled will be 2. The balance would be what? Skilled labors. Okay, because the actual number of semi-skilled workers is 2 times the actual number of unskilled workers. Now what you need to work out, find the following number of workers in each category. Gang variance. What is gang variance? Same mix variance. Sub-efficiency means yield variance. Labor rate variance or price variance. Okay, want to check? So if you see here, new share, I'll put. If you go to the question number, remove all the drawings here. If you go to the question number, same question number 6 in our solution material, please take your solution material. So whatever is yellow means that we need to calculate here, right? 270 stand hours they are given. What is the ratio? 4:3:2. So you will work out stand hours. Standard rate is given. Revised stand hours means what? Actual hours in standard mix. What is actual hours? 40 hours, sir. 9 employees. 40 into 9, how much amount? 360. So 360 in which ratio? 4:3:2. And similarly, this cost is also given. Now, first you need to work out using the rate variance of semi-skilled workers. Rate variance is what? Difference between standard rate and actual rate. What is standard rate of semi-skilled amount? 3 rupees. Actual rate is how much amount? 2 rupees into, I don't know actual hours, but I know variance is 160. So what is the actual hours of semi-skilled? 160. If actual hours of semi-skilled is 160 means, what does this mean? Sir, semi-skilled workers, they worked for 160. Each employee worked for how many hours, sir? 40 hours in a week. That means how many employees would make it to 164 employees? 4 into 40. So 160 hours. That means 4 workers are semi-skilled. What did they say about unskilled, sir? Semi-skilled are twice the unskilled. That means 2 would be the unskilled. Total, how much amount? 9. 9 minus 4 minus 2, how much amount? Remaining 3 would be the skilled workers. Correct? So based on this information, so you know how many hours now? 3 skilled means 3 into 40, 120 hours. 4 semi-skill means 4 into 40, 160. Here also 80. The same actual hours you'll take it to here and you'll calculate here. So important point is that the gang produced 270 stand hours means stand hours for actual output. Second one is by using the rate variance, we calculate one type of employee. The same will be applicable both for labor. Sorry. So rate variance, by using the rate variance, we'll calculate the semi-skilled. If you arrive semi-skilled, you'll arrive the unskilled. The balance would be the skilled workers. Okay. So this is the point which we want to cover in the module session, marathon session. Now, next one. Before I go to fixed overhead, so variable overhead is simple. You can just same variance. If you see the variable overhead also, you get the same answer. Stand hours into standard rate. One important point, for example, in the question is, if they given ideal time and efficiency variance, if they have not said anything, please write assumption and consider it should be net efficiency. So ideal time is separate. Okay. So variable load expenditure variance is simple, sir. So variable load expenditure is standard rate minus actual rate into actual hours. Efficiency means standard hours minus actual hours into standard rate. So based on output is important. If it is based on output, the formula remains same. Standard variable overhead for actual output minus actual variable overhead. Now for actual output, what is the standard variable overhead? Now you need to calculate hourly rate. So if the hourly rate is given, then you need to consider here. In terms of variable overhead expenditure variance, sir, how to calculate the variable overhead expenditure variance and variable overhead efficiency variance if it is given based on output? Very important. Normally you consider based on hours. I'm explaining you in terms of output. Now, for example, in this question, if you see here, it's question number 8. You can refer to our material, question number 8. Expenditure variance. Sir, you have worked for 1,05,000 hours. In 1,05,000 hours, how much standard output you can produce? Sir, in 1,05,000, each unit, I think 10 hours. Which 1,05,000 hours, you should produce 10,500. So for 10,500, how much cost should be incurred? How much is the actual cost? So for 10,500 into 150 minus 16 lakhs. When it comes to efficiency, sir, I should have, with the given time available, I should have produced 10,500. I produced 9,000, and efficiency variance means standard rate. What is the efficiency variance? So in terms of hours, it is simple. Efficiency variance means standard hours minus actual hours into standard rate. But in terms of output, sir, with the given time, what is your standard output? That means, for example, 1 unit I can finish in 1 hour. I have taken 100 hours. That means what should be our standard output, 100 units. So standard output minus actual output into standard rate. So this rate remains the same. Okay, standard rate only. So with the given time available, because even in efficiency, we need to calculate same. Even in the fixed overhead, in reconciliation also, I'll use the same concept. Sir, if it is a variable overhead based on hours, it is simple. Variable overheads based on output, I'm explaining. In terms of variable overheads based on output, how to calculate efficiency variance? First, you need to consider how much time you have actually utilized or actually worked. With the actual hours worked, how much should be the standard output? That means with the given time available, how much output I should produce and how much I produced into rate. When it comes to expenditure variance, yes, you should have produced 10,500 units in the given time. What would be the cost of this 10,500 and what is the actual cost? That is how we need to calculate variable overhead expenditure variance. When it comes to When it comes to cost variance, it is simple. So for 9,000, what is actual output? 9,000 units. What is absorption rate? 150. What is actual overheads incurred? 2,50,000. So this I'll put it in a note so that you'll use it. So variable overhead based on hours. In the examination, they may get confused. That is the reason I'm saying variable overhead based on output. If it is hours, simple stuff, stand hours into standard rate, actual hours into standard rate, actual hours into actual rate. The difference between these two would be efficiency. Difference between these two would be expenditure. Total would be cost variance. When it comes to output, you need to calculate each separately. Cost variance is, sir, actual output into standard rate. Standard recovery rate means based on output. Sir, if it is standard rate means in any case of overhead, whether it is a variable overhead or fixed overhead, remember this very important point. Whether in case of variable overheads or fixed overhead rate, how to calculate recovery rate? Budgeted overheads. If it is a budget fixed overhead, divided by budgeted hours or budget output. If it is in case of variable overhead recovery rate, budget variable overhead divided by budget hours or budget output. Finding out rate is same for fixed overheads and variable overheads, but variable overheads is for actual output, fixed overhead is for different, that is for budget absorption is different. Okay, actual output into standard recovery rate minus actual variable overheads. Now when it comes to efficiency variance, efficiency in case of output, stand output minus actual output into stand output minus actual output into standard rate. How to calculate stand output, sir? With the given time worked, what should be your output? Now, for example, I should able to finish 1 unit in 1 hour. Actually, I have worked for 1,000 hours. That means what is your stand output amount? 1,000 units. In the question number 8, you have worked for 1,05,000 hours. Each unit will take 10 hours. That means what is your stand output? 10,500. So 10,500 minus what is your actual output into standard rate. When it comes to expenditure variance, yes. Now for this 10,500 units, which is stand output, what is the cost of this stand output and what is the actual cost? That means, so for this 10,500, you should have spent this amount. How much you actually spent? That is the variable overhead expenditure variance. Don't compare with the fixed overhead with variable overhead expenditure variance. I'll tell you simple logic here. Fixed overhead expenditure, for example, in a classroom, I wanted to start a class. In a classroom, I can accommodate 50 students. I have decided to pay rent of 20,000 rupees per month. Whether I get 50 students or 10 students or 20 students, my fixed overhead remains what same. Whereas, for example, each student I wanted to distribute a material which is costing 100 rupees. If the number of admissions are only 10, I should pay only 10 into 100. If my number of admissions is 20, I should pay only 20 into 100. That is the reason while calculating variable overhead cost variance, you are considering based on actual output. Whereas fixed overheads, it is altogether different. Clear? So this is about material cost variance, labor cost variance, and variable overhead cost variance. Now I'll move to very important topic of fixed overhead cost variance, which they can give you for 10 marks. Okay. I think most of you feel that fixed overhead cost variance is difficult. Students, up to now you are clear, right? Now let me take you to the one question to explain you fixed overhead cost variance. Check it to our Marginal material or even the classroom material. Classroom notes. This question can itself be 5 marks, but I have given as a class notes. Remember this important topic here. A company has a normal capacity of 100 machines. So normally fixed overheads are recovered based on the normal capacity. So normal capacity is 100 machines working 8 hours per day of how many days in a month? 25 days in a month. The budget fixed overheads of a month are 1,50,000. Budget fixed overheads given straight away. The standard time required to manufacture 1 unit of product is how many hours? 4 hours. In a particular month, the company worked for 24 days of 750 mission hours and produced how much output amount? 4,300 units of the product. The actual fixed overhead incurred is 1,05,000. Calculate fixed overhead variances. One variance which I can take straight away is fixed overhead expenditure variance. What is fixed overhead expenditure variance? Budget fixed overheads minus actual fixed overheads. What is a budget fixed overheads? 1,50,000. What is an actual fixed overheads? 1,45,000. What is the logic behind it, sir? Sir, if for example, I have decided to pay 20,000 rupees rent. Sir, if I get 10 students, whether my budget will get changed? No. If I get 20 students, whether my budget will get changed? No. That means I should spend how much I should spend 20,000 towards rupees rent. But my owner asked me that municipal taxes got changed, sir. Please increase our rent to 21,000. Sir, irrespective of volume, I should have paid 20,000, sir. But I paid how much amount? 21,000. 1,000 is because of fixed overhead expenditure variance. That means when you're calculating fixed overhead expenditure variance, straight away take it like this. Fixed overhead cost variance is subdivided into expenditure variance and volume variance. Now, sir, nature of fixed overhead is that, sir, we absorb fixed overhead into the cost of production. Okay. Now, here, before I know, you should understand something called, I'll tell you a simple example because this I will discuss in the classroom also. Now, for example, I decided to conduct a class. For that, I need to take an auditorium or I need to take some place which cost me somewhere about 30,000 rupees rent. Material cost I need to pay 100 rupees. Okay, per student. This rent I can accommodate up to 50 students. This room I can accommodate up to 50 students. Now tell me, before starting session only, most of the students will ask me, sir, what is the price of the session? That means, should I recover my fixed overhead or should I not recover only fixed overheads from the students? I should recover all the cost from my students along with the profit. That means I should include the rental cost into my fee structure. I don't know how many students will come into actually. It can be 50, it can be 10, it can be 20, it can be 30 or 40 also. But I should have something called normal capacity. Sir, based on my expectancy, I have understood that my budget students or budget output, I'm expecting 40 students to come. So I have decided price structure like this. So 30,000 rupees divided by 40. So 750 rupees, I'll take it from each student. 100 rupees material, which is 850, 150 profit. So I said 1,000, I will recover it from each student. Now see here. So budget fixed overhead, how much you have expected? You have expected you should incur 30,000. Now from each student, you are decided to recover something. That is we call as standard recovery rate or standard absorption rate. How will you got standard recovery rate? Budget fixed overhead divided by budget output. Correct? What is my output in this case? My output is number of students only. My budget fixed overhead is 30,000, sir. Budget output is how much amount? 40 student. So 750 rupees is the recovery rate. Now tell me, I got 50 students. I got how many students? 50 students. Now tell me whether I'll recover 750 from all the students or I recover 750 from only for 40 students and I'll tell to remaining 10 students, okay, dear students, you don't pay. I've already recovered from my first come first students. So you pay only material cost and profit. Obviously, no. I should recover it from all the students. Okay. Now tell me how much you have recovered from 50 students. Let me put charge. So from these 50 students, I'll recover 50 into 750 rupees. How much? Now, how much would be? 37,500. What is this 37,500 we call as absorbed fixed overhead? So absorbed fixed overheads, how will you calculate? Two ways, sir. Absorbed fixed overhead, actual output into, dear student, don't think this is a choice question. This is a very important question. If you have a time, go and listen to YouTube channel also. We'll be having the standard costing separately. Standard recovery rate per unit. How many students I got? 50. From each student, how much I'm recovering? 750. How much I recovered? 37,500. Now, what is your budget fixed overhead? What is a budget fixed overhead? 30,000. Now, owner said, okay, so you need to pay me, sir, taxes have got changed. Please pay me 31,000. So for calculating absorbed fixed overhead, you can also use this formula, stand hours for actual output. Because when the absence of actual output, should use stand hours for actual output into standard recovery rate per hour. How will you calculate standard recovery rate per hour? Same, budget fixed overhead divided by budget hours. Correct? Now fixed overhead cost variance. Understand clearly fixed overhead cost variance. Now see here, fixed overhead cost variance. How much? So see careful. How much I paid actually? 31,000. How much amount came into my account? 37,500. That means how much amount I got extra surplus after paying rent? 6,500. More I got or less I got? More. So favorable. So 37,500 is what? Absorbed fixed overhead. 31,000 is called actual fixed overhead. Now, why I got this difference of 6,500? Two cases. One is expenditure. Second one is volume. Simple. I expected how many students? 40 students. How many students I got? 50 students. 10 students I got extra. So from each student, how much I recovered? 750 extra. How much amount? 7,500 favorable. Expenditure variance. Whether it is 40 students or 50 students or 10 students, I should pay only how much amount? I should pay how much amount? 30,000. But I paid 31,000 because of my owner pressure. 1,000 I paid extra adverse. So 7,500 favorable, 1,000 adverse. Put together how much amount? 6,500 favorable, which is a fixed overhead cost variance. Now volume variance is simple. Absorbed fixed overhead minus budgeted fixed overhead. Absorption is based on actual output. How much? 50 students. Budget is based on budget output. How much amount? 40. What is the recovery rate? 750. Expenditure variance. Budget fixed overhead minus actual fixed overhead. So that means for calculating fixed overhead cost variance, you should have three numbers. One is your absorbed fixed overhead. How will you calculate absorbed fixed overhead? Actual output into standard recovery rate. How will you calculate standard recovery rate? Budget fixed overhead divided by budget output. How will you calculate standard recovery rate per hour? Budget fixed overhead divided by budget hours. Even for variable overhead, standard recovery rate you need to calculate based on the budget only. So variable overhead recovery rate, budget variable overhead divided by budget output. Budget variable overhead recovery rate per hour, budget variable overhead divided by budget hours. So this is how we need to calculate absorbed fixed overhead, budget fixed overhead, and actual fixed overhead. Budget and actual would be given in the question. Straight away we can calculate expenditure variance. Now we will calculate volume variance, absorbed minus budget. How will you calculate cost variance? Absorbed minus actuals. Simple. Sir, fixed overhead cost variance, absorbed fixed overhead minus actual fixed overhead. Fixed overhead volume variance. Write down here. Fixed overhead cost variance. Fixed overhead cost variance. Absorbed fixed overhead minus actual fixed overhead. Fixed overhead volume variance. Absorbed fixed overhead minus budget fixed overhead. Fixed overhead expenditure variance. Budget fixed overhead minus actual fixed overhead. AFM's actual fixed overhead. Simple. This is about the fixed rate cost variance. Let me go to this question. Now, in this question, if you see our classroom question, so how much, what did they say, sir? Here they are given budget fixed storage should be how much. The budget fixed storage they are given 1,50,000. What is actual fixed storage given? 1,45,000. So straight away calculate expenditure variance should be 5,000 favorable. Okay, so no doubt in this, correct? Now find out the standard recovery rate first. Standard recovery rate per unit or per hour? Per unit means budget fixed storage divided by budget output. What is the budget fixed storage? 1,50,000 divided by what is the budget output they said. Now see carefully. What is the total budget hours available? 25 days, 100 missions, 8 hours. So which is approximately 20,000 hours, correct? Whereas they worked for actual hours are, what is actual hours? 24 into 750. So which is approximately 24 into 750. I think it is 18,000, correct? 18,000 hours. I know budget hours. How to calculate budget output? This is all based on standard numbers only. Budget output is equal to, sir, 1 unit will take how many hours? 4 hours. Now I have 20,000 hours divided by 4 hours per unit, 5,000 units. So budget output is 5,000 unit. What is your actual output? Your actual output is, how much is an actual output? 4,300 units. Okay, you have decided to record for 5,000 units, but you have recorded only 4,300. So you'll get volume variance adverse. That is pakka sure, correct? Now come to recovery rate. 1,50,000 per hour is how much amount? 1,50,000 divided by, so 20,000 hours, which is 7.5. Per unit, if I go, I can calculate 7.5 into 4 because each unit will take 4 hours, which is 30 rupees. Or I can consider 1,50,000 divided by what is output? 5,000 unit. So either way you can calculate, it is 30 rupees. Now carefully. First important 3 points I said to calculate in fixed storage. First one is absorbed fixed storage. Second one is budget fixed storage. Third one is actual fixed storage. Budget fixed storage they are given 1,50,000. Actual fixed storage 1,45,000. Absorbed fixed storage. Absorption is based on what? Actual output into standard recovery rate per unit. What is actual output? 4,300 into what is the recovery rate per unit? 30, which is 1,29,000. Or you can calculate standard hours because I'm using both the formulas for calculation, right? Standard hours for actual output into recovery rate per hour. What is actual output? 4,300. Each unit will take how many hours? 4 hours. This is standard hours for actual output into recovery rate per hour is 7.5. So same will get 1,29,000. In the question, if they give you actual output and standard recovery rate per unit, you consider this. In case actual output is missing, to calculate absorbed fixed storage, you consider standard fixed storage, standard hours for actual output into recovery rate per hour. So, okay, now fixed storage fixed overhead cost variance absorbed minus actual 1,29,000 minus 1,45,000. More you have spent, less you have recovered, which is 16,000 adverse. Cost variance is subdivided into volume expenditure. 1 lakh, I should spend 1,50,000, but I spent only 1,45,000. 5,000 favorable, which is 2 and 3, budget minus actuals. Volume variance also can say straight away. Sir, 5,000 units I decided to manufacture, but I have manufactured only 4,300. I have not recovered for 700 units. Each unit, what is the recovery rate? 30. 700 into 30, how much amount? 21,000. Or you can calculate absorbed fixed overhead minus budget fixed overhead. So 1,29,000 minus 1,50,000. 21,000. Simple, no? I already said that, sir, you should have a logic. You can do this all. Or you can calculate directly. I decided to manufacture 5,000, sir. I have produced only 4,300. Each unit I wanted to recover 30 rupees. So I am unable to recover that amount. That is my volume variance adverse. Now volume variance is subdivided into calendar variance, capacity variance, efficiency variance. Please understand carefully. So for this, don't use any formulas, do this reconciliation. First, you go with budget hours. What is my budget hours? 20,000. Sir, I decided to work for 25 days in a month, but I have worked only 24 days in a month. 1 day straight away loss. Now tell me each unit, how many mission hours is your normal capacity? 100 missions and 8 hours per day. So that means 1 day loss means 800 hours lost. Correct? So this is because of which effect? Calendar effect. So 19,200 is the budget hours available for actual days, actual working days. Simple. So 24 days into 800, 19,200. But you have worked only how many hours? 18,000. This is actual hours. Difference of these two is because of capacity. Sir, you have decided to work 800 hours per day, but you have worked only 750 hours per day. 50 hours lost for each day. For how many days? 24 days. Because 1 day lost here, 24 days only have worked, which is 1,200. 18,000. Sir, if the other question, if there is no calendar effect, the difference between budget hours and actual hours is because of capacity effect. Okay. Now with this 18,000 hours, two ways of calculating efficiency. What is my stand output and what is my actual output? I already said in the earlier session, stand out is based on actual hours. With 18,000 hours, how much output I should be able to produce? Each unit will take 4 hours. With 18,000 hours, I should produce 18,000 divided by 4. Correct? Which is 4,500. But I produced only how much amount? 4,300. So 200 units lost because of what? Efficiency. This is one way of calculating efficiency. Second way is that what is the efficiency variance formula in labor or variable overhead? Efficiency is what? Between stand hours and actual hours. Now, what is your stand hours for actual output? Stand hours for actual output. What is the stand hours? Actual output is 4,300. Each will take 4 hours. So, which is equal to 17,200 hours is the stand hours for actual output. Correct? Stand hours for actual output. So say 1,29,000. So 4,300 into 4. So you should able to, sir, with the, what are the output you have produced? 4,300. 4,300 you should able to complete in 17,200 hours, but you are complete in 18,000. That means you are not 100% efficient. Okay. Now calendar, tell me, because of calendar, how many hours lost? 800. What is the recovery rate per hour? What is the recovery rate per hour? How much amount? 7.5? 7.5, correct? 800 into 7.5. Because in all this, calendar capacity and efficiency is part of volume variance. Volume variance means which rate of standard rate, correct? Capacity, because of capacity, how many hours lost? 1200 into 7.5. Because of efficiency, how many hours lost? 18,000 minus 17,200, which is 800 into 7.5. Or if you want to calculate in terms of output, sir, how many hours output lost because of efficiency? 4,500 minus 4,300, 200 units into 30 rupees, because each unit rate 30. 1200, if I convert into output, 1200 means how many units? 300 units into 30 rupees. 800 means how many units? 200 units into 30 rupees. See here, 200, 300, 200. 2, 3, 2. How much amount? 700. How much volume got affected? 700. 5,000 minus 4,300. How much amount? 700. So when you're taking hours, hourly rate. When you're taking output, output rate. Okay. So this is how we need to calculate reconciliation. So reconciliation starts with the budget hours. First, give effect of calendar. Then you give the effect of capacity. Then you'll arrive at actual hours. Actual hours can be compared with standard hours for actual output, or actual hours can be converted into standard output. That means with the given actual hours, because when you're calculating efficiency, my efficiency is calculated based on hours I worked. So for example, I decide to read 10 pages per hour. If I'm more efficient, I can read 15 pages. I decided to read 10 hours per day. I may not able to read 10 hours per day. I may read only 5 hours per day, but I can read number of pages per hour is more. So that is what, sometimes because of calendar you may lose or you may gain, because of capacity you may lose or you may gain, because of efficiency you may lose or you may gain. Okay. So efficiency you can compare based on actual hours and stand hours, or compare stand output with the actual output. Correct? Yes. So based on the respective output, you should calculate if it is output, output rate, if it is a rate, hourly rate. Okay, if it is hours, hourly rate. So that means fixed rate cost variance is absorbed fixed rate minus actual fixed rate. Fixed rate cost variance is subdivided into volume variance and expenditure variance. Volume variance again subdivided into calendar, capacity, efficiency. Ideal time means same, actual hours productive minus actual hours paid. So expenditure variance is budget fixed rate minus actual fixed rate. So to calculate simple three, first you find out absorbed fixed rate. Second, you find out budget fixed rates, actual fixed rate. Budget and actual will be given in the question. Absorption is based on actual output into standard recovery rate. For any type of overhead, calculating standard recovery rate is same. Budget fixed rate divided by budget hours, or budget variable overheads divided by budget hours. You don't need to check how to calculate standard recovery rate, whether it is a variable overhead or fixed overhead. Rate is same, but variable overhead is based on actual output. Fixed overheads are different because when the output also got changed, fixed overheads remains the same. That is a concept. Okay. Now, next question in marathon. Now, in come to question number 12, if you see, companies engaged in manufacturing several products, the following data have been obtained from the record of a machine shop for an average month. Number of working days 8, working hours per day 8, number of direct workers 150. Efficiency 1 stand hour per clock hour. That means if you want to calculate stand hours, if actual hours are 100, stand hours for actual output is also same. That means, so 1 stand hour per clock hour means 1 stand hour if they give, that is the stand hours for actual output. Correct? Now downtime is 10%. So when you're calculating budget, you need to reduce the downtime because downtime is common. So you need to calculate. So first one is maximum permissible hours you'll get. From then you need to reduce the downtime. Then you'll be arriving with the budget hours. Variable overheads is given, fixed overheads is given. So here, how to calculate standard recovery rate, sir? For fixed overhead, budget fixed overhead divided by budget output or budget hours. Same here. What is your stand hours here? 24 into 8 into 150. Variable also same. Budget variable overheads divided by stand hours. So budget hours. Budget hours means after maximum permissible hours, reduce the downtime. Actual variable hours are given, actual fixed overheads are given. So tell me, in fixed overhead, you can calculate actual fixed overheads are known, budget fixed overheads are known. You can calculate fixed overhead expenditure variance right away. Net operate hours worked 20,500. Stand hours produced 22,550. So actual hours worked is 20,500. Stand hours produced is 22,550. Special holiday. Whenever there is a holiday, you'll get effect of calendar. After giving calendar, any difference between those hours and actual hours would be capacity variance. Compare your actual hours with stand hours to calculate efficiency. Now efficiency variance is simple. 22,550 minus 20,500 into standard rate. Here they ask you to calculate efficiency ratio, activity ratio, calendar ratio, standard capacity ratio, fixed overheads and variable overhead expenditure and efficiency variance. Now these ratios are very important. So many students buttify the formulas. So simple, sir. If I want to calculate efficiency variance can be calculated based on output, based on hours. If you don't remember the formulas, remember this one. Sir, in 1 hour, I should produce 1 unit. Okay. In 10 hours, what is my stand output? 10 units. But I produce 11 units, sir. Tell me whether more efficient or less efficient. With the given time available, you should able to produce 10 hours, 10 units, but you have produced how many units? 11 units. That means you are more efficient. 10 by 11 or 11 by 10 will give you the more than 100. So it is 11 by 10. What is 11? Actual output divided by stand output into 100. If it is based on hours, sir, 100 units I should complete in 50 hours, sir, but I complete in 40 hours. Now tell me whether you are more efficient or less efficient. With the given time, 100 units, I can finish in 50 hours, but I finished in 40 hours. That means I'm more efficient, sir. 40 by 50 or 50 by 40 will give me more than 100. 50 by 40. What is this 50? Stand hours. What is this 40? Actual hours into 100. So if it is based on output, actual output divided by stand output into 100. If it is based on hours, stand hours divided by actual hours into 100. If you do not remember the formulas, just imagine numbers. Sir, I should finish in 50 hours means I have finished in 40 hours. That means I'm more efficient. No, sir. 50 by 40, sir. What is 50, sir? Stand hours. What is 40, sir? Actual hours. With the given time, I should finish 10 units, sir, but I finished 11 units, sir. I'm more efficient, sir. 11 units, what am I? Actual output. 10 units, what am I? Stand output. Okay, this is efficiency variance. Calendar variance. So actual working days divided by budget working days into 100. Capacity variance, same reconciliation, correct? Actual hours worked divided by budget hours into 100. Important of these ratios. Efficiency calendar, activity ratio. Activity is efficiency ratio into capacity ratio. Efficiency means what, Amma, in terms of hours? Stand hours divided by actual hours. Capacity, actual hours divided by budget hours. Actual hours get cancelled. Stand hours divided by budget hours into 100. There is one more ratio which they've asked you, is that standard capacity usage ratio. Standard capacity usage ratio is budget hours divided by maximum permissible hours. Please write down that formula also. So standard capacity usage ratio is same ratios you will discuss in budgets and budget order. Budget hours divided by maximum possible hours into 100. Like in this, in case of downtime, 10% means obviously your ratio should be 90%. Correct? So this is the important topics in terms of ratios. Now, before I conclude this chapter, let me tell you one important point is three variances model. So see here in three variance model, if you see in our in our material, it may be given in question number 15 and 14 and 13 also, right? So what they will give you is that, now tell me in terms of fixed overheads, what you'll have: volume variance and expenditure variance. In terms of variable overheads, what are the major components of variable overhead variance? Come on, students. Efficiency variance and expenditure variance. These two I'll club together under overhead expenditure variance. So under three variance model, they'll give you volume variance, efficiency variance, expenditure variance. This one they are bifurcated. This would be the total overhead variance. Total overhead variance. So volume variance, efficiency variance, and expenditure variance. Volume variance means pertaining to what? Fixed overhead volume variance. What is the formula of fixed overhead volume variance? Tell me. Absorbed fixed overhead minus budgeted fixed overhead. Efficiency variance. How will you calculate FE? Stand hours minus actual hours into standard rate. Which standard rate? Variable overhead standard rate. Expenditure variance means variable overhead expenditure variance and fixed overhead expenditure variance. What is fixed overhead expenditure variance? Budget minus actual. Variable overhead expenditure variance means standard rate minus actual rate into actual hours. That's it. So if we see the question number 13, 14, and 15, we have discussed these two topics, correct? So three variance model means it includes volume variance, efficiency variance, expenditure variance. Volume variance means volume variance pertaining to fixed overhead. Efficiency variance pertaining to variable overhead. Expenditure variance pertaining to both variable overhead expenditure variance and fixed overhead expenditure variance. Okay. So detailed question you can see later. Okay. So these are the important topics in terms of this one. So what I'm expecting here is that material labor. In terms of material, they may ask you about normal loss. If they want to confuse, they may give you material purchase price variance. Labor variance, stand hours produced means stand hours for actual output. Okay. And for material labor, you can calculate yield variance by cross checking. Correct? The detailed videos you can see in our Stresta app or in YouTube also. Now, in terms of variable overheads, based on hours, based on output. Fixed overhead, yes. Variable absorbed fixed overhead, budget fixed overhead, actual fixed overhead. Correct? Now, variable overhead. Now, in terms of absorbed fixed overhead, how to calculate absorbed fixed overhead? Actual output into standard recovery rate per unit. If it is hours, stand hours for actual output into standard recovery rate per hour. So a budget is already given, actuals will be given, you can calculate it. And volume variance is subdivided into what? Volume variance is subdivided into, tell me, first one is calendar, capacity, and efficiency. So how will you calculate that? Sir, I have given it reconciliation, start with budget hours, give effect of calendar, then you'll have a capacity, then with the actual hours, compare with the stand hours for actual output, or you can compare actual hours with standard output and actual output. If it is hours, hourly rate. If it is unit, unit rate. Three variance model I have discussed about. Variable volume variance means pertaining to fixed overhead. Efficiency variance means pertaining to variable overhead. Expenditure variance means it pertains both to variable overheads and fixed overhead. Two questions we have discussed in our classroom also. Please understand that. Okay. So, and one more important point is that, sir, there are types of standards given in the given in terms of study material. There are 4 types of standards for our understanding. I'm telling ideal. 1 minute. So 4 types of standards: ideal standards, normal standards, basic or bogus standards, or current standards. So ideal standards is the level of performance attainable when prices for material labor are most favorable, and the highest output is achieved with the best equipment layout, and the maximum efficiency in utilization of resources result with the maximum output with the minimum cost. So that is ideal. So normally we go with the normal standards, that is the standards which can be attained. Basic standards means which are there for a long period of time. Then we have current standards. The current standards reflect the management anticipation of actual cost, which will be the actual cost for the current period. So these are the 4 types of standards. So we have discussed what is standard cost and standard cost. Here we are having we are discussing 4 types of cost variance. Why variance analysis means difference between budget profit and actual profit. Under this, material, labor, variable overhead, and fixed overhead. Now, in terms of material, so in a regular class, we have discussed in detail why price, what is usage, what is yield, mix, etc. So, in terms of material cost variance, subdivided into usage or quantity, and price variance. Usage or price subdivided into yield and mix. In terms of labor, in case of idle time, in case of not having idle time is simple: actual hours productive minus actual hours paid into standard rate. Now variable overheads based on hours and based on output you have worked out. Fixed overhead, with a simple example, we have discussed the fixed overhead, absorb fixed overhead, and budget fixed overhead and actual fixed overhead. And we have discussed 3 variance model, which is 100% sufficient for your examination. And please also complete the and ratios you have worked out: efficiency ratio, calendar ratio, activity ratio, standard capacity usage ratio. Please complete those also. Okay, so you can reflect missing figures also you have worked out. So this is more sufficient for please do our material and do study material. So this is the basic information I can give it for standard costing and variance analysis. Okay, so please take care. Come on, students. Till now we have discussed about introduction. We have discussed about marginal costing. We have discussed about standard costing and variance analysis. The next topic we are discussing about activity-based costing. So the expectancy from the activity-based costing is minimum 10 marks from the examination. The important point in this chapter is that normally it used to be there in the CA final in old syllabus. Now what they did is that they have moved the basics from CA final to CA inter. The advanced topics of activity based costing they have incorporated in the CA final. Okay, so this chapter is very important, like your marginal costing, standard costing, activity based costing, budgets and budgetary control. These chapters remain common even in our CA final, right? Now, in terms of activity based costing, here first you need to understand the difference between traditional costing and activity based costing. Now the difference between traditional costing and activity based costing is related to overheads, because in any costing system direct cost can be traced to cost object directly, but whereas in terms of overheads if you listen to overhead chapter, there will be having multiple two-tier missional rate, blanket overhead recovery rate, and mission hour rate, etc., etc., etc. Now, the shortfalls in traditional costing is replaced with activity-based costing. Now, what happens in terms of traditional costing? First, overheads are worked out. The overheads are allocating to cost centers. Which cost centers are production cost centers and second service cost centers. Now that is we call as primary distribution of overheads. Now the secondary, the service cost centers amount is again reapportioned to production cost centers. That's reappropriation of the overheads. That is a secondary distribution of overheads. Then by using a mission hour rate or labor rate, we are assigning to cost object, that is for the product. Now, whereas in terms of activity based costing, now tell me in terms of traditional costing, the maximum rate is based on volume based. Now, for example, 3 people went to hotel. 1 people took juice, which is costing 100. Second person took biryani, which is costed 500. Third person took, let us assume, veg amount somewhere about 300. Now, if it is a volume based, what happens is the total will add 500 plus 300 plus 100. How much amount? 900 divided by 3. How much amount will allocate to each person amount? 300. See here, the first person consumed the resources only to the extent of 100, but is burned an amount of how much amount? 300. He got a liability of how much amount? 300. Second person, now first person, see here, he took the benefit of 100, but he paid how much amount? 300. He is at loss. Second person who took the benefit for 500, whereas he has paid only how much amount? 300. Now he got benefit. Third person took 300 and paid 300, no profit, no loss. So he has not incurred any loss. But see here, one person who have consumed resources more but paid less, the other person who have consumed less paid more. Now this concept is called cost distortion. To eliminate this cost distortion, activity-based costing has come into picture. Now, activity-based costing is resource consumption based. Resource consumption based. That means it is not based on volume based. In terms of resource consumption based, what happens that overheads remains the same. Now, the overheads are assigning to activities. From activity, by using activity cost drivers, will be allocating to what amount? Cost object. Ultimately, the overheads amount should be recovered by what amount? Product only. That is a cost object. What is meant by cost object, for which you want to find separate measurement of cost, is called what amount? Cost object. Now, instead of cost centers, if you remember, primary cost centers, secondary cost centers, service cost centers, that is a cost centers. If you remember overhead chapter, what we do under primary distribution of overheads and secondary distribution of overheads, this concept. Whereas in terms of activity based costing, instead of cost centers, it is replaced by what amount? Activity. From activities, it is assigned to what? Cost object. Now, what is meant by activity? Activity is an event that incurs cost. Now, I do a lot of activities in my business. So, for example, I am only speaking about overheads. That means first you should listen to these 3 important points. What is the first important point, sir? Sir, the total direct cost under both the methods remain same, because this chapter is only speaking about overheads. Whatever is before overheads, that is a direct cost. Under any method of costing, that is under traditional costing and activity based costing, the total direct cost under both the methods is what amount? Same. Second important point, the total overheads under both the methods is same. That means, sir, now your overheads is how much amount? 900. If it is a volume based, you will be charging 300, 300, 300. If it is a activity based, resource consumption based, from first person I will charge only 100, second person I will charge 500, third person I will charge how much amount? 300. So ultimately, The overheads here 900, the overheads here 900, both remain same. Only the individual allocation will get different when compared to activity based costing and traditional costing. Third important point, the total cost and profit under both the methods is same. Why, sir? Total cost is of the company, not individual product wise, because individual product wise it will get deferred. The reason is that overheads amount is getting deferred. Now, what I'm speaking is that if there are three products A, B, C and total, now under this total method, whether it is a traditional costing and activity based costing, both remain same. But individual cost will get deferred because overheads allocation under traditional costing, overheads allocation under activity based costing is different, right? Now come to an activity. What is meant by activity, sir? Activity is an event that incurs cost. Now, how many activities will be there in the business, sir? N number of activities, because you incur a lot of cost. For each cost, you will be incurring in a concept called what amount? Activities. Now, what happens is that now, for example, let us assume, I'll take a simple example so that you'll understand the difference between traditional costing and activity based costing. Now, let us assume there are three types of activity. First one, ordering. Ordering is an activity, right? Where I go on order my items from different vendors, right? Or purchase ordering. Delivery is one activity because it incurs cost. Third one, shelf stocking. Now, for this, there is an amount incurred cost. What is that amount? Let us assume 64,000 because this example I took from ICI material itself. 1,40,000. How much amount? 80,000. Now total, how much amount? 64,000 plus 1,40,000 plus 80,000. 2,20,000 plus 2,84,000. Now, let us assume that, so this is we call as activities. This is we call as activity cost pool. How will you get this activity cost pool? By using activity resource cost driver and activity cost driver. That means in terms of activity based costing, the overheads are first allocated to activities by using resource cost driver. What is meant by cost driver? Yesterday we discussed that the which drives the cost, because cost driver affects the change in the cost of an activity. Okay, now let us assume ordering is one activity. What would be the cost driver? So number of purchase orders. If my number of purchase orders get increased, what happens is that my purchase ordering cost increases. Okay, now what is my cost driver in such a case? Number of purchase orders is my cost driver. Now, overheads are allocated to activities. Now tell me, how you got the 64,000, 1,40,000 and 80,000 by using a resource cost driver? Let us assume in overheads, there are something called indirect labor. Indirect labor, let us assume I'm incurring a cost of 2 lakhs. Now, how this indirect labor is being used by each activity, ordering and delivery and self-stocking. Let us assume in the ratio of 1:3:3. We'll allocate this 2 lakhs in this ratio to activity. There will be something called indirect material. Some amount which is how their resources is being consumed. That means each activity, how they have taken their resources from indirect labor, indirect material. That is by using a concept called what, resource cost driver. Now from this activity to cost object, by using a concept called activity cost drivers. Activity cost drivers. Now tell me, ordering is one activity. I'll repeat, ordering is one activity. Now, which influences ordering cost? If my number of purchase orders get increased, then let us assume cost objects are A, B, and C. Now let us assume if I place more number of orders, more is the amount of ordering cost. If I place less number of orders, less is the amount of ordering cost, right? Now let us assume I'm having two cost objects, product 1 and product 2. Now let us assume number of purchase orders. Let us assume 30 purchase orders and 50 purchase orders are placed. Second one, number of deliveries 110, 90. Shelf stocking hours 220 and 180. Now see here, when it is a resource consumption based, earlier what I used to do, if ordering is 64,000, how many volume of product one is sold or produced, how much volume of product two is produced, based on volume I used to allocate my overheads to my cost object. But here in terms of activity based costing, now we need to find out very important points. Now how this 2,84,000 is, how this 2,84,000 would be apportioned to cost object. Now see here, I have an activity. This is called activity cost pool. We need to find out activity cost driver for each activity. Now tell me the ordering cost. What is activity cost driver? Number of purchase orders. Don't assume that everything will be in a sequence in the examination. They may shuffle it off. You need to keep your mind in understanding what is the activity cost driver for respective activity. For delivery, number of deliveries, self-stocking hours. Now I need to apportion between product one and product two. Now understand here, this is cost driver. Now I need to work out level of estimated activity, which is sum of these two: 30 plus 50, 80, 110 plus 90, 200, 220 plus 180, how much amount? 400. Now I'll work out cost driver rate. I will look at the cost driver rate. What is the activity cost pool divided by estimated level of activity? 64,000 divided by 80. How much amount? 64,000 divided by 80. How much amount? 800 rupees. That means for every purchase ordering, it is costing how much amount? 800. Number of deliveries 1,40,000 divided by 200, 700. Third one, 80,000 divided by 400. How much amount? 200. Now I have worked out the cost driver rate. Now by using the cost driver rate, I'll be assigning to cost object. Now what are my cost object? My cost objects are product one and product two. Now see here, first one, ordering, how much I'll allocate? See here, sir, 800 is the cost driver rate. And what is the consumption? Sir, how many purchase orders are being used for product one? 30, sir. 30 into 800, how much amount? 24,000. 50 into 800, how much amount? 40,000. Sir, product 2, which is a cost object, have consumed more amount of purchase orders. More amount of overhead should be allocated to product 2 than to product 1. Next one, in case of delivery, what is the cost of each delivery? 700 rupees. What is the cost of each delivery? 700. Now, how many deliveries are placed for product 1? 110 deliveries are placed for product 1. Now 110 into 700, how much? 110 into 77,000. 90 into 700, how much amount? 63,000. So 77,000 plus 63,000, how much amount? 1,40,000, right? Now third one, what is the third one? Self-stocking. What is the amount? Cost driver rate? 200. How many self-stocking hours are there? 220. 220 into 200. How much amount? 44,000. Next one. 180 into 200. 36,000. Now, if it is a volume based, what I would have done is that total 2,84,000 divided by 2 units. So I'll take it 1,42,000 each, 1,42,000 each, which is not correct because each product has not consumed resources in a unique way. The consumption is different for each product. That is the reason we are going with what? We are going with what? We are going with resource consumption based. Okay. Now what is the total cost assigned to product number 1? 24,000, which is overheads. 77,000 plus 44,000. How much amount? 1,45,000. In case of 2, 40,000 plus 63,000 plus 36,000. How much amount? 1,39,000. So put together how much amount? 2,84,000. But product 2 have consumed less amount of resources. So less amount is allocated to product 2 and then product 1. Understood? So that means in terms of activity based costing, what are the 5 stages of activity based costing? First one, find out the activities that take place in the organization. That take place in the organization. How many activities, sir? Any activity which incurs cost is an is an activity. So you need to identify how many activities are having in terms of organization. Second important point is that you need to find out what did we work out. Second point, cost pool. So find out the activity cost pool. Activity cost pool, or it can also be called as cost buckets, because these are the activities where the cost is being loaded, right? For each activity. By using what? By using resource cost drivers. Because in terms of CA Inter, the cost activity cost pool they would have given in the examination, okay, directly. Resource cost driver. Third one, you need to find out what is third one, cost driver for each activity. Find out the cost driver for each activity. Now, fourth one, find out estimated level of activity base. What is estimate level of activity base means? This one, product 130, product 250. So what is the total estimate level of activity base? 80. So this we need to work it out. Now, next one, what did we work out? We worked out what is the cost driver rate, that is activity cost driver rate. Find out the activity cost driver rate. What is the formula for activity cost driver? Activity cost pool divided by estimated activity base. Now, once you worked out cost driver rate, assign the cost driver rate to cost object. That means this concept. So now we know that each overheads or each activity. So how much I should apportion to product 1, how much I should apportion to product 2. So these are the steps in what activity based costing. So the format is also simple, which you can apply for every type of question. First, you should write down activity. Next one, you should write out activity cost pool. Third one, you should be able to find out activity cost driver. Fourth one, you should find out estimated activity base. Fifth one, you should find out activity cost driver rate. By using this activity cost driver rate, with respect to estimated activity base, we should assign it to what, each cost object. So that is the end of activity based costing. Now, let me move forward. Now tell me how many type of activities are there? What is a cost hierarchy? Because when you understand cost hierarchy, sir, now tell me whether activity based costing is expensive or not. Obviously, activity based costing is expensive. The reason is that now in terms of traditional costing, I need to understand only cost centers, whereas in terms of activity based costing, I need to find out number of activities and activity cost driver, activity cost base, estimated activity base, and finding out the cost driver rate and assigning the cost driver rate to cost object, which is more expensive, which is laborious, which is what I can say. No, though there are advantages, it is a laborious task, it is an expensive task. Now tell me, when I should move to activity based costing, when I should continue with traditional costing. For that, you need to understand what is a cost hierarchy. Now that means all the activities are bifurcated under 4 categories. First one, very important, unit level activities, batch level activities, product level activities, fourth one, facility level activities. Facility level activities. Now, what is unit level activities, sir? Activities which can be identified with the number of units produced. That means it is unitless, because if the number of units increases and the activity cost also increases, that is we call as what? Unit level activities, more of volume based. Examples like indirect material, okay, let us assume indirect labor, etc., etc. Batch level activities, so this activity is not incurred for each unit wise for a batch. Now tell me, for 10 units, one batch. So this cost, let us assume setup cost. What is meant by setup cost, Amma? So to run a machinery, first let us assume in terms of plastic industries, the machine is supposed to be heated for 24 hours. Now for running those 24 hours where there is no production, you are incurring some cost like electricity. You will incur some indirect labor. You need to incur some amount of tools, consumables, etc., etc. Now tell me whether I'll do setup cost for each activity. No, I'll do a setup activity for 1,000 units or 10,000 units or 20,000 units. That is for each batch. So that is we call it as batch level activities. Examples, your ordering cost, like your setup cost, etc. Third one is product level activities. It is more about designing. Now tell me, for each product, do I do designing and engineering? Obviously, no. When a designing and engineering is done, you will produce some. This is done for every new product. So those activities we call as product level activities, like parts designing, product specifications, etc. Facility level activities, if any activity which is not coming under above 3, that is we call as what, facility level activities, like all your fixed overheads. Understood? Now tell me, when I should move to activity based costing, if majority portion of my activity consists of batch level and product level activities, then only you should move to ABC. Otherwise, please be with traditional costing. Why, sir? Traditional costing is always based on what? Volume. Now, in case of unit level activities, it is also based on volume. Now, why to move from traditional costing to activity based costing? Not required. It is a facility level which cannot be assigned to each activity or each object, each cost object. Now, the same thing what we do under traditional costing, we need to do under activity based costing, because you take some base and we'll try to apportion. Now, if the majority of the activities, if my major amount of overheads consist of unit level activities and facility level activities, please do not come to activity based costing. Please continue in traditional costing. Now tell me, sir, when I should move to activity based costing, if my majority amount of overheads consist of batch level activities and product level activities, please come to ABC, because you can remove a concept called cost distortion. The reason is that what is meant by cost distortion? You are overpricing some products, underpricing some products, because of what? Not following consistent method of allocation of overheads, not following resource consumption based of allocation of overheads. Because when you're going by volume, I said in the example, so 3 people went to the hotel, each person have not consumed equal resources, but I'm allocating equal amount of cost based on volume. Then one person I am charging more, other person I'm charging less. The concept of, in terms of traditional costing, product cost cross subsidization will happen. That means one product will be more amount of cost, the other product would be what, less amount of cost. To eliminate this product cost cross subsidization, to eliminate this cost distortion, I am moving from traditional costing to what, activity based costing. Now tell me when I should move to activity based costing. If my majority amount of overheads consist of batch level activities and product level activities, please come to ABC. Otherwise, be with the traditional costing. Understood? Now, this is the cost hierarchy, right? Now, here, the examination, they may ask you, they may give you activity cost pool, and asking to write down what is the cost driver for respect to cost driver. Now, for this, I'll share our so this is important, right? This is what the examiner may ask you in the examination. Sir, if it is ordering and receiving material cost, what is the appropriate cost driver? Number of purchase orders. If it is a setting up of machine cost is activity cost pool, number of setups. If machining cost, then number of machine hours. Assembling cost, number of parts. Inspection and testing cost, number of tests. Painting cost, number of parts. Supervising cost, you can go based on direct labor hours. Delivery cost, number of deliveries. Shelf stocking cost based on shelf stocking hours. Customer support based on number of items sold. There could be some more activity cost pool. Please understand, please write down appropriate cost driver. So this is one of the 5 marks question which they can ask you. They will write down what is the activity cost pool, and you are requested to write down what is the appropriate cost driver. Understood? Right. Stages in activity based costing I already discussed, right? So this is the concept of activity based costing, right? Then now, before I go to the questions, let me complete the important topic. Now this is about activity based costing. Next one is ABM, activity based management, very important for your theory part. Now what is ABM, sir? When you put ABC in action, ABM is nothing but then activity based management. When you put ABC in action, when you use activity based costing tools for managing the cost level, for managing the cost at activity level, that is we call as activity based cost management. Under activity based cost management, I'll be doing 3 analysis, very, very important. First one is cost driver analysis. Second one is activity analysis. Third one is performance analysis. Now, what is included in terms of cost driver analysis? I'll explain from our material. Now, see here. The factors that cause activities to be performed need to be identified in order to manage activity cost. Cost driver analysis identifies 3 causal factors. Now, Now tell me, sir, in terms of cost driver analysis, what is my respective cost driver? For example, each cost driver is costing me, let us assume that 15 rupees. Let us assume activity cost driver rate of purchase ordering is 15. Can we reduce this 15 to 12? Can we reduce this 15 to 10? So if I do that analysis, that is we called what a cost driver analysis. Second one is activity analysis. Sir, whether what is meant by activity? Activity is an event that incurs cost. Sir, if I can remove that activity or if I can reduce the activity, obviously my cost will get say reduced. Now, in terms of activity analysis, what I do is that I will classify all activities into two categories. One is value added activity. Second one is non-value added activity. What is value added activity, sir? Sir, an activity is a value added if it meets all the three requirement conditions. What is the first one? First one is that customer is willing to pay for the activity. Let us assume you are a chartered accountant. Now your staff laptop got repaired. Now, based on enthusiasm, you are doing some work on, you are trying to repair it. But whether it is an active, whether it is a value added activity for you, because your staff will not make payment to you, that is not a thing. The same laptop, if I go and give it to a service person, he will do the repair and he was getting charged. So for him, it is what value added activities. If I do simple logic, sir, if I am watching Facebook, if I am browsing YouTube for unnecessary activities, unnecessary thing, that is not a value added activity for me. If the same Facebook employee or YouTube employee is browsing the respective website, yes, he was getting paid. So that is a value added activity for him. So what I used to say to all my students is that you list out what are the activities you are doing in a day-to-day business. In a day, what are the activities you are doing? Obviously, there are some activities which are of no use. You are just simply wasting the time. You try to remove those non-value added activities. Like, for example, you are unnecessarily browsing YouTube. Lot of time is being wasted. You are unnecessarily looking after your Facebook and Instagram. Lot of time is getting wasted. You remove it. You try to increase more about value added activities. Maybe your examination, reading, or your preparation, your knowledge increased. So that is the reason an activity could be value added for some person, maybe non-value added for some person. Okay. The second one is that value added activities are those activities which are indispensable in order to complete the process. That means to complete that product, whether it is a service or a product, this activity should be incurred. That is, we call as value added activity. Third one, value added activities enhance the value of products and services for the customer. Otherwise, if it is not enhancing the value, what is the use? It is not a value added. So what we do in first one is cost driver analysis. So whether I can reduce my cost driver rate or not. Second, in terms of activities, I incur a lot of activities. If I can reduce my activities, obviously I will incur less amount of cost. If less amount of cost is incurred, obviously I can save some amount. Now that is the reason all activities are bifurcated into value added activities and non-value added activities. Third thing, what is the third one? Performance analysis. This is very important. Now tell me, sir, let us assume that performance analysis involves identification of appropriate measures to report the performance on activity center or the organizational units consistent with each unit's goals and objectives. Performance analysis aims to identify the best ways to measure the performance of factors that are important to organization in order to stimulate continuous improvement. Sir, how each activity in the organization is performed? Now let us assume that there is a number of purchase orders. Now, for example, you are placing 100 purchase orders, whereas the other person, the other organization, which is in line with your organization, is placing only 30 orders and reducing the cost. That means third thing is that whether each activity center, what is the performance of each one. So obviously, when I do these three, obviously I'm reducing my cost. I am managing my cost. That is we call as by using activity based costing. If I manage the cost, that is we call what ABM. So what are the analysis under ABM? First one is cost driver analysis. Second one is activity analysis. Third one in terms of performance analysis. So what we do under performance analysis, first one is cost reduction. If you remember the first introduction chapter, if you remember, there are two things: cost control and cost reduction. Cost control is a temporary measure, cost reduction is a permanent reduction, and it is a preventive nature, right? Now, second thing is that BPR will be done in performance in analysis. I'll write here because you can understand. First one, in terms of performance analysis, so first I'll do with first one, I'll do cost reduction. Second one, I'll do BP, business process engineering. I'll do benchmarking. Fourth one, I'll measure performance measurement. Performance measurement in CA final, we have the number of ways to do the performance measurement. So this is what we do under performance analysis. Clear? Right. No, already I said whether an activity is a value added or non-value added, you need to check this table. Now, next one is manufacturing cycle efficiency. So manufacturing cycle efficiency is simple. So out of my total manufacturing cycle, what is my processing time divided by total time? What includes total time? Total time includes processing time also. Processing time plus moving time plus storing time plus inspection time and rework time. If I see here, what is important to produce a product? Processing time. Remaining all are non-valued activities only. So if I can reduce moving time, if I can reduce storing time, if I reduce inspection time, if I reduce rework time, my manufacturing cycle efficiency gets improved. So moving time is moving time from one part to another part in the organization, whether it could be raw material, WAP, or finished goods. Storing time is the how much amount of waiting time, inspection time, and the rework time. So whenever there's a defectives, so what is the rework time? So manufacturing cycle efficiency is equal to processing time divided by processing time plus moving time plus storing time plus inspection time plus rework time. Okay. Next one, activity based budgeting. Now, normally in terms of budgets and budgetary control, we try to give budget for each cost center. Whereas in terms of activity based budgeting, instead of giving budgets for cost center, we try to give budgets for each activity. And against that each activity, what is my budget amount? What is the actual amount? I try to do the analysis. That is we call as activity based budgeting. So activity based budgeting is a process of planning and controlling the expected activities for the organization to derive a cost-effective budget that meets the forecast workload and aggregate strategic goals. Okay. Now, what is activity flexible budgeting? Sir, normally you prepare budget at static time for, let us assume, assuming that my output would be 100 units. Now, actual output, you have prepared the budget for 100 units. Whereas in reality, the output is 120. So when you re-revise the budget for 120 units, that is we call as flexible budget. Now that is in terms of budgets and budgetary control. Whereas in terms of activity plus flexible budget, if the number of activities get changed, if you prepare the revised budget, that is called activity flexible budgeting. Okay, next one. Now in terms of activity based costing, resources, then to activities, then to cost objects. In terms of activity based budgeting, forecasting, resources, activities, and forecast, because budget is always about forecast, right? Now, so what would we learn in terms of activity based costing? First one, we try to understand what is meant by activity. Now, I already said, sir, ABC is full when there is a huge amount of overheads, because direct cost, if it is a labor intensive, we used to have more amount of direct cost, less amount of indirect cost. In such a cases, traditional costing has given a best results. When the machineries, when the mission intensive are growing, obviously more amount of overheads being incurred, less amount is the direct cost. Now in such a case, the allocation of overheads is becoming big issue. So that is the reason. So what is the important element, or what is the important factors promoting the development of ABC is that first point is that growing overhead costs, second one is competition, third one is diversity, fourth one is different products. Earlier, company means you will produce only one unit, one type of product. Now in each, for example, if you consider ITC, even in terms of FMCG, will be number of units. Now tell me, each unit is of different. Now tell me, let us assume that if I am doing, let us assume, if I go like this, let us assume that I'm maintaining some store. Sir, let us assume cost of each rice bag is occupying 100 meters, let us assume, is giving me profit of 100 rupees. Whereas in 100 meters, I can keep 50 chocolates. Each chocolate can give me 50 rupees, which I get a contribution of 2,500. So when the diversity of products getting changed, now that tell me overheads, if I go based on number of units, if it is one bag and 50, if I divide by 51, which is not correct. So volume based is no use. So that is the reason resource consumption based has come into existence. So there are advantages and disadvantages of ABC. So if there is high amount of overhead, wide range of products, presence of non-volume related activities, that is batch level and product level activities, and if there is a competition, you need to move to ABC. You may get a doubt, sir, what happens if I do not move to ABC, sir? Obviously, there are some products, by not giving proper allocation of overheads, some cost will be shown more amount, some cost will be shown less amount. Now, obviously, let us assume there would be a concept of overpricing and underpricing. What happens in case of overpricing? The same product, let us assume, take this a calculator. This I have costed 300 rupees, whereas my competitor, by doing appropriate costing, has kept a price of 200. Tell me, customers will move to whom? The other person. Now let us say if it is underpricing, customers may come to me, but I have kept less amount of cost, I'll be incurring loss. So that is the reason pricing decisions plays a very important role in terms of modern business environment. So that is the reason you need to move to activity-based costing, correct? Then we have understood cost allocation. So in terms of cost allocation, from first overheads to activities by using resource cost driver, and then from activities to cost object by using activity cost driver, right? Then we understood how in ABC and traditional costing, the overheads are got allocated. What are the 5 stages of ABC? What are the different types of activity cost driver? And we understood what is activity based budgeting and activity based management. So ABC in action is activity based management, cost management, and activity based cost management. We have discussed cost driver analysis, activity analysis, and performance analysis. Under activity analysis, value added activities and non value added activities. Understood? Yes. Now, this is very important in terms of question number 1, which they can ask for examination. State with a brief reason whether you would recommend an activity-based system of costing in each of the following independent situations. Company K produces one product. The overhead consists of depreciation. If it is one product, the total amount of overhead will be allocated to only one product. The cost object is one. Whether it is activity-based costing or traditional costing, you need to allocate the total amount of overheads to only one cost object. That will not make any difference. So do not move to ABC. So ABC is not recommended. Company L produces 5 different products using different production facilities. Yes, move to ABC. A consultancy firm consisting of lawyers, accountant, computer engineer provides management consultancy services to clients. So different services, different service providers, please move to ABC. Company S produces 2 different labor intensive methods. Contribution per unit in both the product is very high. The BEP is very low. All the work is carried out efficiently to meet the target cost. When you're moving with target costing, because target costing is there in CA final, because you will try to keep the cost of this product should not exceed this amount. that you are working on this target costing. Second important point, if BEP is low. When the BEP is low means overheads is less. So overheads is less means no need to move to ABC, because when the overheads are high amount, then only we need to move to ABC. Okay. So this is not required. Now, what are the questions we have expected to discuss in terms of activity based costing? So if in terms of activity based costing, suitability of ABC with the theory number 1 we have discussed. So let me move to our marathon. So what did we discuss? In terms of suitability of ABC with theory question number 1 we have completed. Activity cost object, cost driver, activity cost pool is completed. Difference between traditional costing and activity based costing is completed. Cost distortion I've explained. Stages in ABC, 5 stages I've explained. Hierarchy in ABC explained. ABM and analysis under ABM is completed. Manufacturing cycle efficiency is completed. Activity based budgeting is completed. 3 important points. What are 3 important points? The total direct cost under both the methods is same. The total overheads under both the methods is same. Total profit under both the methods is same. What makes a difference is that individual product wise cost gets deferred. That is only the concept under activity based costing. Then we are decided to discuss problem number 1, problem number 2, problem number 3, problem number 5, and problem number 6. Okay. Now let us move to problem number 1. Aerotech Limited manufactures and sells 2 types of wooden deck chairs, deluxe and tourist. Annual sales in units, direct labor hours per unit, and total labor hours per year are provided below. Deluxe deck chairs, 200 units at 5 direct labor hours per unit, so total 10,000 hours. Tourist deck chair, 40,000 hours, so 10,000 units, 4 hours per unit. Cost of direct cost of materials and labor for 1 unit of each product are given below. Direct materials 25 rupees, tourist 17. Direct labor 12 rupees per direct labor hour, 60 and 48. So how many hours? 60 divided by 12 means 5 hours, which is this one. 48 divided by 12. 48 divided by 12 rupees, which is 4 hours. Then they are given the manufacturing overhead cost totals 8 lakhs per each year. This you need to consider, sir. Very important. 8 lakhs. If I add all activity cost pool of overheads, it should be 8 lakhs. The first point you need to check in the examination. If my total manufacturing overhead cost is 8 lakhs, the sum of all activity cost pools should also be 8 lakhs. See here, this 8 lakhs and this 8 lakhs. 8 plus 80,000 plus 1,50,000 plus 1,60,000 plus 70,000 plus 90,000 plus 2,50,000. So what is the total amount? 8 lakhs. So activity is given. Activity cost pool is given. What is the third thing you need? Activity cost driver. This is given in the brackets. That is activity measure. So labor related, go by direct labor hours. Mission setups go by number of setups. Parts administration go by number of parts. Production orders go by number of orders. Material receipts go by number of receipts. General factory go by mission hours. Now, so activity is given, activity cost pool is given, activity cost driver is given, estimated activity base. This is my estimated activity base. Because in labor related, what the total labor? We see here 10,000 plus 40,000. How much amount? 50,000. Correct? Next one, mission setups. 3,000 for deluxe, 2,000 for tourist. How much total? 5,000. Parts administration. 50, 30, total 80. Production orders, this is 400 here. So 100, 300, 400. Material receipts, 750. Each one is 150 and 600. General factory, 40,000, 12,000 plus 28,000. How much amount? 40,000. So total amount is equal to how much amount? 8 lakhs. So you need to check in the examination whether my total manufacturing overhead cost is sum of all the activity cost pool. Clear? Now, you know activity cost pool, you know estimated activity base. Please find out activity cost driver rate. How, sir? 80,000 divided by 50,000, 1.6. 1,50,000 divided by 5,000, 30. 1,60,000 divided by 8, 2,000. 70,000 divided by 400, some amount. 90,000 divided by 750. 2,50,000 divided by 40,000. You find out the rates. Now, once you work out the activity cost driver rate, what we need to do? We need to find out cost of each object. What is my cost of each object? Deluxe and tourist. So direct material, direct labor is common. Now what we need to do is that, now tell me for deluxe I am doing, Amma. Now how will you work out deluxe cost? 10,000 into 1.6. Correct? Next one, mission setups, 3,000 into 30. So respect to estimated base into activity cost driver, you will get the total amount of overheads. That amount divided by how many units you have produced. How many units in terms of deluxe deck chair? 2,000. Tourist deck chair, how much amount? 10,000. So for that, you need to add direct material, direct labor, which is prime cost. Overheads you will allocate for total. You will go with the per unit rate. If you add these three, you will get what amount? Total cost object cost of the cost object. That is deluxe deck chair, tourist chair. What did they ask you in the question? Required classify each of aerodeck activities as unit level, batch level, product level, and facility level activities. Now labor related, which is unit level because it is based on number of labor hours. Mission setups, batch level. Parts administration, product level. Production orders, batch level. Material receipts, you will not receive for each item, right? It is a batch level. General factory means facility level activities. Assume that company applies overhead cost to products on the basis of direct labor hours. Direct labor hours means compute the predetermined overhead rate that would be used. How will you work out predetermined overhead? Please remember our standard costing. Budgeted overhead divided by budgeted hours. What is my budget overheads? 8 lakhs. What is the total budget hours amount? 50,000. So 8 lakhs divided by 50,000. How much amount? 16 rupees, correct? 8 lakhs divided by 50,000. How much amount? 16 rupees. Now, in case of volume, what it says is that determine the unit product cost of each product using the predetermined overhead rate computed in point number 2 above. That means in terms of traditional costing, you are not worried about your activities, right? Now I know direct material cost 25. I know direct labor cost is 60. Overheads, what is the predetermined rate of 16 rupees? How many hours I'm using for deluxe? 5 hours. 5 into 16, how much amount? 80 rupees. That means the cost of the cost object would be 25 plus 60 plus 80. That's it. Under traditional costing. Under tourist costing, 1748 is common. Now tell me how many hours? 4 labor hours. 4 into what is the predetermined rate? 16. 16 into 4, how much amount? 64 rupees. So this is the under traditional costing. Assume that company uses activity-based costing to compute overhead rates. Compute the activity rate. Activity rate means activity cost driver rate. Activity cost pool divided by estimated activity base. Correct? Now, by using that rates, find out the cost of overhead that would be assigned into each unit of product. Now tell me, so for example, in terms of labor, 80,000 divided by 50,000, how much amount? 1.6. How much you allocate to deluxe? 10,000 into 1.6, 16,000. how much you'll allocate it to tourist? 40,000 into 1.64,000. Total will be equal to how much amount? 80,000. Similarly, you will do for remaining all the 5 activities. Now, you will get the total amount of overheads that would be assigned. The total amount of overheads divided by number of units. How many number of units in terms of deluxe amount? 2,000 units. So you will get per unit. So that per unit rate, you need to add it to direct material and direct labor plus overhead amount. You will be getting the cost unit. Okay. So determine the unit product cost of each product. Compare this cost to the cost computed in point number 2 above. That means what is the cost under traditional costing? What is the cost under activity? So obviously, whenever there are more amount of batch level and product level activities, there would be a chance of the ABC will give you approximate accurate amount. Traditional costing may not give you accurate amount. Okay. So let us check that answer also. Now see here. Now see here. Now in this question is what if you see here, traditional costing 25 plus 60 plus 85. There is a prime cost. Production overhead 16 into 5 hours, 16 into 4 hours. So you got this amount, right? In terms of activity cost driver rate, what is activity cost pool divided by estimated activity base? So you'll get activity cost driver rate, correct? Then, so how will you work out activity based costing? So total units produced 2,000 and 10,000. So all my activities amount I'm assigning to cost object. Total amount is 3,16,500 divided by number of units 2,000. Correct? So I'm getting what is the overheads amount both the cases. So 243 rupees, 113 rupees. Whereas in the deluxe it is showing 165, 129 understand under traditional cost. Now it is 243 and 113 because deluxe, even though production is less, they have consumed more amount of resources. Tourist, even though volume is more, they have consumed less amount of resources. That is the reason difference under both the methods is given 165, 243.25, 129, 113.35, and 15.65. So this is what I'm calling as product cost distortion. One product overpriced under one method and underpriced in another method, correct? So this, to eliminate the cost distortion, activity based costing plays very important role. Okay. Now, next point. Next point I have decided to discuss. Next point in activity based costing. What is the next point? Gross, our second question. You see here, the important point I want to highlight in this question is that there are 4 types of overheads. Okay. In fully mechanized factory means overheads would be more. They can move to activity based costing. Here, gross production is 2520, 2810, 3010. So remaining everything is okay because this is also important point. All inventory units are produced and sold. That is the reason there is no opening stock and closing stock, right? And for each point they are given, let us assume product A needs no advertisement. It is readily consumed by diabetic patients. Advertisement cost, including the total selling overheads, is 83,000. So that means, so whatever the advertisement cost, we need to apportion between only B and C. Okay. Now, okay. Now here in terms of 2,520 defective units, how much amount? 20. So how many units, or I can say how many units I'm getting for each production run? 2,500, 2,800, 3,000. Now they said how many production runs. Okay. So you can work out how many production runs they have worked out. Now, what I wanted to highlight here is that when you're working out the profitability, normally what majority of the students they do is that, sir, why to waste time, sir? Number of units into selling price minus prime cost, I'll take it for contribution. From that, I'll reduce overheads, you'll get profit. But here, what did they say is that all good units are produced and sold, and nothing is said about the defect units. That means, let us assume I have done only one production run in terms of A. Now tell me how many units I will sell. Good units are 2,500. Now you'll get sales only for how many units? 2,500. But you are producing how many units? 2,520. That means sales you should consider only for 2,500, whereas cost you should consider for 2,520. And if you are getting any amount of realization from defect units, please reduce from this cost. What majority of the students they do is that whatever is the number of units sold, for that only they'll try to find out the cost, which is absolutely wrong in this case. Whereas my sales is for good units, which is 2,500, whereas my cost I'm going to incur for how many units? 2,520 units. Correct. Now, if you can see how many units you are selling for A, 25,000. That means how many production runs? Each production run, good units are 2,500. That means 25,000 divided by 2,500, 10 production runs. 56,000 divided by 2,800, 20 runs. 27,000 divided by 3,000. How many runs? 9 runs. Now, see here, sales is for 25,000. Production cost is for 2,520 into 10. How much amount? 25,200. Whereas if we come here, 56,000, 20 production runs and sales is for only 56,000, cost is for 20 into 2,810. How much amount? 56,200. Whereas in this case, sales is for 27,000, sales is for 27,000, cost have incurred for 9 into 3,010, 27,090. So this is only I want to highlight in this point. So sales is for good unit, production cost is for number of units, including defective runs. And remaining amount of overheads is common. So wherever it is set specifically, you'll allocate. If it is not set specifically, going by activity base, you'll work out. Okay. If we see here, product B needs specially packed before being sold so that it meets competition. 54,000 was the amount spent for the month in specially packing B, and this has been included in the total selling overhead cost. So out of the total selling overhead cost, 54,000 should be given only for what amount? B. Okay. And remaining advertisement cost, 83,000, you should give it only for B and C. Okay. Remaining point is, and all other manufacturing and selling overheads are conventionally allocated. Conventional allocated means on a traditional costing method, it is allocated based on number of units sold. Whereas under activity based costing, it is based on their resource consumption. Okay. Right. Please remember this important point. Now, this is very important. Problem number 3 is very, very important because I'm expecting that at least 10 marks you'll be getting from activity based costing. Now, a company produces 3 products. Normally in the examination, what we expect is that activity would be given, activity cost pool would be given, activity cost driver would be given, estimated activity base is given. We'll try to find out activity cost driver rate, and then we try to assign activity cost driver rate to activity cost object. But this question is very important. Units produced and sold, they are given. Direct material cost, direct labor cost is given. So it is same under both the methods. Mission hours per unit 0.5, 0.4, 0.3. That means how many mission hours per PM? Each mission hour, each unit is taking 0.5. That means 36,000 into 0.5, 18,000. 48,000 into 0.4, 19,200. 96,000 into 0.3, 28,800. Now, if I add all these three, how many total mission hours, Amma? 66,000 mission hours. Now, the total production overheads are absorbed on mission hour basis, which is under traditional costing. The rate is 60 per mission hour. Now, tell me, how will you normally calculate mission hour rate? Mission hour rate is equal to one minute. How will you calculate normal mission hour rate? Total overheads So total overheads divided by number of mission hours is equal to mission hour rate. Here I don't know total overheads. I know mission hours. I worked out some mission hours should be somewhere about 66,000. So 60,000, 66,600 into, is it correct? 18,000, 48,000 into 0.4. 96,000 into 0.3. 66,000, right? 66,000 into 60, how much amount? 39,60,000. What did I say in the first part of this session? The total overheads under both the methods remain same, whether it is under activity-based costing or whether it is under traditional-based costing, my overheads will remain same. Now, what did they given in the question? Stores receiving, they are given 5 activities: stores receiving, mission setup, mission running, packing and storage. They are given respective cost driver. What did they say? Cost of each activity as a percentage of total production overhead cost. They are not given activity cost pool separately in this question. But remember, that is the reason I always keep you to understand the concept based. Now, what did I say, sir? I don't know what is my production overheads. I know mission overhead rate. Under traditional costing, my overheads are recovered based on mission overhead rate. Now I know total mission hours are 66,000. What is my mission overhead rate? 60. What would be my overheads? 39,60,000. Sir, I know that whatever the overheads under traditional costing remains the same in activity-based costing, because ultimately the overheads only you are allocating. One is based on cost centers, second one is based on activities. That means the total 13,60,000 I need to allocate based on this percentage: 25%, 20%, 25%, 16%, and 14%. That would be the activity cost pool. So 39,60,000 into 25%, 9,90,000. So like this. So you know activity cost pool, activity cost driver, estimated activity base. This total is also not given. So, okay. 1,200 plus 1,500 plus 3,900. So 2,700 plus 6,600 I'm getting. Similarly, second point, similar third one. So based on this estimated activity base, activity cost pool, you'll work out cost driver rate. Now for each PQR of cost object, so you will go based on calculating overheads. Okay. So that is what they ask you. Calculate total production overheads, 39,60,000. Prepare product cost statement per unit under traditional absorption costing. Simple. 60 plus 30. How much amount? 90. What is the mission hour rate? 60. How many hours a month? 0.5. What is the overhead amount allocated under traditional costing? 60 into 0.5, 30. 60, 30 plus 30, 120 rupees. Similarly for Q and R. Calculate the cost driver rates. The activity cost pool is worked out. Estimated activity base. Then you find out the cost driver rate. Similarly, product cost statement under activity based costing. So the direct material cost and direct labor cost remains same. Then you need to work out the overheads divided by number of units. You'll get the per unit rate, per unit overhead rate. Prime cost plus overhead rate would be the product cost. Difference of cost due to absorption of traditional absorption costing and activity based costing. Clear? So this is a question they are given for 10 marks in CA final. I'm expecting this type of question will arrive even in the CA inter level. Okay. Next point. Question number 5 and 6. So in terms of ABCM, activity-based cost management, manufacturing cycle efficiency is processing time divided by what is the total time? 40 plus 2 plus 3 plus 2 plus 2 plus 1, 50, which is 90%. Okay. Now, ABC with standard costing. JET uses traditional standard costing system. Inspection setup costs are actually 1760 against a budget of how much amount? 2000. Now, okay. So both are related to overhead sale. So one is under activity based costing, another one is based on traditional costing. Correct? So budget fixed overheads are 2000, actual fixed overheads are 1760. ABC system is being implemented and accordingly the number of batches is identified as the cost driver for inspection and setup cost. Budget production is 10,000 units in a batches of 1000 units, whereas actually 8,800 units were produced in 11 batches. Now, what is my cost driver under standard costing? Batches. So I should recover my overheads based on batches under activity based costing. Find out the volume on total fixed overhead variance under traditional standard costing system. Traditional standard costing system is simple. So what is the standard recovery rate amount? Standard recovery rate is 2000. What is the budget amount? 2000 divided by 10,000 units. How much amount? 0.2. Correct? Now what is absorbed overheads? Absorbed is based on actual output. What is your actual output? 8,800 units into 0.2. How much amount? 1760. What is actual overheads? 1760. What is budget? 2000. So cost variance, absorption minus actuals 0. Volume variance, absorption minus budget 1760 minus 2000, 240. Adverse. Expenditure variance, budget is 2000, actuals is 1760. So 2000, 240 favorable. That is under traditional standard costing system. Now let me move to activity based costing. In terms of active, what is the number of batches, right? What is the recovery rate for batches? Now tell me what is the budget amount? 2000 and 2000 divided by how many batches amount? 10 batches. So how much you'll recover for each batch? 200 rupees. Now absorption is based on actual batches. What is absorbed? 11 into 200, how much amount? 2200. Absorbed fixed overhead. What is actual fixed overhead? 1760. Budget. What is the budget? What is the budget over sum? 2000. Now simple. Absorption minus actuals is fixed overhead cost variance. Absorption minus budget is volume variance. Budget minus actuals would be expenditure variance. Okay, so this is a question which they can ask you for 5 marks. And one more important question. ABC with marginal costing. A manufacturing company produces ball pens that are printed with logos of various companies. Each pen is priced at 5 rupees. Costs are as follows. Unit variable cost is 2.5. Number of setups 225 and cost driver is 40. Engineering hours is 10 and 250. Now if you see what is my setup cost and engineering cost is my overheads, correct? Now 225 into 40, correct? 225 into 40 plus 10 into 250 plus total fixed cost 48,000, total fixed cost under ABC. So sir, total fixed cost would be same, but under ABC you'll try to allocate based on activities. If not possible, you'll keep under unallocated. See at 225 into 40 plus 10 into 250. What is fixed cost under ABC? 36,500. If you remember activity analysis, cost driver analysis and performance analysis, that is only we're expecting in this question. How much? It should be only 48,000. So total amount of fixed cost we are splitting off to each activity wise under activity based costing. Compute the break-even point in using activity based analysis, sir. Sir, activity based analysis, total amount is what? 48,000 divided by what is the contribution per unit of 5 minus 2.5, 2.5 rupees. 48,000 divided by 2.5 would be 19,200 units. That is under activity based analysis. Suppose the company could reduce the setup cost by 75. What is setup cost? One activity. So cost driver rate I am reducing by 75 rupees. What is existing cost amount? 225 will become how much amount? Reduced by 75. That means new will be 150. And could reduce the number of engineering hours needed to 215. What is existing number of engineering hours? 250. It will be reduced to 215. That means the revised cost would be 150 into 40 rupees plus 215 into 10 rupees. Unallocated would remain the same, 36,500. This is how you can break down your fixed cost. Sir, if it's a total amount of fixed cost, it is difficult to reduce the fixed cost. When you are analyzing it to each activity, what happens is that you are focusing on each activity. Yes, under fixed cost, there is one setup cost. Can we reduce the setup cost? Target it. Under fixed cost, there is engineering hours. Can we reduce the engineering hours or engineering hour cost? That is how, when you break down this total fixed cost, then by doing cost driver analysis, by doing performance analysis, by doing activity analysis, we'll try to reduce the cost. Now, what would be the revised BEP? 150 into 40 plus 215 into 10 plus 36,500 remains same, because now it would be 44,650 divided by 2.5. Now, what is the revised BEP? 17,860. You want 6,000 plus 2150 plus 36,500 divided by 2.5. How much amount? 17,860. So from original BEP of 19,000, I have reduced it to how much amount? 17,860 by doing the activity based cost management. Clear? So this is one probable question in terms of examination. Okay. Question number 7, 8. This is all. Now, production support and production factory overheads both will come as a part of overheads. So total overheads, it would be 14 lakhs. So don't get confused with, sir, how to find out the total overheads. Any factory overheads, any overheads under both the methods remains what I'm same. So this is the concept related to activity based costing. So what did we learn in terms of activity based costing? First, understand what is meant by activity. What is resource cost driver and activity cost driver? What are the types of hierarchy, cost hierarchy under activity based costing? Unit level, batch level, product level, and facility level. If the number of activities, if majority part of the cost or majority part of the overhead consists of batch level and product level, please move to ABC. Otherwise, you please continue in traditional costing. Then we have worked out 5 stages in ABC. So first you should know what is cost driver, what is activity cost pool or activity cost bucket, and activity cost driver, estimated activity base, and the cost driver rate. Now that cost driver rate, by using estimated base, you will assign it to products. That is cost object. Now, if they ask you to work out product cost, means prime cost plus overhead cost. Both prime cost under both the methods remains the same. Total overheads under both the methods remains same. That is what I explained in terms of question number 3, right? Because here I have not given anything amount. By using traditional costing of 39,000, same overheads will be applicable even in terms of activity based costing. Correct? So that is one important point. We have discussed ABC, ABM, and activity based budgeting. So this is, I'm sure that if you revised it, you will get pakka 10 marks from this chapter. Okay. So we'll continue in the next chapter. Thank you. Very good morning, students. Next topic of our marathon is about budgets and budgetary control. So one of the important chapter in terms of CA inter, CMA inter, and CA final. So my expectancy from this chapter would be around 10 to 15 marks. So there would be one theory question also from this chapter, and one of the easiest chapter in working out. So let us go and learn the important topics of budgets and budgetary control. Now, in terms of budgets and budgetary control, the main concepts. So what are the essentials of budget? So these all are we are going to learn in this topic. And we also discussed that we'll be discussing 4 questions in this chapter. The objectives of budgeting. Types of budgets very important. Capacity wise budget, functional wise budget, period wise budgets, and master budget. Zero based budgeting, and we'll also discuss about performance budgeting along with budget ratios. There are 6 budget ratios which they can ask you for theory question. Right? Now let us understand what is meaning of budget. Budget is a quantitative expression of a plan for a definite period of time. So to be termed as a budget, it should satisfy the following condition. Now, what are the characteristics of budget, sir? I'll go back again. So I want to cover here. Now, first one, it is concerned for a definite future period. So budget is always prepared for the future. Budget is not prepared for the past. Budget in a simple term is a plan of actions. Okay. Now, for example, even in day-to-day life, we follow this budget. Many times we call as budget. That means, let us assume that if you are running a house, if you are a head of the house, so obviously you need to understand what is the amount of income you are getting, either way of salary or business income, etc. What are the expenses you are supposed to incur in this period? So you'll understand whether there is a surplus or deficit, right? Now, similarly for profit organization or even the non-profit organization, they should have a plan of what they are going to receive and what they are going to spend it off. Okay. Now, the budget is always for future period and it is a written document. And always remember budgets that we should not estimate, like let us assume that uh, okay, all the board of directors have came for meeting and they are expected that okay, this would be my sales, this would be my expenditure, so I'm giving allocation of budget to this department. That should not be happening. It should be a written document, and it is a detailed plan of all economic activities of a business. So economic activities includes your production, your accounts, your HR cost, your admin cost, selling and distribution cost. We discussed an activity based costing. What is an activity? An activity is an event that incurs cost. How many activities? A number of activities in organization. That means the budget should cover all the economic activities of a business. Budget is a mean to achieve business. It is not an end itself. Very important. Let us assume you have targeted to sell 10,000 units. Now let us assume if the demand is more, and if you are getting 12,000 units sale, you should not reject it. You should not say that okay, I have not planned in my budget, so let me not sell. No, budget is a means to achieve business, but it is not an end. That you need to understand. Budget helps in planning, coordination, and control. Now when you have a planning, let us assume you know that this would be my income, this would be my expenditure. You can plan properly your expenditure, right? And coordination between the departments and control. How this control can be done, sir? Even by using cost centers. If you listen to our class in terms of cost centers, what we do is that for every cost center, we'll allocate the budget. So obviously, when the budgets are achieved, that means the expenditures are in your control and the income is in your control. Whatever is a budget profit, that you can achieve it off. Now, otherwise, what we do, we need to do standard costing and variance analysis, because we have a budget plan, we have a actual results. Comparing the budget profit with actual profit is nothing but then your variance analysis. Correct? Now, obviously, in terms of budgets, all the costs would be predetermined cost. That is standard cost. That is the reason, even if you remember, in terms of introduction to standard costing and variance analysis, we try to work out budget profit. What is that? Budget revenue minus standard cost. You'll get budget profit. Whereas actual profit, how will you arrive? Actual revenue minus actual cost, you'll get actual profits. Okay. Budget is usually prepared in the light of past experiences. Obviously, now let us assume that I need to prepare a budget for an institution in the next period. Obviously, I'll take the base what we have spent in the past. For that, all the changes will be made. Then you will be prepared the budget. So these are the characteristics of budget. Okay. Budgeting is what, sir? Budgeting is budgeting coordinating the combined intelligence of entire organization into plan of action based on past performance. Budgetary control is that the establishment of budget. This is first one. Second one, relating the responsibilities of executives. So you need to prepare budget and need to give the responsibilities and continuous comparison of the actual with the budget results. Obviously, when you're doing control means, always remember, control means you'll use predetermined cost. You'll compare with the actuals. We have listened in terms of cost control under chapter number 1, if you remember. Then you will find out the difference and you will investigate the variances. So this is only the concept of budgetary control. Okay. Now, what are the objectives of budgeting, sir? Objectives is planning, directing and coordinating and controlling. This we have discussed, right? What are the advantages of budgetary control system, sir? There are many advantages of budgetary control system. First one, you'll have a control on expenditure. How will you have control on expenditure, sir? Simple understanding. So let us assume you have given a budget of 10,000 rupees for a cost center. This cost center budget amount is given in SAP. Let us assume you're following SAP system because we used to control the cost in BPCL like this. Now the budget is allocated to the extent of 10,000. So when you're posting any journal entry, you will be debiting the cost center. You will be debiting ledger along with cost center. You need to give cost center. Now, if the cost center budget is 10,000, if you are trying to post amount more than 10,000, the entry will not be posted. If the entry is not posted, so the amount will not be created to the vendor. That means if there is no credit balance in vendor, you will not make any payment. So this is how you need to control the cost by using the budgetary control system. Efficiency, yes, we'll try to understand. You are doing a evaluation. What is your standard cost and what is your actual cost? Obviously, you understand who is efficient and who is not efficient. Finding out the deviations, that is your variances. Effective utilization of resources. Now, for example, by using zero-based budgeting, you can effectively utilize your resources. Revision of plans. Sir, budget is prepared at the beginning. Now, let us assume that you are running a mining, you are working with a mining company. Diesel is the major cost. Now, at the beginning of the year, the diesel cost is somewhere about 80, 90. Now, today, the diesel cost is somewhere about 120, 130. So, obviously, there is a revision of plans. Implementation of standard costing system, because when you're speaking about control system itself, that is a standard costing system. Cost consciousness. This is very important. Sir, I have a sorry. Sir, for me, for my department, the budget allocated is only 10,000. So I always think that I should not spend more than 10,000. Okay, the cost consciousness will come when you have a budget. Otherwise, what happens if there is no budget? They go on spending the amounts. You'll not have a control on how much spent and how much to be spent also. And credit rating is also one of the advantages of budgetary control system. Now, this is very important. Classifications of budget. Now, all the budgets are classified into 4 categories. First one is capacity wise. Second one is function wise. Third one is master budget. Fourth one is period wise budget. Among this, this is very important. Capacity wise budgets. In the examination, they may ask you what is the difference between fixed budget or flexible budget. Fixed budget is also called as static budget, is also called as a rigid budget. So fixed budget and flexible budget. Now, first, let me move to fixed budget and flexible budget, which is under capacity wise, right? Now, fixed budget means it does not change with the actual volume of activity achieved. I'll tell you in simple. Let us assume you are running a business. So you thought that your sales would be 10,000 units in the current period. Now, you will prepare the budget. For 10,000 units, what is my direct material cost, direct labor cost, overheads, etc. You'll achieve, you'll understand what is my budget profit. If your actual sales is 12,000 units, or in some case 8,000 units, can I compare 10,000 units with 12,000? Can I compare 10,000 units with 8,000 units? Obviously, no. That means when you're comparing 10,000 units of budget with 12,000, you will be getting all favorable variances, correct? When you're comparing, sorry, you'll be getting all adverse variance, because for 12,000 units, your cost is more. For 10,000 units, your cost is less. When you're comparing 10,000 units with 8,000, when you're comparing 10,000 units with 8,000, yes, the budget for 10,000 units cost is more. For 8,000, cost would be less. You may get favorable variance, but that is not the thing. But what fixed budget says that, sir, irrespective of your actual volume achieved, I'll try to compare my budget of 10,000 units with actual volume. I will not make any changes with 10,000 units. That is we call as fixed budget or static budget or rigid budget. Now, second one, it operates on one level of activity. That means I said for 10,000 units means it always gives you how much to spend on 10,000 units and how much you have actually spent. Your actual volume is deferred. If your actual volume is same 10,000 units, there is no issue. Fixed budget is helpful. But whereas the fixed budget, their budget for 10,000 units, they will not change. They always works on the same operating activity. Here, all costs are fixed, variable, and semi-variable are related to one level of activity. So, variance analysis does not give useful information. Obviously, sir, when my budget is for 10,000, actuals is 20,000. Can I compare 10,000 with 20,000? No. If the budget and actual activity levels differ significantly, the aspects like cost ascertainment and price fixation do not give what a correct picture. Comparison of actual performance with budget targets will be meaningless, especially when there is a difference between two activity levels. When my budget activity level is 10,000, when actual activity level is 20,000, obviously there is no meaning in comparing 10,000 with 20,000. Then there is no use of budgetary control system in the organization. So this is called fixed budget. Fixed budget is helpful if you are running a service industry, because in service industry, majority of costs are what are fixed. Because when you're preparing budget, I'll be having variable cost, I'll be having fixed cost, I'll be having semi-variable cost. In semi-variable cost, variable part will be there, fixed part will be there. When your majority of the costs are fixed, now whether it is for 10,000 units or 20,000 units or 15,000 units, fixed cost remains what same. So in such a cases only, fixed budget is useful. Okay. Now come to flexible budget. Now what happens in flexible budget? Sir, it can be recasted, very important. It can be recasted on the basis of activity level to be achieved. Let us assume that you have prepared a budget for 10,000. So under that material cost, I'll share it. Now, let us assume you have prepared a budget for 10,000 units. Okay. Under this sales, material cost, labor, okay, variable overhead and fixed overhead. Let us assume that material cost is 3 rupees. Now tell me how much amount would be there, 30,000. Now, let us assume that your actual sales is 20,000. Now for this you have spent 70,000. Now can I compare 30,000 with 70,000? There is no use. The reason is that your budget activity level is 10,000. Actual activity level is how much amount? 20,000. What under flexible budget they do is that now they will prepare a budget for 20,000 units and they'll compare actuals with 20,000 units. If you remember, this is what I said in the first principle of standard costing. Standard should be compared with what are actuals. Now tell me, all my costs are bifurcated into variable, fixed and semi-variable. Sir, in case of variable, yes, when the activity level changes, your variable cost also changes. Per unit, how much amount? 3 rupees. How much would be for 20,000 units amount? 60,000. Then you can compare with 70,000. Like fixed cost. If for 10,000 units, if your budget fixed cost is 20,000, even if the activity level changes, fixed cost remains the same. It should be taken how much amount? 20,000 only. In case of semi-variable, we need to bifurcate between variable part and fixed part, and variable part changes with activity level. Fixed cost remains what amount? Same. Then you are preparing a flexible budget, because flexible budget is prepared at different levels of activity, because at the beginning your plan to achieve this one, but your actuals is different. I cannot compare my original budget with my actual results. That is the reason I'm recasting. Use this word, recasting my original budget into yet actual volume. That concept is called what, flexible budget. Now can I compare 60,000 with 70,000? Obviously yes. Whereas in terms of static budget, it says that you should compare 30,000 with 70,000, which is meaningless. So this is the concept of what, flexible budget. Now, it can be recasted on the basis of activity level to be achieved. This is not rigid. It consists of various budgets for different levels of activity. Now I'm having original budget for 10,000 units. Now I expect that my sales can be 12,000. I'll prepare a budget. 8,000, I'll prepare a budget. 13,000, I'll prepare a budget. 15,000, I'll prepare a budget. Now, what I'll do is that I'll try to reconnect my actual results. Now, my flexible budget volume and actual volume would be same. Then I will compare whether I have achieved my budget or not. So that is the concept of flexible budget. Here, analysis of variance provide useful information as each cost is analyzed according to its behavior. Because here behavior means variable part is different, fixed cost is different, semi-variable cost is different. Flexible budgeting at different levels of activity facilitates the ascertainment of cost, fixation of selling price, and tendering of quotations. It provides meaningful basis of comparison of the actual performance with budget targets. So this is one of the important topics, difference between fixed budget and flexible budget. Now, what would be discussed among budget on the basis of capacity is bifurcated into 1 minute. Budget based on capacity is bifurcated into fixed budget and flexible budget. Majority of the questions, they'll ask you to work out the flexible budget. Understood? Very important. Next one, function wise budget. Sir, we know that all the costs can be bifurcated into functions. Okay, now you have a sales budget. How will you have sales budget? Sales budget is simple. What is your expected volume? Selling price? What is the budget sales for each region, north, east, west, south, or you have different state wise. So the total we call what, sales budget. Production budget. Yes, how much I am supposed to produce. Production budget, you can work out opening stock of finished goods, closing stock of finished goods, sales amount, then you'll arrive how much to be produced. Okay. Plant utilization budget. So if I'm having different type of plants, so I'm having 3 factories, how I wanted to utilize that. So that is a plant utilization budget. Material usage budget, raw material usage. How will you get raw material usage? Opening stock of raw materials. Okay, add purchases, less closing stock of raw materials. You'll be getting the raw material consumption. Material purchase budget. Purchase is different. How will you arrive purchases? Opening stock plus purchases minus closing stock is equal to consumption. I want purchases. Consumption plus closing stock minus opening stock. Direct labor personal budget. If I'm having different types of labor, how I'm going to use them and how many hours I'm going to use them, how much rate I'm supposed to make payment, that will be there in the labor personal budget. Factory overhead budget, production cost budget, ending inventory, closing inventory budget, cost of goods sold budget. You'll have cost of goods sold means all prime cost, factory overheads, administration overheads, etc. Selling and distribution cost budget. Like let us assume how many salesmen I wanted to keep it, how much commission I want to pay, how many warehouses I need to maintain, how much staff I need to maintain. That is a selling and distribution cost budget. Administration expense budget. Yes, what is my audit fees? What is my accounting cost? What is my HR cost? What is my admin office buildings? So this is the budget. Research and development cost budget. Capital expenditure budget. So let us assume how much this all pertaining to revenue expenditure. How much equipment I'm supposed to procure in this period, or what is the new buildings I'm supposed to construct. So this all things comes in terms of what a capital expenditure budget. And capital expenditure budget you can prepare for more than 1 year also. Okay, that is we call as long-term budget. If you see in the newspapers, you will see that BPCL is planned to spend 1 lakh crores in the next 5 years, or Reliance is planned to spend 30,000 crores in the next 5 years. That is the long-term budget. Okay, cash budget. Cash budget is very important. Cash budget says that what is my opening balance plus receipts minus payments, what is my closing balance. So I'm wanted to explain you a little bit about cash budget importance. Now tell me, for example, if you're not planned your cash, you are foregoing your interest. Let us assume in BPCL, we used to get every day 300 to 400 crores. Let us assume surplus amount. If I do not plan properly, the same 300 to 400 crores, if I can invest in 1 day, I'll be getting somewhere about 50 to 1 lakh rupees as interest. That means taking a proper decision will impact your cash budget. So if we can plan properly, yes, I'm going to get receipts tomorrow, surplus. The surplus amount I need to invest in my mutual funds. I need to inform to the bank earlier, saying that, yes, I'm having extra amount. I'm going to invest this amount in this period. So that is the reason, that is the importance of what a cash budget. Now, sum of all functional budget is called master budget. So master budget gives you what is the total amount of revenue, total amount of expenses, and what is the total amount of surplus, that is profit or loss. We can work out master budget. So sum of all functional budgets put together we call as what a master budget. Next, last one, period wise budgets. Period wise budgets are bifurcated in 3 categories: long term budgets, short term budgets, and current budgets. What is long term budget, sir? If you are preparing a budget for more than 1 year, or you can say a period of 3 to 5 years, that is we call as what a long term budget. As I already said, BPCL plan to spend, proposed to spend 1 lakh crores in capital expenditure for the next 5 years. Now tell me, that budget is not going to complete in 1 year. That is going to complete in how many years? 5 years. So that type of budget is called what? Long-term budget. Okay. Now what is short-term budget? Short-term budgets are prepared for less than a year, like your cash budget, your raw material usage budget. So these budgets we call as what? Short-term budget. Now, what is basic budget? A budget which remains unaltered over a long period of time is called what? Basic budget. So the budget remains same. For example, like our audit fees, they says that, okay, this budget 1 lakh rupees for every year. That's it. Management will not revise, auditor will not change. That will go like that only. Current budget, a budget which is established for use over a short period of time and is ready to the current conditions. So short-term budget is for less than a year. Current budget, for example, for 3 days, for 10 days. So for current conditions, if I prepare a budget, that is called what? Current budget. Fixed budget and flexible budget, I've already explained. But if you have got a question to write about fixed budget and flexible budget, first you write down these definitions. Very important. CIMA, Chartered Institute of Management Accountants official terminology. A fixed budget is a budget designed to remain unchanged irrespective of the level of activity actually attained. That means if I prepared a budget for 10,000, if my actual activity level is 20,000 also, I will not consider what is my actual sales. I'll just compare my 10,000 with 20,000. That type of budget is called what? Fixed budget. And fixed budget is no use, no meaningless if your actual activity level differs significantly. Flexible budget. According to CIMA official terminology, a flexible budget is defined as a budget which, by recognizing the difference between fixed, semi-variable, and variable cost, is designed to change in relation to the level of activity attained. That means you may prepare a budget for 10,000 units, sir. Variable cost, fixed cost, and semi-variable cost. Actual level attained is 20,000, where variable cost will change proportionately. Fixed cost remains constant. In semi-variable cost, you will be having fixed part and variable part. Variable part will be based on actual activity level. Fixed cost remains what? Same. That's it. Sir, always remember, variable cost changes with the change in production. Fixed cost remains the same up to certain level of volume. It remains same irrespective of level of activity attained. That is the important thing. So when you're given a budget, when you are finding out the flexible budget, you need to understand that variable cost will change proportionately. Fixed cost remains the same unless there is an indication that 5% is increased, 10% is increased. Otherwise, fixed cost remains the same for the budget level. And the semi-variable part, we need to bifurcate into fixed part and variable part. And variable part will go as per variable cost, and fixed part will go as a part of fixed cost. Clear? Now, come to zero-based budgeting. Sir, what happens in organizations is that normally the tendency in the organization, if you see even in the public sectors or many sectors, you have allotted a budget to spend somewhere about 1 lakh rupees for meetings and seminars. Now, before that, I already said that normally budgets are prepared based on past expectations, right? Now, what normally organizations, the cost center heads or revenue center heads or profit center heads, what they do is that they know that, okay, like how we ask our father and mother, right? Now, if I want exactly 100 rupees, if I ask 100 rupees, my father may give me 100 rupees exactly. But if I know that whatever the amount asked, if he gives only 50%, what I'll try to do, I'll try to ask 200 rupees so that he can give at least how much amount? 100 rupees. The majority of the people, what they do is that they try to inflate the budget. When you're keeping for board approval, they try to inflate the budget and asking them to give more amount of budget. Now what they say, okay, last year I spent 1,50,000. Please increase 10%, sir. 1,65,000. Now, what is the basis of this 1,50,000? Nobody knows. What is the basis of this 1,50,000? Whether you spent properly or not. So what normally many organizations they do is that, so okay, if I don't spend in the current period, I may not get budget in the next period. So they try to spend unless even the amount is not required, they try to spend the amount. Now, obviously, what I'm going to lose as an organization, I'm losing my money. Now, to remove that effect in traditional costing, zero-based budgeting has come into picture. What ZBB says that, now what did you spend about this 1,50,000? You tell me what is the components of this 1,50,000. Based on that, I'll give it. Don't say that give me 1,65,000. You write down how we are going to spend this 1,55,000 or 1,65,000. Out of this 1,65,000, if I think that is not required, I'll remove it. If the amount is required, I'll give the budget. Zero based, no base. Normally, all budgets is based on previous expenditure. They base and they'll try to give it for the next period. Normally, let us assume that you are staying in hostel. Your father is giving 4,000. You may say that expense have increased. Now your father give me 10% extra. What your father thinks that, okay, I'm giving normally 4,000. Now he's staying outside. I need to pay more amount. So 4,000 plus some amount, he will add it. You will not ask what you are spending with 4,000. But under zero-based budgeting, you need to explain how you are spending 4,000. So that is the concept of zero-based budgeting. Can we do zero-based budgeting every year? No, it is costly. Zero-based budgeting is costly. So that is the reason what many organizations they do is that they give the budgets on traditional based budgets for a period of time. For every 10 years, they say, let us move to zero-based budgeting this year. Again, for some period, continuous budget. Then after some period of time, zero-based budgeting. So zero-based budgeting is useful, but it is costly, time consuming, etc. Now, let us come to, this is a concept of automa. It is defined as method of budgeting, which requires each cost element to be specifically justified. If you're asking to give budget of 1,65,000, normally what happens is that, sir, last year I spent 1,50,000, sir, 10% inflation, please give me 1,65,000. This is the way of asking in the normal budget. Whereas in zero-based budgeting, you need to explain why you need 1,65,000. You need to give justification for each cost element in 1,65,000. Okay. All the activities to which the budget relates are being undertaken for the first time without approval. The budget allowance is what, zero. So it assumes that earlier budget allowance is 0. Now you justify for 1,65,000. Based on that, I'll give the budget. That is called zero based budgeting. Next one, performance budgeting. Performance budgeting is morely used in terms of government organizations. So what they do is that here qualitative and quantitative aspects are considered in terms of performance budgeting. Here, not only giving budget, they try to get the input of what is being achieved. I given the fund, that is assume I given 100 crores of fund for from social development. What is the achievements I got by spending 100 crores? That is considered in terms of what performance budgeting. So establishing a meaningful functional program, an activity classification of government operation, bring the system of accounting and financial management in accordance with the classification, evolving suitable norms, add sticks, work units of performance, and unit cost wherever possible under each program activity for their reporting and evaluation. So this is the concept of what performance budgeting. So a performance budget is one which presents the purpose and objectives for which funds are required. So for which purpose you are asking for funds, and what is the cost of that program, what is the proposal for achieving these objectives, and quantitative data measuring the accomplished and work performed under each program. So you're asking fund for each program. Yes, I'll give you the fund. What are the objectives of the program and what you have achieved finally? That also I need to ask in terms of performance budgeting. So this is morely used in terms of government organizations. Okay. Last important topic is in terms of budget ratios. This budget ratios we have already worked out in standard costing. So I'll explain here. Now, budget ratios, efficiency ratio, this you all know, right? In terms of hours, stand hours by actual hours. In terms of output, actual output by standard output into 100. Sir, if you are facing a problem to remember this formula, simple. I have one unit. I need to complete in 10 hours. That is standard. I complete in 11 hours. Whether I'm 100% efficient or less than 100% efficient, less than 100%. 10 by 11 or 11 by 10, 10 by 11. What is 10 stand hours? What is 11 actual hours? Okay. Next one, activity ratio. Activity ratio, if you remember, activity ratio is equal to efficiency ratio into capacity ratio, right? Efficiency ratio, what? Stand hours divided by actual hours. Capacity ratio is actual hours divided by budget hours. Actual hours and actual hours get cancelled. Stand hours divided by budget hours is activity ratio. Calendar ratio. If you remember our fixed rate cost variance, first we'll give effect of calendar, right? So how many days is available? How many days is worked? So available working days divided by budget working days. This is budget, this is actuals. Standard capacity usage ratio also we have worked out in one question in standard costing. Budget hours divided by maximum possible hours in the budget period. If you remember 10% downtime question, so this is the concept you have used there. Actual capacity usage ratio, actual capacity usage ratio, actual hours divided by maximum possible hours during the period. Actual usage of budget capacity ratio. So this is normally capacity ratio formula. So if they didn't ask you actual capacity usage ratio, if they ask you only capacity ratio, means actual hours divided by budget hours. If they ask you actual capacity usage ratio, actual hours work divided by maximum possible hours during a period into 100. So how many ratios we have worked out? 6 ratios. Tell me with me. First one, efficiency ratio in terms of hours, stand hours divided by actual hours into 100. If it is in terms of output, actual output divided by stand output into 100. Activity ratio is equal to C into E. What is C? Capacity ratio. What is E? Efficiency ratio. Stand hours divided by budget hours into 100. Calendar ratio, available working days divided by budget working days into 100. Standard capacity usage ratio, budget hours divided by maximum possible hours during the period into 100. Actual capacity usage ratio, actual hours worked divided by maximum possible hours during the period into 100. Actual usage of budget capacity ratio is actual hours divided by budget hours into 100. So these are the concepts of. So majorly they will be asking what's the types of budget, what is the essentials of budget, the difference between fixed budget and flexible budget, and the different ratios. Okay, and zero based budgeting and performance budgeting. Okay, now we'll move to questions more. Hope you have understood what are we discussed, right? So I've kept for 1 more. So you can do remaining problems from our material. No. A budget profit statement of a company working at 75% capacity is provided to you below. 9,000 units at 32 amma, 2,88,000. Direct materials, direct wages, production overhead fixed, production overhead variable. Gross profit 1,02,000. Administration, selling and distribution cost, fixed and variable cost. So variable cost means varies with sales volume. So net profit is 39,000. You are required to calculate break-even point in units and value. How will you calculate break-even point? Break-even point is fixed cost divided by contribution per unit is unit. Fixed cost divided by PV ratio is in volume, in value. Here, this is my sales value. Now, direct materials for 54,000 divided by 9,000, you'll get variable part. This is variable cost, this is variable cost, this is variable cost, this is variable cost. Sales minus variable cost, you will be arriving at contribution, right? Now, what is fixed cost? 42,000 is fixed, 36,000. So total fixed cost is 78,000 divided by contribution per unit. How much would be contribution? 54,000 by 9,000, somewhere about 6. Is 8. This one is 8. This is 2 rupees. This is 3 rupees. 6 plus 8, 14 plus 2. 16, 16 plus 3, 19. So 32 minus 19. Correct? 13. So 13 rupees. So 78,000 divided by 13. This is somewhere about 6,000 units. In terms of value, 6,000 is selling price. How much amount? 32. That would be the break-even sales in value. Okay. It is estimation that if the selling price per unit were reduced to 28, and the increased demand will utilize 90% of company capacity without any additional advertising expenditure. Now, what you are supposed to do, sir, here existing, you are working at 75% capacity. How much would be for 90%, sir? How much would be for 90%, sir? Sir, 9,000 divided by 75 into 90, correct? So then that would be 9,000 divided by 75 into 90, 10,000 units. Now for 10,800 units, the selling price would be only 28. Selling price would be only 28. And the variable cost remains same. How much is variable cost earlier? 19. So you'll get a contribution per unit 9 rupees. So 10,800 into 9 would be the contribution less. And the fixed cost remains the same. How much would be the fixed cost? 27,000 plus 42,000, which is 69,000, right? So that will be get the profit. Okay. Second point, to attract sufficient demand to utilize full capacity. Full capacity means how much amount? 9,000 divided by 95 into 100, which is 12,000. Okay. Okay. Now, would require 15% reduction in the current selling price. What is my current selling price? 32. 32 into 85%. 15% reduction means 85%. So you need to sell at 27.2 rupees. Variable cost remains the same. And 5,000 special advertisement campaign. Existing fixed cost is how much amount? 42,000 plus 20. 42,000 plus 36,000. Sorry, 42,000 plus 36,000. How much amount? 78,000. So 78,000. For that extra cost, you need to spend 5,000 rupees. So that you'll get the profit. Third point, an independent market research study shows that by spending 15,000 special advertisement campaign, the company could operate at full capacity and maintain the selling price at 32 per unit. So in third case, 32 will remain same. You will sell 12,000 units. Variable cost is same 19, and fixed cost is same 42,000 plus 36,000. Special advertisement cost of how much amount? 15,000. You need to find out the profit under point B number 1, B number 2, and C. Now you need to tell which is proposal should be adopted, which is existing profit or B1 or B2 or C. So that you need to recommend existing one, B1, B2 and C. So this is how you need to work out this problem number 4. So problem 8. I'll share the solution also. Now this question, if you see here, so sales 32, variable cost so 19, contribution getting 13, existing profit is 39,000, right? So option number 1, 90%. So 28, selling price will be reduced to 28, contribution variable cost is 19, contribution is 9. You need to work out the profit. Option 2, 12,000. So profit is 15,400. Third case, independent research activity says that extra 15,000 you need to spend additional campaign. You're getting a profit of 63,000. Tell me which is better, original profit of 39,000 or 19,200 or 15,400 or 63,000. Most majority of the students, what they always compare is these three. No, you should also compare with opening. So that you need to recommend it off. Okay. No, this is a part. Next one. Question number 12. Question number 12 is very important for CA inter level because this includes a question from financial management along with the costing part. PQR Limited is considering introducing a new product at a price of 105 per unit. PQR Limited's controller has compiled the following incremental cost information based on an estimate of 120,000 units of sales annually for the new product. Direct material cost is okay. Labor cost, flexible manufacturing support is more of variable overheads. Sales commission 10% of sale. Capacity related cost, you are increasing your capacity, like more about fixed cost or capital expenditure cost 20,000. This is a decision making. This is a decision making. In terms of decision making, what is my incremental revenue? What is my incremental expenditure? You need to find out whether if your incremental profit is positive, please accept. If your incremental profit is adverse, please reject. The average inventory levels for the new product are estimated as follows. Raw materials, 2 months of production. So total you're expecting 36 lakhs, 2 months. If you remember your working capital question, chapter of working capital in financial management, how will you calculate the inventory holding cost? Same is the concept here. So 36 lakhs is for 12, and how many months you need to hold? 2 months. Working progress, 100% complete for material, 50% complete for labor and flexible manufacturing. So for WAP include raw material, direct labor, flexible manufacturing. And finished goods includes raw material, direct labor, flexible manufacturing support. This is 100%. WAP raw material 100%, and remaining two are how much amount? 50%. So you need to calculate what is the inventory holding of raw materials, inventory holding of WAP, inventory holding of finished goods. Finished goods include raw material, labor cost, and flexible manufacturing support to 100%. In case of WAP, raw material is 100% utilized, direct labor and flexible manufacturing support is only 50%. Okay. Now, average annual inventory carrying cost not including the flexible manufacturing support listed earlier are estimated to be 12% of inventory value. Let us assume how much would be the total amount of inventory. On that, you need to consider 12% as a decision making cost, carrying cost, because if I want to introduce new product means I need to incur this carrying cost also. In addition, the sales manager expects introduction of new product result in reduction of sales of existing products from 3 lakhs to 2,40,000. That means when you're introducing new product, old product sales are got reduced. You are having opportunity cost. Opportunity costs are considered for decision making. Now, what is my opportunity cost? On this 60,000 units, I am losing 20 rupees as contribution. Why you are taking contributions at instead of sales? Sir, to make the sales, you need to incur variable cost. So both are avoided. Then you are losing contribution. So 60,000 in 20 is the opportunity cost to be considered for decision making. Prepare a statement showing the budget impact on PQR profits on the introduction of new product. Should the new product be introduced or not? Simple. We see the question. So this is the valuation of inventory. 32 lakhs divided by 12 months into 2. 6 lakhs is old in terms of inventory. WIP includes raw material and labor support, 4,50,000. Finished goods, 2,70,000. So incremental revenue, you are selling new 1,20,000 units at 105 rupees. You are getting incremental revenue of 1,26,000. What is my incremental cost? 36 lakhs is material. Now one number went. So this is for this. So material 36 lakhs, labor 24, flexible manufacture support 12 lakhs, sales commission 12 lakhs 60,000, capacity rate cost 20 lakhs, inventory carrying cost. So how much is the total inventory? If you see here, total 22 lakh 50,000, sir. 12 lakhs here, 4 lakh 50, 6 lakhs. On that inventory carrying cost, how much? And 12%. So carrying cost 2 lakh 70. Opportunity cost. What is opportunity cost? On 60,000 units, you are losing contribution. You are losing 12 lakhs. So what is my total incremental cost? 1 crore 19 lakhs 30,000. Balance, you are getting a profit. If you are getting incremental profit is positive, please accept. Because you have considered explicit cost, you have considered implicit cost and imputed and notional and opportunity cost. So all costs are considered, and if it is giving a positive, please go ahead. Okay. Right. Now, question number 15. KG Limited is engaged in production of two products K and G. 1 unit of product K requires 2 units of material A, 4 units of material B. So I'll write down here. So I'll write down 2A. That means 2 units of A, 4 units of B. G requires 4 units of material A, 2 units of material B, and 4 units of material C. Material C is locally produced in the factory of the company by using 2 units of material B. So C is 2B. So now tell me, I need A, B, C, but C is procured from B. So I need to procure A and B units. Okay. Material A and B are purchased in the open market. Production of product K, G, and C is carried out evenly throughout the year. At present, the company has a purchase 3 months requirements of A and B in one purchase. That means if my total requirement is 10,000, my each order is 10,000 divided by 4. That is 4 purchase per annum. The other particulars of the company are given below. Budgeted sales is given. Desired stock at the end of the year. Expected stock at the beginning of the year. That means what you can work out, what is the production? Opening stock plus production minus closing stock is equal to sales. Correct? Now sales plus closing stock minus opening stock is the production requirement. So how many units of K is required? How many units of G is required? Purchase price of A and B is also given. Ordering cost per order, carrying cost is given. Prepare a production budget and material requirement budget. Okay. Production budget, I will prepare sales plus closing stock minus opening stock. Based on that production, how much raw material requirement, that is A, B, C is required, you need to work out. Calculate the number of material purchased to be made if the company wants to purchase materials in optimum quantity. Optimum quantity means, please remember, economic order quantity. Now we are procuring in 4 orders. EOQ, square root of 2 into A into O divided by C. So that you need to work out. And what is the material purchased to be procured? What is optimum quantity? EOQ is optimum quantity. You need to find out EOQ. That's it. Now, question number 16 is a combination of budgets and standard costing. So here they are given sales for the next 6 months. Finished goods inventory at the end of each month is expected to be 20% of budget sales quantity for the following month. Now, for example, if you want Jan, what is your sales? 10,000. This is 10,000, 12,000, 14,000. Now, what is the closing stock? Add closing stock. 20% of the next month. What is the next month? 12,000 into 20%, 2,400 minus opening stock. Opening stock, they are given 2,700. So how much to be produced for January? I think 10,300. For February, sales 12,000. Last time closing stock would be opening stock, right? Opening stock is 2,400. Closing stock is next month production. March production, how much amount? 14,000. 20% on 14,000, 2,800. Okay. So this is how you need to calculate. Now, after working out this, material in hand and January. So now tell me, each unit of finished product requires 2 types of raw materials. Material X, how many kgs? 4 kgs. Material Y, 6 kgs. Now, from production, you can arrive to consumption. So, for example, if you want 20,000 units to be produced, X means 80,000 to be consumed. How much to be purchased of X? Opening stock plus purchases minus closing stock is equal to consumption. If you want purchases, for consumption, add closing stock, reduce what? Opening stock. So opening stock 19,000 kgs of X and 20,000 kgs of material Y is given. Monthly closing stock of material is budgeted to be equal to half of the requirements of next month production. If my next month production is 20,000, then X you need how many units? 4 units, 80,000. So closing stock would be consumption 80,000 plus closing stock is what? 50% of next month production. 80,000 into 50%. How much amount? 40,000. 80,000 into 50%, 40,000. Less opening stock. How much opening stock? 19,000. That is to be procured in that month. So purchase, you need to arrive like this. Okay. So for production, sales plus closing stock minus opening stock. For purchase of raw material, consumption plus closing stock minus opening stock. Okay. Now, our actual data for Q1 they are given. So purchase cost based on material actually issued to production, that is consumption. This is raw material consumed. Labor hours worked, labor cost they are given. So you need to work out the material production quantity, raw material consumption quantity, purchase quantity budget, and all the material cost variance, price variance, usage variance. Now see here, important point to be remembered is that you may have prepared budget for different, but actual production quantity is how much amount? 40,000. So for 40,000, you need to compare it. Okay. Now, one more important point to be remembered is budget direct labor cost for the first quarter of the year is 10,18,000. How will you get the budget direct labor cost? Budget hours into budget cost. So here you need to work out the standard rate. This standard rate you should apply for 40,000 units. So you need to compare based on that standard rate, because this is a actual hours worked, direct labor cost. So standard rate is given. So you can work out labor cost variance, labor rate variance, and labor efficiency variance. If you want, you can check the answer also more. So this is the Jan, February, March, April production budget, raw material consumption budget. So purchase quantity budget, material cost variance. Here you need to work out is budget labor cost is 10,18,000. This is only important. Budget labor hours, how much amount? 36,300 hours into 3/4 into standard rate, which is 10,89,000. So standard rate is 40. So this you need to apply. Have you got this 36,300 into 3 by 4 into S by R. So 36,300 into, how we got this 36,300 means first 3 months production, 9,700, 12,400 and 14,200. Each unit will take 0.75 hours, that is 3 by 4. 0.75 hours means 3 by 4 hours into standard rate is equal to 10,89,000. The standard rate of 40 to be considered to find out the labor cost variance. So this is a very important point in this question. Okay. Please revise, you'll understand it. Okay. So one more important question, even though I have not given in material, but you need to work out the cash budget. See, if you see our question number F, how the relation from debtors. So each month wise, we have worked out. So how much is corrected in the current month, how much from the future month, last month sales are corrected now, and 2 months journey. So this question, please work out. So whenever the amount is less, you are getting borrowed. So this is what is highlighted. So opening balance, receipts, and you will work out the closing balance. So this question also, please work it out. So that is the end of the budgets and budgetary control. So what did we learn in terms of budgets and budgetary control? We have explained what is meant by budgets and budget control system and the types of budget, that is capacity wise, like fixed functional wise, master budget, and based on time. Okay, so capacity wise, we have flexible and fixed, function wise number of budgets. Some of all this is master budget, and there is something called, which I forgot, is budget manual. Budget manual includes so all this data, so responsibility of each item, how much spent, everything is there in terms of budget manual. So that is there in our, even our material. So if possible, I'll share this also. 1 minute. So I wanted to cover 100% of the topic, Amma. So cash budget prepared, master budget, fixed budget, flexible budget. Budget manual contains many information which are required for budget, effective budgetary planning. It is a collection of documents. It explains what is the explanation, who is responsible for everything. So the total information will be given in terms of budget manual. So ZBB have explained ZBB traditional budgeting versus zero based budgeting. Difference is also important. Ratios you have worked out. And these are the different types of budgeting. Top down budgeting and bottom up budgeting is there, where the top down budgeting, top management will fix the budget, and that is to be followed by bottom level. Okay, bottom level. In terms of bottom up, the lower and middle level managements will try to prepare the budget that will be accepted by top management. Okay, so please do all these questions. Majority of the time, fixed budget and flexible budget. I already said, so if it is a variable part, when the volume changes, variable cost also changes proportionally. Fixed cost, it remains same. Semi-variable part, please bifurcate into variable part and fixed part. Difference in cost divided by difference in units, right? That is, you'll get variable that you substitute in some item, you'll get the fixed part. Okay. So decision making, whenever there's a decision making, please by incremental approach, incremental revenue and incremental cost, please consider opportunity cost also. So question they may ask you based on budgets and standard costing, please follow that also. Okay. And so this is the end of budgets and budgetary control. We'll move to service costing now. Okay. Come on, students, we have discussed budgets and budgetary control. Now we are moving to service costing. Service costing is also important chapter, because whatever I given for the first 10 chapters, I'm assuring that you'll get approximately 80 marks in the examination, right? Service costing is also called as operating costing. So normally what we discussed up to now is, about production based, like product cost, and in terms of overheads, primary cost centers, service cost centers, etc., etc. But the costing is also useful for service industries. Now, the reason is that So even for any organization, the objectives of costing is what? Cost control and cost reduction. So that is the reason. That is the reason that service costing is now applicable to service sector industries. Sorry, the costing is applicable to service sector industries that we call as what? Service costing or operating costing. Now, what are we learning in this topic? The application of service costing versus product costing. How will you ascertain the service cost unit? How will you use to have a production cost unit? Similar way for service industries, it is a service cost unit, which is important for 5 marks question in the theory part. Service cost statement. And in this chapter for CA interlevel, we are learning for transport, hotel and lodges, hospitals, IT and ITES services, toll roads, education institutions, insurance, financial institutions, and others. Okay. So out of that, I'll pick up a few questions from different services and we'll try to explain it. Okay. Now, where I can apply service costing, sir, internally within the organization, like your canteen in the organization, you can apply service costing. Or you may having a guest house in the organization, which is given for rent, that you can apply service costing. External users, if you are running an IT company, if you are running insurance company, if you are running a banking company, there you can apply the service costing. Service costing versus product costing, yes. So products are tangible, services are intangible. So there will be no inventory in terms of service costing. Use of composite cost units for cost measurement and to express the volume of outputs. Unlike in product manufacturing, employee cost constitute a major cost element. Let us assume if we take an audit office, what is a major cost? Is our printing is major cost? Our salary cost itself, because we are applying our knowledge. So we are paid. So majority of the service industries, 80 to 90% is about employee cost. Remaining is for administration and other expenses. Okay. So administration overheads usually be very significant, have a significant portion in total cost of service. Unlike in manufacturing sector, service sector heavily depends on support services and traceability of cost to service may not be economically feasible. So that is the difference between service costing versus product costing. The important point is service cost unit. Now, for example, ultimately cost unit what for which you wanted to express the cost of a product, right? Now, in terms of service cost unit, so for different types of industries, different unit costs are there. So this is very important for 5 marks question. So please revise this part before examination also. For transport services, the service cost unit is that passenger kilometer, quintal kilometer, ton kilometer, or absolute ton kilometers. So we have a different thing. So what is cost unit? Service normal cost unit is that it is unit of product or service in relation to which cost may be ascertained or expressed, right? If it is applicable in terms of service industry, that is we call the service cost unit. Okay. Now for transport services, passenger kilometer, quintal kilometer, 10 kilometers. 10 kilometers could be commercial 10 kilometers or absolute 10 kilometers. Electricity supply service, kilowatt hours, kWh. Hospital, patient per day, room per day, per bed, per operation. Canteen, per item, per meal. Cinema, per ticket wise. Hotel, guest day or room day. Banks or financial institution, per transaction, per service. Okay, for each statement, etc. Educational institution, per course or per student or per batch, per lecture. IT and IT is there is in terms of cost per project, because if you see in IT industry, they say that yes, so they say that we have got a project. So the cost of each project is one cost unit. Insurance, per policy, per claim, per TPA, etc. So this is how the different service industries and the respective service cost unit. This is not a full list. So based on the respective industry, you need to work out the cost unit. Okay. how will you ascertain the service cost unit, sir? Now, in terms of composite, ton kilometers, quintal kilometers, or passenger kilometers, you can calculate in terms of two ways. One is absolute basis, second one is simple basis. If it is a absolute kilometers, what we need to do is that respect to weight into distance. For example, I'm moving from A to B and B to A. What is the distance? 10 kilometers, 10 kilometers. Assume that you are loading 100 quintals, you are coming with 0. If it is a absolute kilometers, weight carried 10 into 100 plus 100 into 0. So your absolute kilometers is 1000. In terms of commercial ton kilometers, which is simple average, weight 100 plus 0 by 2. How many routes? 2 routes. 100 plus 0 divided by 2 into what is the distance traveled? 10 plus 10. So 50 into 20. How much amount? 1000. So sometimes it may be same, sometimes it is different. Okay. If you're carrying here 2 kilometers, that is a different. Okay. That is one is absolute 10 kilometers. Second one is commercial 10 kilometers. Now, important concept in terms of examination is that equivalent cost unit. Now, in majority of hotels and so you'll be finding out, you need to work out the equivalent cost unit. Even it is there in our material also, right? Now, let us assume that I am running a hotel. There are two types of hotels, two types of rooms, deluxe, luxury rooms. Now, for example, you have incurred what is the total cost of hotel? Let us assume 1 lakh. You wanted to find out what is the cost of each room. Deluxe, you are charging 1000, luxury, you are charging 2000. I'm having one deluxe room, one luxury room. Can I divide 1 lakh divided by 2? Absolutely wrong. Equivalent cost means equal in value. Sir, one luxury room is equal to 2 deluxe rooms, correct? That means if I want to convert everything in value, I can take into deluxe or I can take into luxury. How, sir? If I want to convert everything into deluxe, one luxury is equal to how many deluxe? 2 deluxe. Then I can say 3 equivalent deluxe rooms. 3 equivalent deluxe rooms means how much I'll charge? 3000, right? 3 into 1000. That includes 1 deluxe, 2 luxury. Or if I want to convert everything into luxury, I'll say that 1 deluxe room is equal to 0.5 luxury. Then how many luxury rooms are there? Equivalent 1.5 luxury rooms. So 1 luxury room and 0.5 luxury room, which is equal to deluxe. Now see, the value would be same. 1.5 equivalent deluxe room, equivalent luxury rooms is equal to how much amount? 1.5 into 2000. How much amount? 3000 rupees. Or 3 equivalent deluxe rooms. 3 into deluxe room cost, how much amount? Revenue 1000. How much amount? 3000. So when the cost units are different, you need to convert into equivalent cost units. Okay, so that is the concept of equivalent cost units. This is applicable in majority of the questions in terms of service cost unit. Even this is applicable even in terms of process costing also. Okay, so this is a concept of equivalent cost unit. Questions I'll explain later. Statement of cost for service sectors. In terms of transportation basis, you need to convert all the costs on the 3 heads. Fixed cost or standing charges. Standing charges means that amount remains same irrespective of whether you run the business or not. That in our nature we call as fixed cost. Second one is operating charges, which is variable cost. Normally, in majority of the other textbooks, the total transportation, they'll keep either under standing or operating. Okay, or running cost, right? But if you want, you can also bifurcate in 3: fixed cost, variable, and semi-variable, or standing charges, operating expense, or maintenance expense. So total expense you need to. So when you're preparing the cost statement, service cost statement, first you should write down standing charges, then operating or running cost, or maintenance expense. Okay, this is appropriate. You should write in examination. Sometimes many of the students I observe, they write fixed, variable and semi-variable. Instead of that, if it's a transportation service cost, then please write down like this: standing charges, operating or running cost, and maintenance charges. Okay. Treatment of depreciation, whether it is variable or not. So it is all depends upon the type of activity. If it is based on time, it is fixed. If it is based on running level, it is called variable. For example, if you remember mines, if you are based on extraction, if you're amortizing, that is variable. Irrespective of production, if you are charging same amount, that is fixed cost. Treatment of interest. So normally interest and finance charges are, those are not part of cost of sales. That will be shown separately as a part of cost of sales. And in general, interest is treated as fixed cost unless otherwise given. Okay. Now, what would be the standing charges or fixed costs, sir? Insurance, license fees, salaries to driver, conductor, cleaner. So if you are also giving driver salary plus some commission, so salary part will go as a part of standing charges. And whereas if you're paying commission, that will go as a part of running cost, right? Garage cost, including garage rent, depreciation, taxes, and administration expenses. Variable cost or running cost, petrol, diesel, lubricants, wages to driver, conductor, cleaners if it is related to operations, depreciation, any other variable cost. Semi-variable or maintenance, repairs and maintenance, tires and spares, etc. Okay. So this is the service cost statement. So you'll find out standing charges, running charges, and maintenance charges. Next one, questions I'll explain. Costing of hotel and lodges. Yes. So here we have different types of suite rooms will be there. So you need to convert everything into one equivalent, either into single room or double room and triple rooms. Then find out the cost of each equivalent unit. Then you need to work out the cost for each room. Okay. So see here, what did they do? They convert everything into single suite room suite days. So total cost divided by 1,04,000. So based on that, they multiplied. If you work out one single room suite, 2.5 times would be the double room, 5 times would be the triple room. Okay. Costing of hospitals. So you need to segregate the expenses. So that is now in terms of IT and ITES. So very important, information technology and information technology enabled services. Here the concept of project will come into picture. So in terms of project, what cost will be incurred? One is direct manpower, which is software engineer, project leaders, project managers, lead manager, and their head, etc. And support manpower like all your accounts and all these things. So you need to keep under what is hardware and software cost, travel and training cost, and effort cost. Effort cost includes lighting space, not only along with the employee cost, your writing cost, networking, communications, library, etc., etc. So costing of toll roads. Yes, in terms of toll roads, you'll be having capital cost and maintenance cost. And the concept of BOT approach has come into. What is BOT? Private players will build, they operate, at the end they transfer their ownership to government. Privatization, there's a highway which is to be done from Visakhapatnam to Jewada. Government do not have any funds. They'll ask one person, they'll ask the contractor, you build, you operate for 15 years. After 15 years, please hand over to government. Okay. That is a BOT approach. Then you'll get the toll rate. Okay. Education institutions, yes, we have education institution will have one-time fees like admission fees and deposit fees. Recurring fees you'll get in terms of tuition fees, amenities fees, sports fees, etc. Expenditure is, what are the expenditure? Operational cost and operation costing, salary of teaching, non-teaching, laboratory, computer maintenance, building maintenance, repairs, administration, finance charges, etc. So research and development cost is second cost. Third one is cost of publication of research and other materials. So one question they are given in terms of school also. This question we have explained in the exam in our day-to-day class also, right? In insurance sector, the income from insurance companies, premium on policy, they'll get commission on reinsurance, fund administration fee, and return on investment of funds. If you remember insurance companies chapter, you can understand what is the income of insurance companies. Expenditure of insurance companies, method of costing an insurance company, you can apply ABC. So find out the customer profitability properly. Okay. So other services, costing for power services, powerhouses, you need to work out cost unit is kilowatt hour. They will be having standing charges or fixed costs and variable costs and semi-variable costs. Same concept like transportation. So here the important point is that, so this is about question based. The important point is the difference between service cost unit and production cost unit, and different types of industry, different service cost unit. Correct? Now we'll move to questions. The important point to be observed here is that you need to put under proper headings of respective cost and finding out the service cost unit. Accumulate the total cost, find out the respective cost unit, and find out the cost. So that is important part in terms of service cost units. Okay. Now, problem number 3. So the important point is finding out the equivalent number of students. That is only I wanted to explain in this question. Let us come on students, let us come to problem number 3. EPS is a public school having 25 buses, each plying in different directions of the transport of its school students. In view of the large number of students availing the bus services, the bus work 2 shifts daily, both in the morning and the afternoon. The important point to be remembered: morning and afternoon. The buses are garaged in the school. This is important. The important point: the buses are garaged in the school. That means if a bus from school, it will start, it will go to place called A, pick the students from A to school, it will come in the morning. Evening, again from school, it will go to A to drop the students. From after dropping, it will come back to school. Tell me how many trips, Amma? 4 trips, or I can say 2 trips, 4 one ways and 2 trips, right? If this question is not given and buses are garaged in the school, if buses are not garaged in the school, what happens is that first it will stay in the town or in the village where the students are to be picked. So it will come to school in the morning. From school, it will go to the respective place. That means tell me how many trips it is doing. Only 2 trips, only 1 trip a day. Morning coming, evening going. If buses are garaged in the school, then you are giving 4 rows, 4 ways, 4 one-way travels. If buses are not garaged in the school, it is getting only 2 times. So this is the important point to be remembered. If you see in our, when you're studying in school also, if the buses are there in our village in the night, it will come and stay there. Morning, it will pick the students, come to school, again going back to village and stay there. That is when the buses are not garaged in the school. If the buses are garaged in the school, means evening after dropping the students, it will come back again to school. From morning, from school, it will go to village, collect, pick up the students and come to school. Again from school to village, drop the students and come back. So because when the trips are changed, our cost will also get changed. The workload of the students has been so arranged that in the morning, first pick up the senior students, and second trip playing an hour later picks up junior students. So it how the bus is going from school, let us assume a place called X, one way coming back. This is for what? Senior students. Again going, again picking up for junior students. So 2 trips in the morning, evening also 2 trips. So totally it is moving 8 one-way trips. Okay. Similarly, in the afternoon, first trip takes up junior students, and an hour later, the second trip takes the senior students home. The distance traveled by each bus one way is 16 kilometers. Now tell me per day, how many kilometers it is getting traveled? If you see here, starting from school to village, 16, from village to school, 16 for senior students. For junior students, again, this is 32, again 32. Dropping junior students 32, dropping senior students 32. Now tell me how many kilometers per day, 32 into 4, 128. When the buses are garaged in the school. If the buses are not garaged in the school, then you will be having only 64 kilometers. How, sir? From the village, it will come to school by picking up the senior students. Okay. See, not 64, now I'll tell you. So from village, it is coming to school, picking up 116 kilometers, going back to village to pick up the junior students, 16 kilometers, again coming back 16 kilometers, again dropping 16 kilometers, correct? See here, let us assume a village called X. So morning from X to school, senior students, 16 kilometers. From school to village to pick up junior students, 16 kilometers. Remember, this is the important of this garage. That is what I'm explaining. Now, from village to school, 16 kilometers for junior students. Now it rests in the school. Evening from school to village to pick up to drop junior students, 16 kilometers. Coming from village to school, 16 kilometers. From school to village for dropping off the senior students, 16. So tell me 96 kilometers. If buses are garaged, 138 or 128, 32 into 4, 128. If buses are not garage, kilometers is 96, because your fuel cost depends on the number of kilometers. Understood? This is what I want to say. In buses or garage. Okay. So in examination, you should be very careful understanding this. Okay. Now the school works 24 days in a month and remains closed vacation in May and June. That means 10 months only traveling. Fees you collect for 12 months. The bus fee, however, is payable by the students for all the 12 months. And whereas cost is incurred for 10 months, that you need to understand. So driver salary, license fees, everything is given. Each bus gives an average of 10 kilometers per liter of diesel, because based on KMPL, you need to work out. The seating capacity of each bus is 60 students. The seating capacity is fully occupied whole the year. Now, the school forms differential bus fees. This is what I wanted to highlight. Sir, every student I cannot fix same fees, because some students are coming from different places. How, sir? Students are pricked and dropped within the range of 4 kilometers, 8 kilometers, and 16 kilometers. Bus fees, 25% I'm only collecting from it. The full fee is 100. I'll collect only 25 from the student who is coming from 4 kilometers. 50 rupees I'll collect from the student who is coming from 8 kilometers. Full fees of 100 I'll collect. Now, how many students of availing this bus facility? Remember this, very important. Total, how many students are there? 120, because senior students are 60, junior students are 60. Now that means 120 into 15%. How much amount? 18. 120 into 30%. 36. 120 into 55%. 66. So these are the number of students. Now tell me, I need to convert everything under one type of equivalent units now. I can take based on 4 kilometers or 8 kilometers or 16 kilometers. Okay. Now tell me, if I convert everything into 4 kilometer students, one 4 kilometer student, one 8 kilometer student fees is 2 times the 4 kilometer students. One 16 kilometer student is 4 times the 4 kilometer students. That means if I want to convert everything into 4 kilometer students, 18 remains 1 because the fees is same. 36 2 times of 4 kilometers. 66 students who are coming from 16 kilometers, I'll be converting into 4 times the fees of 4 kilometer students. Then you'll get equivalent units. The total cost divided by this equivalent units. Then you'll get the cost of 4 kilometer student. Double would be the 8 kilometer student cost. 4 times would be the 16 kilometer student cost. So this is important. So this I'll show you the solution also. Share them. So this is question number 3, right? See here, question number 3. See here, how many students? 4 trips, right? So equivalent 4 students, total 120 students, 15%, 30%, 55. So you'll get 354, 1 by 4 equivalent student. Total cost you'll divide it by 354, you'll get 59.34. So if the student is coming from 4 kilometers, I'll charge 59.34. If the student is coming from 8 kilometers, I'll charge 2 times 118.68. The student is coming from 16 kilometers, 4 times the equivalent. Or you can convert into everything into 16 kilometers. Then what happens is that 18 divided by 4, because 116 kilometer student is 4 times the 4 kilometer range, right? So 4 kilometer range is 1/4 of 16 kilometers. 8 kilometers is half of the 16 kilometers. 16 kilometers remains 16 kilometers. Then it will be 66. This 36 would be 18. 18 would be 4.5. So then you will get the full fare 16 kilometers equivalent student cost. Then you'll get 237.36. Half of that would be this one. Half of this would be this one. So you can convert into any equivalent cost unit. So that there is no fast rule that you should convert into 1/4, or you can convert into 8 kilometers rate, or you can convert into 16 kilometers student also. Okay. So this is the important point in this question number 3. Next question. In order to develop tourism, ABCL airline has been given permit to operate 3 flights in a week between X and Y cities, both sides. The airline operates a single aircraft of 160 seats capacity. The normal occupancy is estimated to be 60% throughout the year, 52 weeks. Even though I have a capacity 160, normal occupancy is only 60%. The one-way fare is 7,200. One-way fare going one way. The cost of operation flight means one flight. Flight meaning is moving from one place to another place. Food cost 96,000 per flight at a one way. Food served on board on non-chargeable basis 125. Commission, this is important. 5% of fare applicable for all bookings. I don't know what is sales on 5% on the one fare. 7,200 into that amount. Aircraft lease 3,50,000. Landing charges 72,000 per flight. Calculate net operating income per flight. The airline expects that its occupancy will increase to 108 passengers per flight. The fare is reduced to 6,720. Advise whether this proposal should be implemented or cost. If the number of passengers increased, variable cost will increase, fixed cost remains the same. So if the profit changes, if the profit increases, we'll accept the proposal. Otherwise, we'll continue with the existing one. So question number 5, right? See here, 96 passengers, you are getting 6,91,200. Fuel cost, food cost, commission, fixed aircraft lease and landing charges, you are getting 1,26,640. If revised operating, if 108 passengers are there, commission will also change. Food cost is also changes. And aircraft lease and landing charge remains same. You're getting a profit of 1,57,972. So commission changes because your revenue changes. Food cost changes because of changes in the number of passengers. So profit increases, you can accept it. Okay. Next one. A city health center provides health and other related services to citizens who are covered under insurance plan. The health center receives a payment from the insurance company each time any patient attends the cost center from consultation as under. Here I'm getting income from insurance company. I'm also getting income from patients. From insurance company, if no treatment, 60 rupees I will get. Minor treatment, 250 rupees I will get. Major treatment, I'll get 500. In addition, the adult patients will have to make a co-payment, which is equivalent to the amount of payment for the respective category of treatment made by the insurance company. So for example, if it is a no treatment, I'll get 60 from insurance company, I'll get 60 from patient. If it's a minor treatment, I'll get 250 from insurance company, 250 from patient. If it is a major treatment, 500 from insurance company, 500 from patient. However, the children and senior citizens are not required to make any such co-payment. Remember, if it's a children, I'll get only from insurance, not from patient. Children, senior citizen. The health center will remain open for 6 days in a week for 52 weeks in a year. Each physician treated 20 patients per day, although the maximum number of patients that could have been treated by a physician or any working day is 24. Normally, I have a capacity to each physician can treat 24 patients, but normally the average treatment is 20 patients. Okay. The health center receives a fixed amount of 2,25,280 per annum for promotion of health products from the manufacturer. So this 2,25,280 will reduce it from the cost. The annual expenditure of the health center is estimated as follows. Materials and consumables 100% variable, 22,30,000. Staff salaries per annum per employee fixed. Physician 4,50,000. Assistants 1,50,000. Administration 90,000. Establishment and other operating costs 16 lakhs. The non-financial information is as under. How many physicians are employed? 6. Assistants 7. Administration staff 2. Patient mix is important because here from adults, if the adult patient, you'll get amount from insurance from patient. Depends upon 3 treatments: no treatment, minor treatment, major treatment. If it's children and senior citizen, I'll receive amount only from insurance company, not from patient in case of any type of treatment. Okay. Mix of patient appointments. Sir, out of, let us assume 100 patients comes, out of 100 patients, 50 would be adult, 40 would be children, 10 would be senior citizen. Out of these 50 adults, 70% is no treatment, 20% is minor treatment, 10% is major treatment, because the revenue is arrived only based on this. Calculate the net income of the health center for the next year. Determine the percentage of maximum capacity required to be utilized next year in order to break even. Now, we go to the solution. Diesel. See here. Number of physicians are there, how 6, because ultimately patients will come based on treatment of physicians only. Okay. Nurses and based on that, you will not get any patients. So 6 physicians are there. Each physician will treat 20 patients per day for 6 days for 52 weeks. So total, how many patients will get? 6,240. Out of this 6,240, what is the maximum? Maximum patients that can be treated is based on 24, 6 days and 52. But normally they treat only 26 and 52. 6 patients, 6 physicians, 20 patients, 6 days, 52 weeks. Maximum 6 physicians, 24 patients, 6 days, 52 weeks. Because this is for break even, right? Calculation of patient mix and treat mix. So out of this 37,440, mix is like this. 50% is adult, 40 10% is children, 10% is senior citizen. Out of this 18,720, treatment mix. This is a patient mix. This is a treatment mix. 70% is no consultation. 20% is minor treatment. Major treatment, how much amount? 10%. Correct? Similarly, children and senior citizen. So you'll get total number like this. Now, how will you calculate income, sir? Sir, from this 26,208, if it is a no consultation, I'll get 60 rupees from insurance company. 250 rupees from, correct? 250 rupees, I'll get it from ₹250, I'll get it from minor treatment. Major treatment would be so 250 from minor treatment, 500 from major treatment, right? You'll get 53,16,000 from insurance company. What about from adults? Sir, the reason is that from children and senior citizen, I'll not get any amount. From adults, if it is 13,104, no consultation, 60 rupees. 3744, 250 rupees. 1872, 500 rupees. 26 lakhs, I'll get it from 26 lakh 58,240. I'll get it from patients. 53 lakh 16,000, I'll get it from what? I'll get it from insurance company. So total income is like this. So total income, another income 2,25,000 added. So all the expenses. So break-even point is that contribution from patients. So income minus variable cost divided by number of patients. Okay. So 34,580 is patients. What is the percentage of break-even as a percent of maximum capacity? 34,585 divided by 44,928, which is maximum patients. So you need to operate at 76.977% of total capacity for break-even part. So this is the important point in this question. So 10th question is also similar, Amma. It's the important point to be highlighted is this one. Rent to be charged. Okay. Rent of cottage ward to be fixed at 2.5 times of general ward, and the deluxe ward is twice as the cottage ward bed. So if your general ward bed is 1 rupee, cottage ward would be 2.5, and deluxe would be 5. So this is an equivalent concept. So you need to convert total cost under equivalent. Either you can convert into general ward bed, or you can convert into cottage ward bed, or you can convert into deluxe ward bed. So then you find out the cost unit, then you find out the rate. The other point is to be understood is that here you need to find out the rate, but 5% of total taking. So you don't know what is the rent. 10,000 is fixed, remaining is total taking. If my total taking is 100, 5 rupees should be given for building owner, and the profit part. What is the profit part here? 20% is the profit part. So all your cost should be equal to 75. 8% GST is different. Okay. So the total cost will be equal to 75. Then you find out the rate to be charged. And if you are converting into deluxe bed, general bed, 2.5 times would be deluxe bed, and 5 times would be the cottage ward bed. Correct? Yes. Question number 10, right? So I'll show you here also. So here, so gross rent less you need to reduce. Total amount you are getting 23,49,000 excluding variable rent. So general ward bed, so you are converting to general ward bed because total 36,000, 14,000 deluxe ward bed. Additional bed, general ward bed 600 you are using. So total bed days would be this one. And you are converting everything into general ward bed, you'll get 29.83. So rate including GST, you need to add another 8%, correct? So profit margin, variable rent is 5% on total takings, net operating cost. See it. If you understood 100 rupees to be rent collection, remember these points. This is what I have. So if it is 100%, total taking would be 108. 20% is profit margin. So total cost would be 8. And 5% you should give it per building. So remaining all cost is equal to 75%. 23,49,000 is equal to 75%. Track it for 100%. Then divide by total bed days, general ward bed days. 29.83 into 2.5 times would be the cottage ward. 5 times would be the deluxe ward. Add the GST. Okay. So in the question they said take it for 360 days. Okay. Next one. So hotel is also sports center. So 100 single rooms, 20 double rooms, sports center, swimming hall. The hotel has a shopping center at basement and specialty restaurant at the top roof. Information is given. So per restaurant 1 lakh sales sum 30% fixed cost. Contribution is 30%, fixed cost is 10 lakhs. Sports center swimming pool is likely to be used by 50 non-residents daily. Average contribution per non-resident is estimated to be 50. Fixed cost is 5 lakhs. Average contribution per month from shopping center is 50,000. Fixed cost is 6 lakhs. So you need to convert total rent, single and double rooms. So based on rate, so that there is a margin of safety of 20% higher of rooms. The rent of double room should be kept to 120% of single rooms. It's not 2 times. If single room is 1.2 rooms, 1.2 equivalent single rooms is equal to 1 double room. That is a concept. So this in the total chapter, equivalent unit concept is very, very important. Evaluate the profitability of restaurants, sports center and shopping centers separately. So this is a simple question which can do it. This is also charitable institution number. So I'll take it from your institute material. So I'll come from top so that if any question, important points in each question, I'll try to explain. Because here, each question, if I want to do, it will take a lot of time. The important points I'll explain because it is not of theory, more about practice. So this charitable CC unit, rent per month, supervisors, nurses, ward boys, doctors paid, other expenses they are given, which are variable and which are fixed. So it is estimated that 150 days in a year, 35 beds are occupied. For 85 days, only 25 beds are occupied. The hospital hired 750 beds at a charge of 100 per bed per day to accommodate the flow of patients. However, this does not exceed more than 5 extra beds over and above the normal capacity of 35 beds on any day. So here you need to calculate number of patient days. 35 beds into 150 days, 25 beds into 80 days, extra beds 750, total how much amount? 8,000 bed days. So income you'll work out, all variable costs will work out, reduce fixed cost, contribution per patient per day. So you're getting sales minus variable cost. So 1,299. Break-even point would be fixed cost divided by contribution, 3,471 patient days. So one question in transportation also you can work out. So one Agra to Delhi, there is a question. So here you need to. And one more important point is that this one. This also I explained, right? So assuming 75% earlier question, 70 GST, because 5% is for rent, 20% is margin. You'll work out the single room. 2.5 times would be the double room, 5 times would be the triple room. Okay. ITS. So here you will go by based on project, right? So software engineering cost, project leaders, project manager, repairs and maintenance, administration overhead. Project duration is for how many months? 6 months. One project leader and another 3 software engineers are involved for the entire duration of the project, whereas project manager spends 2 months efforts during the evaluation of the execution of the project. Total expense incurred for the project. 2 laptops were purchased and life is to be 2 years. So software engineers full will be given, project leaders full, project manager only 2 months, annual 6 lakhs. So 2 months means 50,000 because on 2 projects, right? So per month is 50, 2 months is 1 lakh. So total salary, overheads, travel expense, depreciation, total project cost would be 13 lakh 75,000. If you get a question like this, the marks are inside your pocket. Toll road also. So what is the total cost? Divided by rate per vehicle. So how many vehicles per month? 10 lakh vehicles. Cost plus 25% margin, 24.35. So how many vehicles? Total estimated vehicles by 10 year. So for 1 month you are working out. So it will be 10 lakhs. Education institution, already I said, number of students. So each item wise you need to work it out. Okay, profitability. Insurance companies, this is also measure of professional protection plus each item wise. So marketing support, operations, IT costs and support functions. Total cost divided by number of policies you'll get. Insured vehicle also will get. So this is the important topic in terms of service cost unit. So more important point to be remembered in terms of service cost unit is that understand an equivalent unit, you need to prepare a proper service cost statement and proper service cost unit, and you try to work it out what is the cost per each service cost unit. Equivalent concept, please be careful. So that is only I'm expecting, and surely you'll get a question here in this chapter. What is important is that reading the total question, understanding each point, like garaged, that only one word can change your total answer. So you should be very careful with respect to that words. So you practice as number of questions in the service cost and service costing. So and theory part of finding out the service cost in it. Okay. So this will give you the best chapter. Like we have discussed marginal costing, we have discussed talent costing, we have discussed activity based costing, we have discussed budgets and budgetary control, we have discussed service costing. I'm sure that from these 5 chapters you'll get 50 to 60 marks. So that is the importance of the chapters I take. Normally when I do it for CA final also, first the complicated and tough topics will be dealt so that you have time to revise. So you need to first, the important thing is that you are listening marathon, you prepare our material, you prepare our institute material, ICA material, then try to understand each point. Reading the point itself will give you the answer. So don't get confused in the, I'm sure that you may not get same questions in the examination, but the concepts will remain the same. Understood? That is the importance of this marathon session. Yes, let us move to employee cost. Very good morning, students. So the next chapter we are discussing in marathon session is about employee cost. It's also called as labor cost, sometimes in terms of cost and control of labor also. Okay, so this is to be chapter number 6 of marathon session. So very important chapter because the elements of cost includes material, labor and overheads. So we have not discussed material and overheads. Now we are moving into employee cost. Right here in this chapter, it is important from theory point of view and along with the problematic point of view. So the object of this marathon session in respect of employee cost will be discussing the treatment of idle time and overtime and the premium, Halsey premium plan and Rowan premium plan. We'll be discussing the labor turnover, causes of labor turnover and effects of labor turnover, job evaluation versus merit rating, and the computation of profit foregone due to employee turnover. And we have also selected 6 questions for discussion in terms of marathon session. Okay. Now, so when it comes to employee cost, students, please be very careful with the material chapter, labor chapter, because a lot of concepts they're asking in terms of theory point of view also. So I'll not be discussing total theory. I'll be discussing what is required, what is important only. Now, first important point is that direct labor costs and indirect labor costs. So direct employees, those are engaged in the production process, and the amount is identifiable and allocable to cost unit, and there is a relationship between volume and the cost. Indirect employee costs, those are not directly engaged in the production process, so apportioned on some appropriate basis, some machine hours, some labor hours, etc., may not vary with the volume of production. Now, what includes employee costs? Employee costs includes your wages and salary, your allowances and incentives, and payment for overtime, contribution to provident fund and other welfare funds, maybe insurance, etc., other benefits with food cost or leave travel concession, etc., etc. Now, why you need to control labor cost? Now, obviously, when you control labor cost, your cost per unit of output will be less. When the cost is less, obviously you will be having competition among the market. Now, methods of timekeeping, they'll be asking in terms of theory part. Now you have manual methods and mechanical automated methods. Now, in terms of manual methods, attendance register. So whatever you are writing directly, and token metal disk method, because a metal disk will be given. You need to keep at the entrance of every time you need to enter. Automated method, punch card and biometric. Now, even if you see some of the new softwares, even with our lens, they can able to capture our, earlier used to be the thumb, now it is with the retina, and also they are capturing the biometric systems. Okay. Now, what is the need of bookkeeping, sir? Now, obviously, the need is that to compute the cost of job activity, to measure efficiency, to analyze the variance in respect of time with respect to standard time. That means, unless you don't know what is the exact time worked on the job, you don't know what is the standard time allowed and what is the time they have worked out. So obviously, when you know what is actual time worked, you can compare with your standard, then you can get the variance. That is objectives of timekeeping, time bookkeeping. Payroll procedures. What is the procedure of payroll? Now, normally, the timekeeping department will give the attendance to the payroll department. HR department will give the employee details. Now, payroll department, they'll be sending to cost accounting department the salary sheet. The cost accounting department will dispatch the salaries after reduction of contributions, and they'll be making payment to employees, and statutory dues will be paid to the respective statutory bodies. Now, the important point is in terms of idle time, because I'm not covering each and every aspect. What is important only I'm covering in the marathon session. Because idle time, there are two types of idle time. What is idle time? Sir, idle time is that for which no production is carried out, but the worker remains idle but are paid. If you remember on standard costing and variance analysis also, idle time is what? Idle time is adverse variance or favorable variance. Idle time is always adverse variance, because your productive time is always less than the paid time. Now, idle time is of two cases. One is normal idle time. Second one is abnormal idle time. What is normal idle time? What is abnormal idle time? Normal idle time, the time which cannot be avoided or reduced in the normal course of business. Now, let us assume I'm working for 8 hours. Sir, I need to go to at least washrooms, right? At least I need to have small amount of break. So obviously we are not missions, right? So those idle time is normally called as normal idle time. Now, what are the causes, sir? These are important for examination point of view. Please understand. The time lost between factory gate and the place of work, because factory is somewhere gate and you are supposed to come to workplace. If you see in the public sectors, the out gate is somewhere and workplace is somewhere, so you need to travel from that place to this place, right, by walk or some cycles or etc. So that is the normal idle time. Interval between one job and another, you have completed one job and waiting for another job, so that is the normal idle time. Setting up of time for the mission. Sir, for example, yesterday I said about in plastic industry, 24 hours is required to heat that mission. Now that 24 hours labor is engaged, right? Direct labor, those will become what a idle time. Normal rest time, break for lunch, etc. So these are all causes of what a normal idle time. Now, what is the treatment of normal idle time? That is what I wanted to highlight it. In terms of normal idle time, this is treated as a part of cost of production. How we treat normal loss in the accounts, it is recovered from the good units, right? Similarly, the normal idle time is treated as a part of cost of production. In case of direct workers, an allowance for normal idle time is considered while setting up of standard hours or standard rate. Now, for example, you have decided to pay 10 rupees. 10% is a normal idle time. Then in such a case, you'll pay the rate of at 11 rupees itself. Okay. In case of indirect workers, normal idle time is considered for computation of overhead. Obviously, even if you remember cost accounting system, direct wages cost will go to WIP, indirect wages cost will go to factory overheads, then factory overheads to WIP, right? So this is the part of, so if it is a direct workers, directly charge it to product. In case of indirect workers, it will go as a part of factory overhead rate. What is abnormal idle time? Apart from normal idle time, there may be factors which gives to abnormal idle time. Lack of coordination. Sir, mission you have completed the job. You have not asked your manager, or manager is not asking you. You just slept. You just kept idle. So tell me whether that amount is idle time, whether it is normal idle time or abnormal idle time. Because of negligence, if idle time exists, that is a normal abnormal idle time. Power failure, breakdown of missions, non-availability of raw materials, strikes, lockdowns, poor supervision, fire, flood, etc. So if it is a not normal idle time, if it is abnormal idle time will be taken to costing profit and loss account. This any abnormal idle time will not be taken as a part of cost of production. That means I cannot charge my customer. It should go as a part of costing profit and loss account. Now, the abnormal idle time is again classified into controllable abnormal idle time, uncontrollable abnormal idle time. What is controllable abnormal idle time? The time which could have been put to productive had the managed been more alert and efficient. For example, non-availability of raw materials. If management is more efficient, or had the management been more alert, they would have checked the raw materials. Obviously, there would not arise any abnormal idle time. So, out of abnormal idle time, there is a controllable abnormal idle time. Second one is what abnormal uncontrollable abnormal idle time. The time lost which management does not have any control, breakdown of missions, floods, etc. Okay. So what we are supposed to do is that we need to minimize the controllable abnormal idle time. Uncontrollable abnormal idle time is not in our hands. Okay. What is the treatment of abnormal idle time? Not included in the production cost. Always remember, any abnormal idle time, whether it is a controllable abnormal idle time or uncontrollable abnormal idle time, the cost of abnormal idle time will not be taken into cost of production, shown as a separate item in what costing profit and loss account. For each category, controllable and uncontrollable idle time, the breakup of cost due to various factors should be separately shown. Management should aim at eliminating controllable idle time, because uncontrollable idle time, that is nothing in our hands. Like floods are coming, can we do anything control? Earthquakes are coming, can we control? So if non-availability of raw material is available there, that we can be controllable. So management should aim at to reduce the controllable abnormal idle time, but any abnormal idle time should be charged to costing P&L account, not to the cost of production. You may get it out. What is this costing PL? That means it is not charged to customer. This is borne from the profit made by the organization. Next one, overtime. What is overtime, sir? Anything work done beyond normal working hours is what overtime. So overtime payment is normally you are supposed to pay. Let us assume you are work 2 hours overtime. 2 hours overtime. You are supposed to pay normal wage rate for 2 hours, and you need to pay overtime premium extra. There will be very strict conditions in terms of government organization. If you remember, when I worked with BPCL, if non-teaching staff works for overtime, they are supposed to be paid 2 times extra, not for offices. Okay. Now, So overtime premium, normally we need to reduce we need to avoid the overtime premium, but some cases, yes, overtime is required and we are supposed to make extra payment. What are the causes of overtime? What is the treatment of overtime? This is also very important for examination point of view. If overtime is caused due to urgency of work, yeah, I think we have taken one question also for that. Right. We'll discuss that question later. Ma. So if overtime is caused due to urgency of work, you charge it to job costly. So customer came and sir, please work, sir, I'll pay extra amount. You charge him directly, the extra overtime premium. To make up shortfall, in production due to some unexpected development. Now, to make up shortfall in production due to some unexpected development, something happens, sir, we are unable to produce. In such a case, treated as overhead cost of the particular cost center, which works overtime. So that will be charged to that respective cost center. To make up shortfall in production due to some fault of other department, not the management. I see also they are giving wrong. It is at fault of other department. So you are working because the other department has made a mistake. You charge that overtime premium to the later department. To take advantage of an expanding market or of rising demand, overtime worked on account of abnormal conditions should be charged to what costing P&L. Sir, in terms of cost account, remember this word. If it is abnormal, take it to P&L account. Now tell me first one. If it is urgency of work, charge it to customer. If it is due to shortfall of some unexpected development, charge the cost center. If it is the fault of other department, charge other department. To take advantage of expected market, you charge it to profit and loss account. Okay. Now, this is about idle time and overtime. Both are very important. Now, system of wages payment and incentives. There are two types of system. One is time-based system. Second one is output-based system. Time-based means you are working for 8 hours, you are paid 8 hours. Output-based means piece rate. I don't know how much time you have worked out, but you have completed this number of units. I am paying for this number of units. So one is time-based. Second one is what? Piece rate system. Now, obviously, to motivate the employees, in addition to my time rate and piece rate, I am paying some bonus methods. In earlier syllabus of CIPC, there will be n number of bonus methods, but in terms of CA Inter, we are being restricted only to two methods. One is Halsey premium plan. Second one is Rowan premium plan. Halsey premium plan is simple. You are guaranteed for time rate. Wages is equal to time taken into time rate. So if you're working for 8 hours, 8 hours payment is guaranteed, but you'll get a bonus half of the time saved into time rate. How will you get the time saved? Standard time minus actual time, or time allowed minus actual time worked. That means in terms of Halsey premium plan, if you want to calculate bonus, so this is guaranteed wage and this is bonus amount. How will you get the bonus amount? Bonus amount is half of the time saved amount into time rate. How will you calculate time rate, time saved? So time allowed minus time worked. So for product, how much time it is allowed and how much time you have completed, that is the time saved amount. If you are not saved any amount, see here, 50% I'll give it to you, 50% the management will burn. If you are not saved any amount, you are not got any amount, you are paid only the guaranteed wages. If you are saving some time, 50% is given to management, 50% is given to employee. That is the Halsey premium plan. Okay. Second one. Rowan premium plan, here also time rate is guaranteed, time taken into rate per hour. But instead of half of the time saved, I'm using a formula called time taken by time allowed. This is the ratio. Instead of 1/2, this is the ratio. Time taken by time allowed into time saved into rate per hour. Understood? So what is Halsey premium plan? Half of the time saved. Whereas in Rowan premium plan, it is not half. It is time taken by time allowed. This is the ratio. So this is guaranteed. If they ask you only to calculate bonus under Rowan premium plan, this only. If they ask you to calculate bonus amount, not total wages, this is total wages. This is total wages. If they ask you to calculate only bonus under, if they ask you to calculate only bonus under Halsey premium plan, it is only 50% of time saved in time rate. So this you are supposed to be kept in mind properly. Okay. Now, advantage of Rowan premium plan, disadvantages, advantage of Halsey premium plan, and disadvantages you can read them. Now, next one. Efficiency rating percentage. Efficiency what? Yesterday we have worked out efficiency ratio. What is the stand hours divided by actual hours into 100? That is only. Now, factors increasing employee productivity. Employing who possess right type of skill, placing the right type of person to the right job, training young and old workers by providing right type of opportunities, taking appropriate measures to avoid the situation of excess or shortage of employees, carrying out work for fixation of wages. So these are supposed to be considered. So then the employee productivity will increase. Now, next important point is in terms of employee turnover. Now, what is employee turnover, sir? Very important for theory part and examination part. Employee turnover, the rate of change in the composition of employee force during a specific period measured against a suitable index. Now, obviously, if your employee turnover ratio is more, it shows that attrition is more. Now, obviously, organizations try to minimize the employee turnover. Otherwise, it shows a bad signal to the many people. There are three methods to calculate employee turnover. First one is replacement method. Second one is separation method. Third one is flex method. Now, in terms of replacement method considers only number of employees replaced during the period. Replacement means worker is working in the organization. He left in that position. I have recruited new one. This is not a fresh recruitment. Replacement means one person is working. That person left the organization. In his place or her place, if a new employee recruited, that is we call as replacement. So replacement method is equal to number of employees replaced during the period divided by average number of employees during the period unknown. How will you get average number of employees? Opening employees plus closing employees divided by 2. That's it. So this is about replacement method. Next one, separation method. Separation method consider only number of employees separated. That means left. So separation method is equal to number of employees separated during the period divided by average number of employees during the period on roll into 100. Sir, which organization takes which ratio? It is their problem or it is their policy. So you can work out employee turnover under replacement method. You can work out employee turnover under separation method also. Third one is flex method. So flex method, this you need to consider number of separations plus number of accessions. Accessions means access to the organization. Who can access to the organization? Whether it is a replaced employee or new employee. So flex method or accession method is equal to number of separations plus number of accessions. Accessions includes both recruited and replaced. Okay, right. Number of replacements plus number of new joinees divided by average number of employees during the period. Now, newly recruited employees are also responsible for changes in the composition or workforce. Some management accountants feel to take new recruitment for calculating employee turnover. The total number of workers joining, including replacement, is called what? Accessions. So accessions means new employees joining, including replacement. That is we call accessions, access to the organizations. Okay. Now, what are the causes of employee turnover? So this method is useful. So we'll do the problems also. What are the 1 minute? Causes of employee turnover, sir. Why people leave the organizations? It is not only the fault of it is not only the fault of management. It could be because of personal reasons, unavoidable causes, avoidable causes. What is personal causes? Changes for job for betterment. If you are looking for new betterment job, obviously this is personal reasons. Premature retirement, sir, I want to take VRS. Nothing, you cannot do anything. Domestic problems are family responsibilities. Your wife is working somewhere, you are working somewhere. Okay. Discontent over the jobs and working environment. You are not happy with your working environment. So those will be personal causes. Second one, unavoidable causes. So change in plant location, disability, discipline measure. You are not suited to the organization. You are left. Unavoidable causes. Discipline measures. Avoidable causes. See here, avoidable causes. Sir, if I wanted to keep the employee, I can keep it. These are avoidable causes. What are the avoidable causes? Dissatisfaction with job, remuneration, hours of work, working conditions. If the management speaks to them, these people can be retained in the organization. Strained relationship with management, lack of training facilities and promotional avenues, lack of recreational medical facilities, low wages and allowances. If you can increase their wages, they'll be stay. If you're providing training, if I see in terms of BPCL also, many people who joined from IITs and chartered accountants, they try to leave after they try to leave after 2-3 years, assuming that we wanted to study further, we wanted to complete MBA, etc., etc. What the management has done, they only introduced the MBA programs so that 2 days in a week they can go and read and study it. So you are not leaving the employees, and employees are also happy with the further education. I always say employees are the best assets of the organization. It is not about the properties the organization holds. It is not about the money that holds, because it is employees who run the organization, who makes organization proud. Okay. Next one. Effects of employee turnover. What happens here? If number of employees are leaving, even flow of production is getting disturbed. Because, for example, in a job, in a work, manager resigned. He only is very efficient and they can take over that. Obviously, when the people left for few days, the production gets whatever disturbed. Efficiency of new workers is low, because when you're new to the system, you may not be easily adaptable. Okay. Increase the cost of training. If new people come, I need to train more and more, and if he stays, it's okay. Even in terms of articles also, the student comes for 6 months, he needs training, and after 1 year, if he says, sir, I want termination, new workers cause increased breakage of tools, and cost of recruitment is also costly, because you need to go, because if you see some of the Naukri and all these things, I don't know exact, that takes some amount of percentage. So obviously the cost of recruitment is also costly. So if you keep your employee, he will work. But if he left, you need to recruit, you need to give training, he may do some damages. So all these things will happen. Okay. Now, cost of employee turnover, two types of cost: preventive cost and replacement cost. If you incur preventive cost, you can minimize employee turnover. Second one is a replacement cost. Preventive cost, sir, you cost incurred to prevent employee turnover or keep its lowest as possible. You give the medical benefits, employees may stay. I remember in my PSU, one of my colleague used to say that I don't want to leave BPSL because it takes care of all my medical expenses. Cost on employees welfare like pension, etc. Cost on other benefits with an objective to retain employees. Obviously, when you incur this type of cost, preventive cost, so your employee turnover will be less. Okay. In terms of replacement cost which arise due to employee turnover, cost of recruitment. So this is when the employees left, I want to replace the new employees with old employees. In such a case, I need to pay recruitment cost is incurred. I need to give training and induction program. In BPCL, we used to have 15 days induction program, which is very honeymoon period. Okay, you can roam any place, you are paid your hotel, everything, etc., etc. Abnormal breakage and scrap, yes, because new people may not handle properly. Extra wages and overheads due to inefficiency of the new workers. So these are the cost of employee turnover. Okay. So what is important is treatment of idle time, normal idle time and abnormal idle time. Under abnormal idle time, controllable abnormal idle time, uncontrollable abnormal idle time. Then we have discussed about overtime in different causes and treatment. Then we have discussed the payment of wages and the ordinance system is kept. Then we have discussed lengthily in terms of employee turnover. What is meant by employee turnover? Methods of calculating employee turnover, that is replacement method, separation method, and flux method. So we have discussed what is meant by accessions, the causes of employee turnover and effects of employee turnover and cost of employee turnover. So these all are very important in terms of examinations. Okay. Now I'll move to the questions part here. So when it comes to questions, Marathon, page number 28. I've selected a few beautiful questions for discussion. The sales of LSR Limited in the previous year aggregated to 1,66,06,600 and the PV ratio was 20%. The actual hours worked was 4.45 lakhs. So actual hours worked is how much amount? 4,45,000 hours. The actual direct labor hours included 30,000 attributable to training of new recruits, of which 50% represented unproductive hours. That means out of 30,000, 50%, that means 15,000 hours are unproductive. So what is total productive hours amount? 4,30,000. So productive hours are 4,30,000. As a result of delays in filling vacancies caused by labor turnover, 1 lakh hours are potentially lost. Now, how many hours have I lost? 1 lakh due to result of delays in filling vacancies, 1 lakh hours lost. And because of new recruitment, what is the number of hours become idle time or unproductive? 15,000. So total, how many hours have I lost? 1,15,000. Correct? Very important. 1,15,000 hours are lost. Now, so total 4,45,000, out of this 15,000 are unproductive. The costs associated with the labor turnover were settlement costs due to leaving, because I need to settle all the costs. I need to pay 87,640. Recruitment cost is 53,840. Selection cost is 25,500. Training cost is how much amount? 60,980. Assuming the potential production loss consequent upon labor turnover could have been sold as at the prevailing price, find a profit foregone in the previous year on account of labor turnover. How much profit you have foregone? First one is contribution foregone. How much contribution foregone, sir? 1,66 lakh sales you have made by using how many labor hours, Amma? How many productive labor hours? 4,30,000. Correct? Now, how many hours are lost? 1 lakh is due to delay in filling. 15,000 is due to unproductive of new recruits, right? In some solutions, they are taken only for 1 lakh, but 1 lakh and 15,000 is correct. So 1,15,000. So this is one first cost. What is second cost? Settlement cost 87,640. What is next cost? Sorry, 1,66 lakh 6,000 divided by 4,30,000 into 1,15,000. This is sales lost. On sales loss, what is the PV ratio? 20%. So this is the amount foregone. So don't forget to include this 20%, because if you are making sales means you need to incur variable cost also. Ultimately, what you are losing is only PV contribution. That is the reason sales into PV ratio is equal to contribution. Settlement cost 87,640, recruitment cost 53,480, selection cost 25,500, training cost 60,980. So total put together would be the profit foregone in the previous year on account of what labor turnover. It's very important for the examination part. Okay. Next what? Problem number 5. A workman wages for a guaranteed 44 hours a week is 75 per hour. The estimated time to produce one article is 30 minutes. Under incentive plan, the time allowed is increased by 20%. During a week, a worker produced 100 articles. Calculate the wages under time rate, Rowan system, Harsha plan. Time rate is simple, 44 hours into 75 rupees. Now, while calculating Rowan plan and Harsha plan, what we need is time allowed. How will you calculate time allowed here? 100 articles into 30 minutes. How much amount? 3000 minutes. Plus 20%, you are giving time allowed extra. So how much amount? 600. So 3600 minutes. 3600 minutes means 3600 by 60 minutes per hour. How many hours? 60 hours. So time allowed is 60 hours. Time taken is 44 hours. Then you need to calculate the Rowan plan, Harsha plan, and premium plan. Okay. So if you go to question number 5 in solutions in our material, see here. So 60 hours is time taken is 44, time allowed is 60, time saved is 16. If it is a Rowan's Harsha premium plan, time taken into time rate 44 into 75 plus 1 by 2 into time saved. How much time saved? 16 into 75. If it is Rowan's premium plan, 44 into 75 guaranteed wage rate plus what is the bonus amount? Time taken divided by time allowed into time saved into rate per hour. So 41 rupees. So this is the earnings under, sorry, it is missed. So you'll get 44 into 75. This you can take the calculation. It's not 41. So Harsha plan is 3900. So this is the question with respect to question number 5. Now, next one. Problem number 12. From the following information, calculate labor turnover rate and labor flux rate. Number of workers on 1st January 7600. Number of workers as on December 31st 8400. So in the denominator and any method, what you need is average. Average is what? 1 by 2 into 7600 plus 8400. So you're getting 8000, correct? So 8000. Which method? Labor turnover rate and labor flux rate. During the year, 80 workers left while 320 workers were discharged. So total discharge is 400 separations. 1500 workers are recruited during the year. Of these, 300 workers are recruited because of exit and the rest were recruited in accordance with the expansion plan. So out of 1500, new joinings are 1200. Number of replacements are 300. So what did they ask? Calculate labor turnover rate. So 12th question, we'll move it. See here. So labor turnover, you can follow on any method. First one, separation method. How many people separated? 80 plus 320 divided by 8000. Second one, replacement method. Number of replacement 300 divided by 8000 divided by 100. If it's a labor flux method, number of separations plus number of replacements, and you can also consider accessions. So total is 300 left. How much is left, Amma? Recruited 300, right? So 300 recruited plus fresh expansion, how much amount? 1200 plus how many are separations? 400 separations divided by 8000 into 100. Or you can also work out the another formula is number of separations plus number of replacements divided by average number of employees during the period into 100. Okay. So labor flux rate or accession method, you can use this one. Okay. Next one. Problem number 13. The cost accountant of Y Limited has computed labor turnover rates for the quarter ended 31st March current year as 10%, 5%, and 3% respectively under flex method, replacement method, and separation method. If the number of workers replaced during the quarter is 30, find out the number of workers recruited and joined, second works left and discharged. You know replacement method. Replacement method, how much percentage? 5%. Number of replacements divided by average number of employees during the period, correct? Now 5 by 100, 5% means 5 by 100 is equal. Replacement, how much amount? 30 divided by average number of employees. So average number of employees during the period is equal to 3000 divided by 5, correct? How much amount? 600. Now, if you go with left and discharge, that is separation method, how much 3% is equal to number of left and discharge divided by what is average? 600. So number of separations would be 600 into 3%. How much amount? 18. So left and discharge is 18. Number of works recruited and joined. So here you can work, see here, number of recruited and joined, number of separations plus number of accessions divided by average number of employees during the period. Number of separations, how much amount? 18. Number of accessions includes replacement and new expansion. So that is recruited and joined. So 10% is equal to 18 plus number of accessions divided by 600 into 100. How much? You will get a number of recruited and joined 42 employees, correct? So this is with respect to question number 13. Now, question number 14. This is also very important. Human Resource Department of A Limited computed labor turnover by replacement method at 3% for the quarter ended June 2015. Fresh recruitment were 40 workers were made. The number of workers at the beginning and at the end of the quarter was 990 and 1010 respectively. You are required to calculate the labor turnover rate by separation method and flex method. Very beautiful question here. Sir, here, see carefully. Opening, you have 990 employees. Replacement method. Replacement method, if you see, 3% is equal to number of replacements divided by average. How much you get? 1000. So number of replacements would be 30. Correct? And fresh recruitment, how many employees? 40 workers. Fresh recruitment 40. You are requested to calculate labor turnover by separation method and flex method. Now, let me go to this point, very important point, question number 14. You know, average number of workers is 1000, correct? How many people got separated? That is only important point here. That is the reason this is examination question. 990 is opening. How much is the new recruitment? They said 40. And how many are separations? I don't know. X. Closing is how much amount? 1010. You may get it out. What about replacement, sir? This is where many of the students get confused. What about replacements? Sir, replacement means what? They are available at the beginning of the period, left during the period, and new people also got joined in that period. Replacement means what? The employee is available at the beginning of the period, and they've also left in his or her place, new people also got joined. That means if number of replacement is 30, 30 left and 30 also joined. So that is the reason I have not calculated in this calculation. This is what is very, very important in this question. This is the examination question, dear students. It should come strike into your mind. That is the reason I have taken these questions into our marathon session. Understood? So number of opening is 990, sir. Yes, you have added new recruitments who are not replaced. You should also add replacement and reduce replacement. That is the reason I have not considered both. And to arrive at closing balance, what would be the other reason? Separations, those who left. Separations means those who left and they have not got replaced. Now let us assume 30 people got replaced. 990 plus 30, first minus 30 and again plus 30. Will it impact my separations? No. Understood? So that is the reason replacement you have not considered in terms of this calculation. Correct or not? Please respond. Correct or not? Yes. So if replacements, if you consider here, what about the replacement people left? So replacement means they have included in this part and those who are left and they got replaced also. So it will not affect in calculation the separations. Which will affect my separations? 40. So let us assume replacement is y. So 990 minus y plus y because those got replaced. Plus new people how much? 40. Separations I don't know is equal to 1010. This will get, both will get what amount? 0. So then x would be how much amount? So x would be, number of separations would be how much amount? 20. So what did they ask you to calculate? You are required to calculate turnover rate by separation method and flex method. How many separations? 20 divided by 1000, 2%. What about flex method? Number of separations plus acquisitions. Acquisitions include new recruitments, right? So 20 separations. How much is the replacement? 40. How much is the new recruitment? New recruitment is, so new replacements is 30, which I worked out at the beginning. Because they said 3% is the replacement. So number of replacements 30. Number of recruitments is 40 divided by 1000. So how much you'll get? 9%. 9% per quarter. This is very important in the question. They worked out 3% for quarter and per annum is how much amount? 36%. This is also important. That is the reason when you're getting a question in the examination, don't be very silly. They may ask you no part. You need to be very thorough in terms of reading the question itself. Understood? So here in the question, if you see, they are given for quarter ended. Quarter ended. That is the reason if whatever the calculation you have calculated, that you need to convert into annum. That is the reason 9% for quarter, per annum is 36%. Majority of the students, they left at this 9%. They will not tell what is the per annum labor turnover rate. Okay. And second important point is the replacement will not affect in calculating my separations when the opening and recruitments and separations and closing is given. Okay. So these are the two important points in this question. Now, come to last question in discussion, problem number 28. In a factory, the basic wage rate is 10 per hour. Overtime rates are as follows. Before and after normal working hours, so 175% of basic wage rate. Sundays and holidays, 225% of basic wage rate. During the previous year, the following hours were worked. Normal time 1 lakh hours. Overtime before and after working hours 20,000, which you are supposed to pay 175% of basic wage rate. Overtime on Sundays and holidays, you are supposed to pay 5,000. What is the rate amount? 225%. The following hours have been worked on job jet. Normal hours 1000, overtime hours 100, Sundays and holidays how much amount? 25. Total how much amount? 1,125. You are required to calculate the labor cost chargeable to JED and overhead in each of the following instances. where overtime is worked regularly throughout the year as a policy of due to labor shortage. What is the treatment? When the overtime is worked irregularly to meet the requirements of production, what is the treatment? When overtime is worked at the request of the customer to expedite the job, what is the treatment? Okay. Now, if you remember our overtime, what did we discuss, Dama? So when the overtime is worked regularly throughout there as a policy of labor shortage, by using inflated rate it will be charged to cost of job, right? If you see here overtime, to make up the shortfall regularly throughout the year, it will be charged to, it is treated as premium is treated as labor cost. The overtime is worked regularly to meet the requirements of production. Any extra amount is charged to overheads, factory overheads. If overtime is worked at the request of customer, we will charge that amount only to the respective job. Now, what is the basic wage rate amount? 10 rupees. Overtime before and after normal working hours, how much amount? 17.5 per hour. Overtime rate for Sundays and holidays, 225% of basic wage, which is 22.5. Annual wages, 1 lakh hours into 10 rupees, 20,000 into 17.5, 5,000 into 22.5. For total hours, it is 11.6. This is we call as average inflated rate. If overtime is worked regularly throughout the year due to labor shortage, it is treated as a part of what labor cost. So on job jet, how many hours worked? 1,125 into 11.57. So overtime is treated as a part of labor cost, whether it worked on Saturday, Sunday, etc. If overtime is worked regularly to meet the requirements of production, so what is the normal time of jet? 1125 hours, you are paid 10 rupees, that is charged to jet, and anything more than that, that extra premium for 100 hours is, which is what time? Before and after working hours, 100 into 7.5, and Sundays and all this 25 into 12.5, that would be chargeable to factory overheads. How much amount? 1062.5. If overtime is worked at the request of customer, please charge total amount to respective job only, whether it is overtime or whether it is a labor cost. Understood? So this is the important topic in terms of labor cost. So we'll also try to discuss from the institute material few concepts. So employee cost in terms of so what is employee cost? We have discussed direct employee cost, indirect employee cost, then labor cost control. So what is the personal department they do, and what is the engineering and work Sunday department? What is timekeeping department they do, payroll department what they do, cost accounting department what they do. Importance of factors of this is okay. Attendance system, so manual methods and mechanical automated methods we have discussed. So requirements of good timekeeping system is that you should not allow proxy for another employee or under any circumstances. So even if it is a piece rate, you should provide the disciplinary so that they should also give the timekeeping. So time arrival, time departure should be recorded properly. So should be mechanical to the extent possible. Latecomers should record rate arrivals. That system should be simple, smooth, and quick. The system should be reviewed and maintained periodically to prevent any error. So time booking also we have discussed. Payroll procedure, yes, we have discussed. Now, this is also important point. Let me touch this point. So what are the which are generally deducted from payroll? Provident fund of employee contribution will be deducted. ESA of employee contribution is deducted. TDS based on income tax rates is deducted. Professional tax of respect to state wise will be deducted. Other deductions is you can voluntarily contribute to PF. In BPSL, we have a PF trust, we can contribute voluntary contribution. contribution to any benevolent fund. So if you want to give it to any benevolent fund, that also will be reduced from other deductions. If you have any taken loan, loan would be deductions, and advances also. So these all will be deducted. Ideal time, causes and treatment, normal ideal time, abnormal ideal time we have discussed. Very important for examination part of, okay. Overtime, yes, this is also last question we have discussed. So overtime premium. So in terms of statutory acts, government acts, overtime is very serious. You should be very careful. So overtime, if it is agreed to pay urgency of work, you charge the customer. Due to overtime may be called for to make up shortfall in production due to some unexpected demand. So should be treated as overhead cost of the particular department. So if it is due to necessary to make up shortfall in production due to some fault of management, that will charge it to respective department. Overtime work may be restored to secure an outturn in excess of the normal output to make advantage of the expanding market. Please charge it to P&L account. Okay, this is all we have discussed, right? Because you need to work through institute materials also. So night shift absorption rate, efficiency rating procedures. So this all are we have discussed, right? So avoidable cost of labor turnover, very important for examination point of view. So this question only we have worked out, right? The amount is different here. It is 4,45,000 minus 15,000 hours. Product hours lost includes loss of production, potential product hours plus unproductive training hours. So based on the contribution foregone plus settlement cost, recruitment cost, selection cost, and training cost, that is would be the amount foregone. Okay. So this is all basically the employee cost, and I'm expecting at least 5 to minimum 5 marks, maximum 15 marks from this chapter. So please read thoroughly. So maybe in terms of Halsey premium plan and Roman premium plan, they may give you some missing questions also. So, and one question which I've discussed, replacement will not be calculated while calculating separations. That is very important, expecting to get into the examination paper also. It is also previous examination. So if you are having a time, please do the IPCC practice manual, because in terms of material cost, the syllabus is same. And if I can say, in terms of new syllabus only, the syllabus is reduced. Okay. So please take care. Next, we'll move to the next chapter. Employee cost is completed. Now we'll be moving to the cost sheet, then unit and batch costing. Yes, students, please understand that my intention of this marathon session is that to make sure that you are covered each and every topic, you will be having minimum knowledge on each and every topic. Otherwise, what happens in the examination, if a new thing comes, you should not put, at least you should get 50% of the marks. Okay. That is the reason, please cover each and every point. You consider 70% of the syllabus you need to do thoroughly. And getting 100 marks in costing is possible. I got 98 in accounts. So it is possible to get the marks. So write properly in the examination and in a proper stepwise, give the abbreviations. So you will be getting good amount of marks. Okay, right. Thank you. Come on, students. We have discussed up to now 6 chapters. 7th chapter, we are going to discuss about the cost sheet. Normally, in terms of IPCC, this used to be the first chapter, but cost sheet, to my expectation, we are getting 10 marks from this chapter. So one of the important question and the easiest chapter where we can fetch 10 marks. So I always tell students, for example, there are some chapters where you need to give a lot of time, but you'll get a reasonable amount of marks. But this chapter, learn 100%. So it is sure that from last many examinations, it is understood that we are fetching 10 marks from this cost sheet. Okay. Now we'll be discussing in detail what are the cost sheet, what are the format of cost sheet, what are the different treatment of different elements of cost, everything along with the illustration number 3 in study material. In terms of theory part, I'll be discussing from the quick revision material of ICAI. Okay. Right, students. So let me take it to our note. So let me add a new sheet. So cost sheet, very important. So now, what are the main objectives of cost sheet? So one of the objectives of costing is cost control and cost reduction and cost ascertainment of cost object. Cost ascertainment of cost object. So initially I'll be discussing the total format of cost sheet. Then I'll discuss each element wise separately. Okay. Now the cost object can be a product, service, or cost center. So in terms of contract costing, cost object and cost center remains the same. The detailed explanation of cost center is available for demo. So with the example of a beautiful company, we have discussed the cost center example. Okay. Now, for cost ascertainment, we use a format called cost sheet. So what is meant by cost sheet, sir? Cost sheet or cost statement is a document which provides a detailed cost information. That's it. It provides detailed cost information. What information, sir? Here it will be given based on elements of cost, based on functional wise qualification. So everything will be discussed here. What are the advantages of cost sheet, sir? So that also I'll be discussing at the end of this part. Okay. Now, cost sheet. If I am taking here cost sheet, specification of the cost sheet I'm giving here, specification format. Okay. Now, particulars, amount rupees. So if you remember in our regular classes, when we discussed about elements of cost, we have material, labor, and expenses. Indirect material, indirect labor plus indirect expense, we have put together called as what overheads. Now, in terms of cost sheet, first one is about direct material consumed. What is important is consumed here. How will you get the consumption, sir? Sir, here opening stock of raw material, opening stock of raw material. For this, we need to add purchases less closing stock of raw material. Then we'll be arriving at the raw material consumed. So that is the first part is direct material consumed. Second part, direct labor. Those are engaged in the production part, we call as a direct labor or employee cost. Third one, direct expenses. What are the direct expenses? Direct expenses are those expenses which are involved in production, which are other than material, other than labor. So direct expenses. So put together these three we called as prime cost, because this is a primary cost of production, producing a unit. Without direct material, without direct labor, without direct expense, no product can be produced. That is the reason we call it as prime cost. Now for the prime cost, see here, we are supposed to, so see here, this all incurred at the factory level. So we are working for a product. That means the product will be manufactured at the factory level. So first we need to work out at the factory, then we need to add with the administration, selling and distribution, then you'll be arriving at the final profit or loss. Okay, prime cost. Now for this, add factory or works overhead. Now for this, add factory or works head. So after this, we are arriving at, I'm putting numbers here. After this, we are arriving at, for prime cost, if we add factory or works head, we call it as gross works cost. Gross works cost. Now see here, in terms of our normal trading and P&L account, opening stock is on the left side, closing stock on the right side, because we need the net consumption. Now, obviously, when the product is at the production stage, this cost, what happens for this? These are the costs incurred for which are coming from the last year production. That is opening stock of work in progress, will consume it. For closing stock of work in progress, for which sales will not happen or which are not moved to cost of production, for that matching concept, sales will not happen, right? So for that we need to reduce. So for this we need to add opening stock of work in progress, opening stock of work in progress less closing stock of work in process. So then we'll be arriving at net works cost. So these all are incurred at the factory level. Okay, net works cost. For this network at factory level, we'll be incurring some cost. These are very important. Add quality control cost. Second one, research and development cost. Third one, we have administration overheads related to production. This is very important. This I have worked out with when I'm preparing the cost sheet for BPCL, because we prepared for 30 to 34 products. P&L is for a company, whereas we need to prepare cost sheet for each product wise. Now I'll be having some administration costs at my refinery that I cannot consider as administration overheads of the company, because that administration overheads is part of my cost of production. That is the reason, very important. Okay, for this, so this is very important. So if it is related to general, it is going as a part of cost of goods sold. If it is related to refinery level or factory level, that is a form part of factory cost, that is cost of production. This you need to highlight it. Okay, now for this, any recoveries, less credit for recoveries or scrap will be reduced. Now, for example, if you remember in terms of joint and byproducts, what are the byproduct amount? If it is amount is small, we'll reduce it from cost of production. So those amounts are this. Okay. For that, we need to add primary packing. Very important. So primary packing is not of sales. So normally, for example, primary packing and secondary packing, you need to get a differentiation here. Primary packing is for conserving the product, and whereas secondary packing is about, like for example, is of marketing. For example, if you see any pizza or if you see any subway or anything else, for bun the normal paper is kept, that is for primary packing. Secondary packing is that outside logo, marketing, everything will be there, that will be the secondary packing. So primary packing is a form part of cost of production. So then you will be arriving at cost of production. For cost of production, we need to add, because this is a cost of production, because if you see the P&L account, sales, opening stock, purchases, closing stock, right? So this is the matching concept, right? Now for those items, because the items which are produced earlier may not, maybe maybe sold in this current financial year or current year. For that, we might have incurred some selling cost, some production cost, or something like administration cost. Now, for those items which are produced but not sold in the current period, those are expenses. That matching concept will come in the next year. So we need to give effect of, for cost of production, add opening stock of finished goods less closing stock of finished goods. Then we'll be arriving at cost of goods sold. For cost of goods sold, yes, up to now products are sold, but now for selling this, I need to incur some administration costs which are related to general. We'll also incur selling and distribution overheads, right? Add admin overheads which are general. Add selling and distribution overheads. Selling cost and distribution. Selling is different, distribution is different. Then we'll be arriving at cost of sales. From cost of sales, if I reduce profit or loss, then arriving at sales amount. So this is about the cost sheet. Now, what I'll do is that I'll quickly make sure to understand each and every item in a detailed manner. Okay. Now, in terms of cost sheet, first one, prime cost. Prime cost includes what? Direct material, direct labor, direct expenses. For primary cost, we need to, for prime cost, we need to add factory overheads. That will be together we call as gross works cost. For that, we need to give effect of opening stock of work in progress and closing stock of work in progress. Then we'll be arriving at net works cost. And these three is important: quality control cost, research and development cost, overheads related to production, admin overheads related to production, trade for recoveries and scrap, and we need to add primary packing. Secondary packing comes at bottom as a part of selling cost. Okay. For that will be arriving at cost of production. For cost of production, opening stock of finished goods less closing stock of finished goods. Then you'll be arriving at cost of goods sold. Then admin overheads, which are general, selling cost and distribution cost. Then you'll be arriving at cost of sales. From cost of sales, if you reduce profit or loss, you'll be arriving at you'll be getting the sales amount. Okay. Now, hope you're seeing this right. Functional wise or element wise of cost. Sir, functional classification, material cost, labor cost, and direct expense. These three we called as what? Prime cost. Production overheads, then production manufacturing overheads. So prime cost plus production overheads we call it as what? Cost of production. For that, we have administration overheads, selling overheads, and distribution overheads, and research and development cost, etc. This is a functional classification of elements of cost. What are the cost heads in cost itself? Prime cost, cost of production, cost of goods sold, and cost of sales. Now, prime cost includes what's a direct material cost, direct labor cost, direct expense cost. Now, if we come to direct material cost, cost of direct material consumed, not purchased, cost of direct material consumed. What includes cost of direct material consumed? Cost of material, freight inward, because these are the costs incurred to bring the materials into the factory. Insurance of raw material, trade discounts, any trade discount should be reduced. Duties and tax, if ITC is available, then it is not form part of cost. If there is no input tax credit, it will be form part of cost. For example, your procured item, GST is not available. That amount you need to add it to the cost of material consumed. Okay, right. Now, second one, direct employee cost. So direct employee cost, what is the meaning of direct employee cost? Payment to employees engaged in the production of goods and provision of services. It includes wages and salaries, allowances, payments for overtime, bonus and ex gratia, employee contribution to PF and ESA, gratuity contribution, other benefits. So whatever the amount we are paying to the people who have worked, who are engaged in production of goods and provision of services directly, those we call as direct employee cost. Next one, direct expense other than material and labor. What includes power and fuel, royalty paid. For example, you are printing a book for which you need to pay a royalty of 5 rupees for each book. That is a direct expense. Because these three expenses are incurred only when there is a production or a provision of service. Royalty paid, hire charges, fees for technical assistance. For example, for quality control checking, we need some technicians. So those, for that we are paying amount. That is a fees for technical assistance. Amortized cost of molds, patterns, and patents. So for example, if you see mold is for design, so the depreciation, the amortization of those molds, patterns, and patents, that is a form part of direct expenses. Other expenses directly related to production of goods and services. Now see here, the point which you need to highlight is that this amortized cost of molds, patterns, and patents, many people will put under factory overheads. That is not correct. You need to keep under direct expenses. Okay. Next. So when we add this direct material, direct labor, direct expense, we are arriving at prime cost. For prime cost, what we need to add them are factory overheads. What includes factory overheads? See here. Factory includes consumable stores and spares, which are required for mission running. Depreciation on the factory items, that is mission items. Lease rent of production assets. Repairs and maintenance of plant and machinery, factory building. Indirect employee costs with related to production activities. Like for example, you have kept a security guard for each mission wise. That is comes under indirect employee cost. Drawing and designing department cost, because those are involved directly in the factory level. So those who are sitting at the factory, okay, so those comes under factory overheads. Insurance of plant and machinery, factory building, stock, raw material, and work in progress. Amortized cost of jigs, fixtures, and tooling. Service department costs such as tool room, engineering, maintenance, and polishing, because these are all happens at the factory level. So these all comes under prime cost. For prime cost, what we need to add them factory overheads. We'll be arriving at gross factory cost. We need to give effect of opening stock of work in progress and closing stock of work in progress. You'll be arriving at the factory cost or works cost. For this, we need to add three important points. One is quality control cost, research and development cost, and administration over related to production. Now, for example, I am running a canteen in the factory. So those are involved only in those are giving service only to the production people. So that comes as a part of administration overheads related to factory production. Less any amount of recoveries, miscellaneous income related to production will reduce here. Primary packing cost will add, then we'll be arriving at the cost of production. So for prime cost, add factory overheads, you need to give effect of closing stock of work in progress and opening stock of work in progress. Then you need to add quality control costs, research and development cost, administration overheads related to production. Then you reduce credit for recoveries and add primary packing. Okay. Next, from cost of production, how will you move to cost of goods sold? Okay. So for cost of production, if you give effect of opening stock of finished goods and closing stock of finished goods, it will become cost of goods sold. Okay. Now from cost of goods sold, how will you move to cost of sales? Cost of goods sold, then you need to add administrative overheads, which are general, and selling overheads and distribution overheads, and secondary packing is form part of cost of sales. So if you give effect, then it become cost of sales. So important point to be remembered here is that one is amortized cost of molds, patterns, and patents, which is part of direct expense. Amortized cost of jigs, fixtures, and tooling, which are part of machinery, that is comes under factory overheads. Okay. Now, what are the examples of administration overheads in general, which is a form part of cost of sales, right? Depreciation of maintenance of office, building, furniture of corporate offices, salary of administration employees like accountants, then auditors, then HR people, those comes as a part of administrative, rent rates and taxes of corporate buildings, insurance, lighting and office expense, indirect materials, printing and stationery, office supplies, legal charges, audit fees, meeting expense, etc. Selling overheads means sales and wages related with sales department, rent and depreciation with sales offices, advertisement, maintenance of website, online sales, market research. You are paying some amount for LinkedIn, some Facebook. Those are form part of selling overheads. Primary costing, packing cost, secondary packing, material that enables to store, transport, and make the product marketable. So that is we call the secondary packing. For example, if you see lace packet, uh, it shows attractive. Okay, so those comes as a part of what I'm a secondary packing. Okay, distribution overheads. So if it is a primary packing means that is required for shelf life. Secondary packing is for marketing. Okay, if even secondary packing is not available, if you can able to consume that product, that is we call as secondary packing. If you are unable to conserve that product, packing is required, that is we call as secondary packing. Distribution overheads, salaries and wages employed in engage of distribution of goods, transportation and insurance costs related with the distribution, depreciation of hire charges, maintenance and other operating costs related with distribution. For example, a repair comes or a warranty comes, and for warranty you need to travel from one place to another. So this all comes as a part of distribution. Okay. So cost sheet specimen format we already discussed. Treatment of various items in cost sheet, very important. Sir, any abnormal cost is not form part of cost of production. There, that will be taken directly to costing, profit and loss account. So this is not a form part of cost of production. Subsidy, grant or incentives, anything amount will be reduced from the respective cost object. Penalty, fines and damage and demurrages does not form part of cost because those are of abnormal nature. Interest and other finance cost will not be form part of cost of production. That will be taken separately as a part of cost of profit and loss account. Okay. What are the advantages of cost sheet set? This is also they can give it for 5 marks. Provides a total cost figure as well as cost per unit of production. Helps in cost comparison. For example, I am having 34 products. In BPCL, I am having 34 products. I can compare with my MS with HSG, that is petrol with diesel or sulfur. So which item I'm getting more amount of profit, or which item contributing loss. So when we see in terms of total company, you cannot understand each product wise profitability. So by seeing cost sheet, you can understand each product wise profitability. So facilitate preparation of cost estimate required for submitting tenders, because you need to estimate the cost. So it can be used, it can be done by using the cost sheet. Provide sufficient help in arriving at the figures of selling price. Facilitates cost control by disclosing the operational efficiency. Okay, so this is this cost control, and the objective of cost control can be done by using the cost sheet. So this is the important topic and very simple, right? And which fetches you a lot of marks in terms of examination. Okay. So this is all about cost sheet. And one important point I wanted to show you is that detail items excluded from cost accounts. So some items which do not include in cost accounts, that is appropriation to sinking funds, dividends paid, taxes on uh, income and profits transferred to general reserves. This all will not come as a part of P&L. Amount written of goodwill, premium expense, underwriting commission, capital expenditure specifically charged to revenue, charitable donations. So these are items excluded from the cost accounts. So there are matters of pure finance which are not considered in the cost accounts: loss on sale of investment, expense on transfer of company's office, interest on bank loan, debentures, damages payable, any damages, any penalties, any demurrages will not be considered in cost accounts. Any losses, so in excess of fair reward of services rendered, remuneration paid in excess of remuneration paid to the proprietor in excess of fair reward for service rendered is also not considered. They are purely financial incomes: interest received, profits made, transfer fees received, rent receivable, interest dividends, brokerages, discounts, commission, subsidy grant received. We do not consider in terms of cost accounts. Abnormal gains and losses also we do not consider in terms of cost accounts. So this is a important point. If you get in cost sheet, these items do not consider in the cost sheet because those are not considered in the cost accounts itself. Understood? Now, for our understanding purpose, let me take you to material part. One question I want to discuss in detail about the cost sheet. Now, we'll move to illustration number 3 in terms of cost sheet. It's very detailed question, so we'll try to understand. Okay. Annav Ispat Udyog Limited has the following expenditure for the year ended 31st March 2020. So you need to tell me under which head each item will come. Okay. Raw material purchased, which is part of what direct material consumed. GST paid on the above purchase at 18%. So this is, if IT is available, it is not form part of cost. Freight inward, we need to add to the direct material. Wages paid to factory workers, which is a part of what wages paid, which is a part of direct labor cost. Contribution made towards employees PF and ESI, it is also part of direct labor cost. Production bonus paid to factory workers, that is also form part of direct employee cost. Okay. How much is the production bonus paid? 2,90,000. Royalty paid for production, which is a part of direct expense. Amount paid for power and fuel, direct employee cost. So direct expense. Amount paid for purchase of molds and patterns. It is not jigs and fixtures. Jigs and fixtures means factory overheads. It is here. It is a part of molds and patterns, which is a part of direct expenses. Here, the equivalent life is 2 years. We need only amortized. So 8,96,000 divided by 2. 8,96,000 divided by 2. That is only amortization. Okay. So somewhere about 4,48,000. Job charges paid to job workers is also part of direct expense. Stores and spares consumed, which is a part of factory overheads. Depreciation on factory building, factory overheads. So office building, which is part of administration overheads. Okay. Depreciation on plant and machinery is also part of factory overheads. Delivery vehicles means distribution expenses. Salary paid to supervisors, factory overheads, so which are of indirect labor, right? Repairs and maintenance paid for plant and machinery, factory overheads. Sales office building, selling expense. Vehicles used by directors also is a part of administration overheads. Insurance premium paid for plant and machinery is factory overheads. Factory building is also part of factory overheads. Stock of raw material and work in progress is also part of factory overheads. Expenses paid for quality control check activities, which is a part of quality control cost after networks cost. Salary paid to quality control staff is a part of quality control cost. Research and development cost paid for improvement in production process, research and development cost. Expenses paid for pollution control, engineering and maintenance. This is a form part of factory overheads. Remember this. 26,600 is a form part of factory overheads. Expenses paid for administration of factory work, which is a part of administration cost related to factory, which is a part of cost of production. Correct? So very important. This administration cost related with the production. Salary paid to functional managers. Production control means factory overheads. Finance and accounts means admin overheads. Sales and marketing is selling and distribution overheads. Salary paid to general manager is a form part of administration overheads. Packing cost paid for primary packing, necessary maintain quality. Primary packing means cost of production. For redistribution of finished goods means it is a part of distribution overheads. So understand this. This is a distribution overheads. Interest and finance charges paid for usage of non-equity fund means will take as a part of cost of sales. Fee paid to auditors, administration, fee paid to legal advisors, administration, fee paid to independent administration overheads, performance bonus paid to sales staff, selling overheads. Valuation of stock as of 1st April 2009. Raw materials we should consider from direct material cost. Opening stock of raw material, add purchases, less closing stock of raw material. Work in progress is a part of gross works cost. Finished goods in terms of cost of goods sold. Amount realized by selling scrap and waste generated during manufacturing process, which is 86,000, should be reduced from credit for recoveries, right? We need to reduce 86,000. So from the following data required to prepare prime cost, factory cost, cost of production, cost of goods sold, cost of sales, correct? So this you need to prepare. So this all we discussed. So opening stock of raw material, direct employee cost, direct expenses, prime cost, this all comes as a part of factory overheads. And then we have quality control costs, research and development costs, administration costs, realizable value on sale of scrap and waste. This is 86,000 we should reduce here. Add primary packing cost. Give effect of opening stock of work in progress, finished goods, closing stock of finished goods. Then give effect of administration overheads, selling overheads and distribution overheads. Finally here, if you see here, interest and finance charge paid for non-usage of equity fund. If it is a equity fund will not be considered. Then cost of sales. If you see the notes also, GST paid on purchase of raw materials would not be formed part of cost of materials as it is eligible for input tax. If it is not eligible for input tax credit, then we'll be considering as a part of raw material cost. Then we have some few MCQs we'll try to understand it. Generally, for the purpose of cost sheet preparation, costs are classified based on what? Based on functions. Which of the following does not form part of prime cost? Cost of packing, cost of transportation paid to bring materials to factory, GST paid on raw materials, overtime premium paid to workers. So cost of packing is not form part of prime cost. So this is part of what? Cost of production. A Limited received an order for which it purchased a special frame for manufacturing. It is a part of what? Direct expense, especially for this. Salary paid to plant supervisor is a part of what? Factory overheads. Depreciation of director's laptop is treated as what? Administration overheads. A manufacturer set up a lab for testing of product for compliance with standards. Salary of this lab staff form part of what? Quality control cost. Audit fees, what? Administration cost. Salary paid to factory store staff is what? Factory overheads. Canteen expense for factory workers is form part of what? Factory overheads. This is what I'm discussing about canteen, right? A company pays royalty to state government on the base of production. It is treated as what? Direct expense. So in terms of theory expense, describe how costs are classified on the base of function. Material cost, labor cost, direct expense, factory overheads, administration overhead, selling and distribution overhead, distribution cost, right? Explain the treatment of administration overheads. Yes, we have discussed in terms of administration overheads. What are administration overheads? Include administration overheads in general and in terms of factory. So in terms of factory means those are incurred at the factory level. General includes what? Depreciation on maintenance of office, salary of administrative, rent rates and taxes, audit fees, accountant fees and everything, right? State advantage of cost sheet. Yes, in terms of cost sheet. If you remember cost comparison, you can understand cost attainment. You can use it for cost, and you can give it for cost submitting for cost centers. You can arrive at the profit. You can also achieve the cost control objective by using cost sheet. You can compare. So these all things are advantage of cost sheet. Okay, so this is one of the important chapter which they can give you for 10 marks. So please do not neglect it. So you do all the questions. You remember important points. Important points I already said in terms of amortization of molds and patterns, amortization of fixed and jigs, and quality control cost, and research and development cost, primary packing and secondary packing. And you need to understand logically which type of cost it is. So don't need to buttify it. Understand the nature of the factory, nature of office building, nature of corporate building, nature of selling and distribution. You can understand clearly yet. Okay. Yes. Very good morning, students. We are in the chapter number 8 in terms of unit and batch costing for marathon session. So hope you are enjoying the class and you are getting the proper inputs and proper knowledge from the marathon session. Okay. Right. Unit and batch costing is a simple chapter, but I'm expecting at least 5 marks from this chapter in terms of unit and batch costing. So let me share our notes. So unit and batch costing. So what is unit costing and what is batch costing? Unit costing is where the output produced is identical and each unit of output requires identical cost. That is we call it as unit costing. That means if I'm producing only unique product, not unique product, identical product, that type of costing is called what unit costing. This we can also call as single costing, etc., etc. Now, where we apply this unit costing, sir? Unit costing is applied in case of this is also called as single costing or output costing. So unit costing is applicable in terms of paper, cement, steel works, mining, breweries, etc., etc. Now, what we do is that in terms of unit costing, how will you work out cost per unit? Cost per unit is calculated based on total cost of production divided by number of units produced. Now, how will you collect the cost collection in terms of unit costing? Here you need to collect 3 types of cost. One is important is collection of material cost, collection of employee cost or labor cost, collection of overheads. Collection of material cost, collection of employee cost, collection of overheads. Now, how will you collect the material cost here? It is collected from material requisition notes. Sir, the person who requires a document will issue material requisition notes. Based on material requisition notes, I'll collect how much amount of material cost incurred for this unit. Then accumulated material cost is then posted into the cost accounting system. Maybe integrated or non-integrated system, right? In terms of employee cost, the direct employee cost is collected from job sheets. Might have learned in terms of labor. One minute. Now you need to collect the employee cost from the job sheets. The second one, the time booked or recorded is valued at appropriate rates and entered into the cost accounting system. So based on each, let us assume employee worked from morning 10 a.m. to evening 6 a.m., 6 p.m. Then against this 8 hours, what is the rate is given? So from that will be entered into the cost accounting system. Now, indirect employee cost are that these are collected from the payroll books and posted against the standing order, or they'll be booked into overhead expense. So whereas in terms of direct cost, it will be taken as a part of prime cost. Indirect cost is considered, indirect labor cost is taken into the factory overheads. Next one, collection of overheads. Now, these are collected under suitable standing orders numbers and selling and distribution overheads against cost account numbers. The total expense so collected are appropriate to service production department on some suitable basis. Maybe based on, let us assume, like how we do in production, primary distribution of overheads and secondary distribution of overheads. Now again, after doing the service department cost, again is transferred to production department. So first you'll do primary distribution of overheads. So total amount will be distributed to production departments and second service departments, and service department cost is again reapportioned by appropriate methods to production departments. So based on this, you'll be cost is collected into cost centers based on some appropriate base, based on mission hours or based on laborers. You'll find out the mission hour rate and labor rate. So that amount will be given, that will be considered as a part of overheads amount. So this is how you need to collect material cost, employee cost, and overheads cost in terms of unit costing. Now, in terms of the treatment of spoiled and defect works, very important. Treatment of spoiled and defective work. If the loss is due to normal reasons, if the loss is due to abnormal reasons, because they may ask you for theory question this topic, abnormal reasons. If it is abnormal reasons, please written off against written off, because this is not as a part, it will not go as a part of cost of production, written off against costing profit and loss account. If the loss is due to normal reasons, if the actual number of defectives is within the limit, actual number of defectives is within the normal limit. Second case, if actual number of defectives exceeds a normal limit. Now, cost of rectification in this case or loss, cost of rectification or loss, because the defective ones can be rectified or it can be sold at lower rate, you will be arriving loss, will be charged to entire output. So this is normal loss, will be this loss will be absorbed into the cost of production. Whereas it is beyond normal limit, written off against. So anything abnormal will be considered written off against costing profit and loss account. So if it is not abnormal reasons, please take it to P&L. If it is normal reasons within the limit, like 5% limit, then you charge it to entire output. If it is beyond the normal limit, if it is beyond the normal limit, please charge against the costing profit and loss account. So this is the treatment of spoiled and defective works in case of unit costing. Next one, batch costing. So where this is a type of specific order costing where articles are manufactured in predetermined lots known as batches. Like in terms of medicines, so the medicines are not produced individually, it is produced in terms of batches. Even if you see the prescription, it write the batch number. So that type of costing is called what batch costing, like pen, refills, etc., etc. Batch consists of such a number of units which are processed simultaneously. So these are processed simultaneously. Under this method of manufacturing, the inputs are accumulated in the assembly line till it reaches the minimum batch size. Soon after a batch, the size is received. All inputs in a batch is processed for further operation. So you need to keep optimum batch. So up to that, it will be kept in assembly line. So beyond that, after the batch size is received, all inputs in a batch is processed for further operation. So first, you'll keep up to level. If this is over, it will move to next process. Then next items will come into this process. Okay. The costing procedure in batch costing, say material cost, labor cost, and overheads cost. Material cost is based on material requisition notes. Labor cost is based on your job tickets and job sheets. Overheads is absorbed. Here, remember three important points. First one is allocation, where cost is known to each, where the costs are ascertained, when the cost can be traced to each cost unit, then you need to do cost allocation. If allocation is not possible, do an apportionment on some absorption, some appropriate base. And again, the service department cost is reapportioned. Once the allocation, apportionment, and reapportionment is done, then you'll go with the absorption by using mission hour rate or some other rate. Okay. Now, the important question in terms of batch costing is that, so the cost accumulation is same, material from MRNs, labor from job cost sheets, overheads based on some absorption. Now, economic batch quantity. This is similar to your economic order quantity. Now, what is the concept of economic order quantity? Sir, if I place more number of units at a some time, I'll be incurring the cost of, if I place more number of units in one order, I'll incur inventory cost more and purchase ordering cost is less. If I place less number of units in every order, the inventory carrying cost will be less, but purchase ordering cost would be more. So the level of activity where it minimizes total associated cost. Total associated cost includes carrying cost and ordering cost. So for that, the assumptions are there. That is the reason you are working out economic order quantity. Now, in terms of economic batch quantity, now let us assume if we keep less batch size, let us assume 100 units. Total production, I wanted to produce 10,000. Each batch 100 units. That means how many batches I need to work out? 100 batches. So for every batch, I need to incur cost called setup cost. As I already said in the earlier in activity-based costing, for a plastic industry, to keep the setup cost, I need to run my machine for 24 hours because the threads are supposed to be heated. In the 24 hours, assume no production, but you need to incur electricity, you need to incur consumables, you need to incur labor cost. So that means I am incurring setup cost. If my number of batches increases, setup cost is less. If my number of batches, if my number of batches increases, setup cost is higher. If my number of batches decreases, setup cost get decreased. Obviously, 100 batches, the cost would be high. If it is 10 batches, if we decided to produce 1,000 units in every batch, obviously the number of batches will come down. When the number of batches comes down, your setup cost will get reduced. Now, what is the second associated cost, sir? Second associated cost is inventory holding cost. Sir, when I produce more, if I keep less number of batches, that means I need to hold inventory of 1000 units. Average would be half of that. If I work out in 100 batches, I need to hold inventory of 100 units. If less is the holding, less would be the inventory holding cost. If I produce more in each batch, inventory holding cost would be higher. So what is economic batch quantity is that where the level of batch size where my setup cost and inventory holding cost would be minimum. And at EBQ, remember, at EBQ, setup cost would be equal to inventory holding cost. So for this, there's a formula. If I see here, now let us assume that inventory holding cost would be like this. Inventory holding cost like this. Setup cost, if my number of units increases, setup cost will reduce. Now obviously we will have the total cost, because total cost includes both, right? So inventory setup cost get decreases if my batch size increases. Obviously your inventory cost will increase. So the level of activity where both remains, where the cost is less, that cost is called what, that level of activity size, that level of batch size is called what? Economic batch quantity. So at EBQ, total inventory, if I add inventory cost and setup cost, the amount would be less. And at EBQ, both remains what, same. So that is the formula for, that is the concept of EBQ. How to calculate EBQ, sir? Two ways, by formula, square root of D to DS by C. What about EOQ? Square root of 2 AO by C, right? What is D? Annual demand for the product or annual production. S is what? Setup cost. C is carrying cost per unit per annum. It is given per month, you need to convert to per annum, right? So whatever the concept we learn in material cost remains the same. Carrying cost per unit per annum. So annual demand, carrying cost should be per annum. So this is the important point. Now, normally how will you calculate carrying cost? Half of the inventory, half of the EBQ, not EBQ, half of the batch size into carrying cost per unit per annum. Setup cost is number of setups into setup cost. So obviously, other than EBQ, your cost will be more. At EBQ, the cost will be less. Like let us assume if EBQ is 100, cost would be 5,000. If your batch size is 90, cost would be more than 5,000. Even if the batch size is more than EBQ, your cost would be more than 5,000. So at EBQ, the amount would be minimum. Okay, that is a concept here. Next, difference between job and batch costing. Simple cost. Job costing is non-standard. And for example, if you go to a Hero Honda showroom, your bike will have some repair, other person bike could be different. So both are not identical, right? So that means job cost is that non-standard, non-repetitive products produced as per customer specification and against the specific orders. Whereas in terms of batch costing, homogeneous products are produced in a continuous production flow. Cost is determined for each job, whereas in terms of batch costing, cost determined in aggregate for the entire batch, then arrive at cost per unit. Whereas, for example, your bike repair one job, this cost is different. Batch size, you will incur cost for 100 units. Let us assume one batch is 100 units. You will incur cost for batch per unit. If you want, you will divide by number of units in a batch. Third one, jobs are different from each other and independent of each other. Each job is unique. You'll prepare a job cost sheet. Whereas in terms of batch costing, products produced are in batch are homogeneously and lack of individuality. So more of same items. So three differences in terms of job and batch costing. First one is this is non-repetitive, non-standard, whereas this is same items. Here cost is determined for each job, whereas in batch the cost is determined for each batch, then per unit. Here each job is unique. Here individuality is missing in terms of batch costing. Okay, so this is the theory part in terms of unit cost, unit and batch costing. So we'll decided to discuss two questions from this chapter. So first one, when you want to work out per cost per unit, you will include all costs and divide by number of units. So economic batch quantity annual demand setup cost is given. Carry manufacturing cost per unit is given. Carrying cost is calculated on the manufacturing cost. So square root of 2 ds by c. 2 into demand is how much amount? 2,400. Setup cost is 100. Carrying cost is 200 into 6%. Carrying cost per unit per annum, right? Now, question number 4. Question number 5. A customer has been ordering 60,000 special design metal columns at the rate of 18,000 per order during the past years. The production cost comprises 124 rupees for material, 60 for labor, 20 for fixed overhead. So cost would be 200 rupees per unit. It cost 1,500 to set up for one run of 18,000 column. And inventory carrying cost is 15%. Since this customer may buy at least 5,000 columns this year, the company would like to avoid making 5 different production runs. Find the most economic production run. So in this case, if you see here, so here, what is square root of 2ds by CM? Square root of 2 into how much you're ordering? 60,000. So 2 into 60,000 into what is the setup cost of 1,500 divided by 200 into 15%. So you'll be arriving at the 2,415 units would be the economic batch quantity. Okay. Then question number 5. AB Limited is committed to supply 24,000 bearings per annum to CD Limited. On study basis, it is estimated that it costs 10 paisa as inventory holding cost per bearing per month. Remember here, if you are per annum, it should be also per annum. So 10 paisa per month means 1.2 rupees per annum. That is very important. So that is what you need to highlight. So in the examination, if the question is very simple, don't be tempted. Understand if there is anything information we are missing out or not. The setup cost per run of bearing manufacturing is 324. So what is the optimum run size for bearing manufacture? 2 into 24,000 into setup cost, how much amount? 324. Carrying cost per unit per annum, how much amount? 10 paisa into 12 months, 1.2. You will work out the optimum run size. What is the minimum holding cost at optimum run size? So obviously here you are having another formula. To find out the total cost, 2 into 24,000 into 324 into 1.2. You will get the total cost of inventory holding cost and setup cost. Half of that, because at EBQ, setup cost is equal to inventory holding cost. You can work out otherwise. Otherwise, you can say 1 by 2 into what is economic batch quantity, you will get that into what is the carrying cost per unit per annum, 1.2. That is how we can work out. Okay. Next one. Assuming that company has a policy of manufacturing 6,000 bearings per run, how much extra cost would the company be incurring as compared to optimum run size suggested in point number A? Sir, the square root of 2 AOC to find out the setup cost and carrying cost will be applicable only at the EBQ level or at EOQ level. Now if you wanted to go with 6,000 bearings, that means you need to do production for 4 times. 4 into setup cost how much amount? 324. So 4 into 324. Now 1 by 2 into carrying cost, 1 by 2 into 6,000 into 1.2 rupees. So this would be the setup cost, this would be the carrying cost. Whatever the cost here, and this cost would always be deferred, this would be higher. The extra cost you need to find it out. So what happens in such a case is that we'll be asking discount from vendor because I'm purchasing more, I am incurring more amount of setup cost and carrying cost here, or in terms of material ordering cost and carrying cost, please give discount to compensate this loss. Okay, so this is the point. So if you see here, you'll get EBQ of 3,600. So inventory holding cost is 1 by 2 into 3,600 into 1.2, 2,160. Now obviously at 6,000 your cost would be 4,896. How we'll get 1 by 2 into 6,000 into 1.2, which is carrying cost. Setup cost would be how many setups? 4 setups into 324, 1,296. Your cost would be 4,896. At EBQ, what is the cost of? At EBQ, whatever is the setup cost would be the carrying cost also. If 2,160 is carrying cost, setup cost would also be 2,160. Or you can calculate even in this way, you'll get the same. So 4,320. Extra cost is 576 that you can ask in terms of discounts. Okay. So normally this is the questions which they can ask. Now in terms of question number 6. So each wise they're asking us to calculate cost and profit per piece for each batch order and overall position of the order at the 1,206 pieces, which we can work out. So question number 7 is also with respect to, they're asking us to work out at different levels of batches. Obviously at EBQ the amount would be less. So which will minimize the total cost. So EBQ cost will minimize the cost. So cost includes both setup cost and carrying cost. So at EBQ both will same, and some of these two will be minimum when compared to other batch sizes. Okay. So please revise. This is here the important point is the collection of costs in unit costing and batch costing, treatment of defectives and loss, abnormal lesions and normal lesions within limit and outside the limit, and then EBQ formula. And in terms of EBQ, you need to understand square root of 2 ds by c, demand or annual production, annual demand. S is setup cost, C is carrying cost per unit per annum. So that even if it's given for per month, you need to convert to per annum, because whenever the demand is for annual, carrying cost should be per annum. If it is per month, it should be per month. Okay. Right, students, we'll meet in the next class. Okay. Very good morning, students. We have covered unit and batch costing. Now we are moving to job and contract costing of marathon session. This is chapter number 9. So in CA in IPCC, the chapter name is to be job and batch costing. In CA Incher, so they have taken unit and batch costing separate chapter, job and contract costing one separate chapter. And earlier it used to be job costing and batch costing. Now it is job and contract costing. So job costing is, these two comes under a concept called specific ordering cost. So under specific ordering methods, specific order costing, job costing and contract costing both comes under specific order costing. Now first we'll be discussing about job costing, then we'll be moving into contract costing. Okay, right, students. In terms of job cost sheeting, job costing and contract costing. Contract costing, you can expect at least 10 marks from the syllabus, from the examination. Job costing 5 marks to 10 marks. So this chapter is very important in terms of examination oriented. Now, In terms of job costing, first I'll move to job costing, then we'll discuss about contract costing. Because in terms of contract costing, important terms we need to identify, we need to do problems also. In terms of a marathon session, we have decided to discuss 4 important questions of contract costing, right? So I'll move the theory of job costing from the quick revision material of ICA. So it is page number 27. So some material theory I'm taking from our material. Some theory which is revision I'm taking from ICA reference material. Okay. ICA reference material is also well designed. Okay. Now, what is meaning of job costing? Job costing is applicable where the work consists of separate contracts, jobs or batches, each of which is authorized by specific order or contract. Now, normally, if you see, if you have a bike and if you are taking a repair bike for repairs to a showroom, first one, the person will come with a job sheet. Now, each job is of different problem. For example, your bike will have some issue. Other person bike may have some issue. Okay. So each is of separate order. Now, in terms of job cost sheet, if you see the job cost sheet here, the description number is given, blueprint number, material number, reference number, job number, quantity number, date of delivery, date of commence, date of finished. So in terms of this job sheet, it will accumulate what is the direct material cost for this job, direct wages for this job, production overheads for this job. So the total would be the production cost. For this administration selling overheads and percentage of profit or loss, you'll be arriving at what amount? Selling price. Now, usually in terms of specific order cost, so each material is issued directly to particular job. The labor is particularly charged to job. Overheads percentage is also charged to job. Then you will arrive at the selling price by adding markup. Okay. Now, in terms of principles process of job costing, principles is simple: analysis and ascertainment of cost of each unit of production, control and regulate the cost, and it determines the profitability of each job. The process of job costing, the separate cost sheet for each job. So if I take a vehicle, it is of separate job. The other person vehicle is separate job. So even when you're doing audit of a showroom, you'll have a job sheets. Disclose the cost of material issued for this job. Employee cost incurred on this job is calculated. When job is calculated, overhead charges are added for ascertaining the total expenditure, and some percentage of markup on the total cost or on the selling price is also calculated to find out the selling price of job. When the job costing is suitable, sir, when jobs are executed for different customers according to their specifications. So that means my requirement is different, his customer requirement is different, other person customer requirement is different, then you need to follow with the job costing. When no two orders are alike and each order job needs special treatment, where the work in progress differs from period to period on the basis of number of jobs on hand. So in these circumstances, job costing is suitable. Now we have discussed job cost code and cost sheet. It is a simple cost sheet where it shows the quantity of material issued, hours spent by different class of employees, amount of other expenses and share of overheads are recorded. This is the format of job cost sheet. Here, who is done the prepared, who is checked which cost unit I'm supposed to charge, everything will be there in terms of job cost sheet. Okay. How will you collect the cost for a job? Material cost. Sir, in terms of this material cost, it is directly traceable to with specific job or work order. For example, I say that material is required for job number 101. So you'll debit 101, you'll issue the materials. Posted to individual job cost sheets or cards in the working progress ledger. The surplus material is utilized on some other job instead of being returned to the stores first. Material transfer note is prepared. That means one job, for example, from 101 job, you have transferred material to 102. Normally, material should go back to stores. Now, what I'll do, 102 account I'll debit and 101 account I'll credit. So this is the accumulation of the material cost. Now, in terms of labor cost, booked against the specific jobs in the job time code or sheets, posted to the appropriate job cost sheet or work in progress ledger. In terms of overheads, manufacturing overheads are collected in suitable standing order numbers. Selling and distribution overheads are collected against cost account numbers. Total overhead expenses are apportioned to service and production departments on some suitable basis. So the total overheads are allocated to production service centers. Again, service department cost is finally transferred to production department. This is called secondary distribution. Reapportionment, secondary distribution of overheads. This is primary distribution of overheads. This is secondary distribution of overheads. The total production overhead is then applied to product on some realistic basis. So some percentage you will go ahead. Okay. So this is how you need to accumulate material cost, labor cost, and overheads amount. Now, very important point is spoiled and defective work. What is spoiled work and what is defective work? Spoiled work is a quantity of production that has been totally rejected and cannot be rectified. So even if you rework on that, it is no use. What is defective work? Sir, it is not quality product, but you can make it saleable provided you do rectification. So defective work is saleable, but do rectification. Spoiled work, you cannot rework and you cannot make it saleable. What is the treatment of defective work and spoiled work? Where a percentage of defective work is allowed in a particular batch as it cannot be avoided. The cost of rectification will be charged to whole job and spread over the entire batch. So when the percentage of defective work is allowed, you can say that 5% of my production is allowed. Defectives are allowed. That will be charged to more of like normal loss. That will be charged to entire batch. When the defect is due to bad workmanship, it is treated as abnormal cost and charged to P&L. When the defect is due to inspection department wrongly accepting incoming material of poor quality, so the cost of rectification will be charged to whom? To the inspection department, and this is not considered as the cost of the manufacturer of the batch because it is the fault of the inspection department. I will charge inspection department. So do you are getting any confusion with all this? Why I'm charging? Charging means it is a cost to them. So it is recovered from that department. Okay. So three parts. When it is a normal allowance, charge as a part of total product. If it is due to bad workmanship, charge it to P&L. If it is due to inspection department of poor incoming quality, if the inspection department worked properly, then the incoming material will not come. Poor incoming material will not come into place. So then defect will not happen. But if it is due to that person, it will be charged to inspection department. It is chargeable to inspection department. Okay. Accounting of cost for a job, it is more like your cost accounting system. So for purchase of material, stores ledger control account to general ledger account or cost ledger account. From materials issued to job, it will be going to work in process to stores ledger. From materials returning from job, reverse stores ledger control account to work in process. Materials, return of materials to suppliers, first entry, reversal. Cost ledger to stores ledger. Indirect material means factory overhead to stores ledger control. And again, this factory overheads will transfer to WAP. For wages paid, wages control account to stores ledger account. This is all happens when it is a non-integrated accounting system. For direct wages incurred on jobs, from wages it will go to WAP. Indirect wages from factory overheads, wages control, factory overheads control account to wages control account. Any indirect expense directly paid, factory overheads account to cost ledger account. So now I need to charge the overheads to job, work in process account to factory overhead control account. Now from work in process, it will go as a part of cost of sales. So cost of sales will be charged to costing P&L account. Any profit or loss will be transferred to costing P&L account. So that is the concept. The profit is lies in cost ledger account, will be transferred to costing P&L account. So this is more about cost accounting system ledger only, nothing new. What is the difference between job costing and process costing? Job is carried out by specific orders. Costs are determined for each job. And each job is separate and independent. Each job has a number of costs are allocated against the job number. So for 101 job number, material is allotted, labor is allotted, overheads are allotted, everything will happen. more managerial attention is required for the effective control. When it comes to process costing is a continuous flow and it is of same product. Product lost their capacity when it is going to process. For example, crude oil, when it is getting processed, you may get HSG, you may get diesel, HSG and diesel is same. Petrol, sulfur, nitrogen, okay, other products of many, what I can say, ATF, etc., lubes, etc. Okay, gas. Control here is comparatively easier. Now, this is all about job costing. Now come to the important point of contract costing. Here, few important terms to be understood. Earlier in terms of CA, IPCC, we used to have a different formulas to calculate the notional profit, but those formulas are not there now. So it is of completely different in terms of CA inter. Contract costing is also part of specific order costing. It's more like a job, but it takes more than 1 year to complete. For example, you are got an order to complete a residential apartment. It may take more than a year. Or you have got an order to complete a metro. It takes somewhere 5 to 7 years also. So in such a cases, we'll apply contract costing. So you can also link to some extent to AS7 also. Adopted by the contractors engaged in contracts like construction, building, road, bridges, erection of towers, etc. What are the features of contract? The features of contract costing is that work is carried out at the site of the contract. Normally, in all other costing, work is done at our place, whereas here the work is done at the contractor's place. Second one, separate account is usually maintained for each contract because each contract is of each cost object, so a separate account would be maintained. Bulk of the expense incurred are considered as what a direct cost to the particular job. Number of contracts undertaken by a contractor at a time is usually few because I got an order of, I cannot take 10 metros, right? Usually many construction companies, they used to have maximum 2 to 3 orders at a place unless it is very big. Indirect expense mostly consists of office expense, stores and works. Cost unit in contract costing itself, contract itself. So I discussed cost center can be same, cost unit can be same, cost object would be the contract only. Okay. What are the terms used in contract costing? Very important term is work in progress. Next one, value of work certified. Then cost of work certified, cost of work uncertified, retention money, notional profit, estimated profit. Please listen properly to these terms because these are very important in doing the problems of contract costing. Now, first one is work in progress. Now, obviously, if it is completed, it will be a finished product. If the work is not completed, because at the end of when the contract is for more than one period, normally at the end of the period, you will be having work in progress, right? Now, work in progress is a very important topic, very important term in terms of contract costing. The contract which is not complete at the reporting date, it includes, if it is completed, it would have been finished good. It is not completed, then only it comes under what? Work in progress. Okay. Now, cost of work completed, that is certified and uncertified. So, for example, what is certified work and uncertified work? Though that part of the cost which is completed and certified by a surveyor or certified by some person, competent person, that is called cost of work certified. What is cost of work uncertified? Work uncertified means cost is incurred, but it is not got certified. Okay. Now, so work in progress includes cost of work completed and cost of work not yet completed and amount of estimated notional profit. Okay. Now, so work in progress includes, so all these three. Okay. Now, cost of work certified and value of work certified, very important. Both are of different. Don't get, both are of easy. Cost is only one, value includes profit. So cost of work certified, value of work certified, first I'll understand. Value of work certified is what is the value of contract into percentage of work certified. You can say 30% work certified. Total contract size is 100 crores. So 100 crores into 30%. What is the value of work certified? 30 crores. Okay. Next one. Cost of work uncertified. Cost of work uncertified. What is the cost of work uncertified? Sir, you have completed the work. See here, cost of work certified, cost of work uncertified. Two things are supposed to be understood. First one, you try to understand value of work certified. How will you get the value of work certified? What is the total value of contract into what is the percentage of work completion, or what is the percentage of work certified? Second part is cost of work certified. Cost of work certified is equal to, sir, what is the cost incurred up to date? For example, you have incurred 20 crores. Out of this, what is the amount of cost work uncertified? So 2 crores work uncertified. Now, less materials in hand and plant at site. Because materials in hand, total material is charged here. Whatever is the closing material, I'm reducing. Total plant cost is included here. Whatever is the closing balance of plant, I'm reducing it. Okay, so cost of work certified, sir, total how much cost you have incurred? Out of that, so if we take a P&L account here, so all the cost is on debit. Out of that, sir, say something uncertified amount, 2 crores. Total materials are charged here, but balance there is something called materials in hand, somewhere about 1 crore. Total plant is charged on debit side. There is a balance of plant at site after depreciation. Now tell me, out of the total cost of debit of 20 crores, 4 crores is credit. So what is the cost of work certified? 16 crores. So cost of work certified is equal to what is the total cost incurred up to date less what is the cost of work uncertified and what is the amount of materials in hand, what is the amount of plant at site. So this is the concept of cost of work certified. Okay, next one. Cost of work uncertified. So this is the amount of cost which is not certified by an expert. And always remember, cost of work uncertified is shown at cost price. What about work certified? That is shown at a amount of profit. Profit is included. Whereas cost of work uncertified is always shown at which price, Amma? Cost price. Remember this important. Because it is not certified, you cannot, under prudence concept, we do not consider profit for which work is not certified. Okay. Now, how will you calculate cost of work uncertified? So simple. Already I showed. You can take the formula from here only. Cost of work certified is equal to cost of work to date minus cost of work uncertified. This minus if you take materials in hand and plant at site. From this formula, please derive cost of work uncertified. How will you get the cost of work uncertified? Cost of work certified, that is total cost of work to date minus cost of work certified, plant in hand and materials in site. So from one formula only we can derive two. So if you remember this formula, cost of work certified is equal to total cost incurred up to date, cost of work uncertified, materials in hand and plant at site. So this is total cost. This is cost of work uncertified, materials in hand and plant at site. So if you want this one, from this amount you reduce these two. So that is a concept of work certified and work uncertified. Okay. Now progress payments. So progress payment, normally every time the contractee is to give amount, how they used to give, what is the total amount of value certified? Sir, I need to get 30 crores. This is what we example, 100 crores in 30 crores. Already you have kept some retention money. Retention money is, so for I cannot give all the amount to contractor. I'll keep some amount. I'll give at the end of the total completion and payment up to date. So obviously you need to give progress payments. Out of 30 crores, you have decided to keep 5 crores as retention money. You need to give 25 crores. After 25 crores, you already given 20 crores. The remaining 5 crores would be the retention amount. So retention money is nothing but then value of work certified minus payment actually made, because progress payment and payment to date would be the payment actually made. Cash received. So out of the total value of work certified, I should get retention money. Okay. Notional profit and estimated profit. Estimated profit is for the total contract. Sir, if my total project cost is 100 crores, and if I estimate 90 crores is my cost, 10 crores would be the estimated profit. Because in the examination, they may ask you what is the difference between estimated profit and notional profit. Now, in terms of notional profit, always remember, profit is only from work certified. Profit is only from work certified. Now tell me, 30 crores is 30 crores is the amount of value of work certified. Out of this 30 crores, how much you have spent, which is cost of works to date. Out of this, how much is work not certified? Simple concept, if I say cost of work to date minus cost of work not certified means cost of work certified. So notional profit is nothing but then value of work certified less cost of work certified. That means out of this work certified, now let us say what is the cost of this work certified? Balance would be the notional profit. Now tell me in this period, for example, my revenue is 30 crores, cost of work certified is 20 crores. So 10 crores would be the notional profit for this year. Estimated profit means what if the total contract is completed, how much I'm expecting revenue, what is the estimated cost, the balance would be the estimated profit. Notional profit is for the respective years, because I cannot recognize all the profit at the end of the year. So I'll recognize the notional profit. Notional profit is simple. Two ways of calculate notional profit. Value of work certified minus cost of work certified. Please write down if you are having a time. So notional profit is equal to value of work certified minus cost of work certified. This cost of work certified I can take like this: cost incurred up to date less cost of work uncertified. Because after total cost, if I reduce work uncertified means it is work certified, right? So estimated profit is total contract price minus estimated total cost. Notional profit is different and estimated profit is different. Specimen of contract account with a few items. The cost of work uncertified may be ascertained as follows. Sir, materials, wages, direct, indirect expense, total plant and machinery is here, and any plant at site is credit side. All you can take depreciation, cost of subcontract, etc. all on debit side. Now, value of work in progress. What is the value of work certified? And value of work uncertified would be at cost. This is including profit. This is including profit. This is works uncertified. This is work certified. So the balance would be the costing P&L, which is to be taken to profit and loss account. Cost plus contract. Sir, normally two ways of giving a contract. First one, you incur whatever is the cost, I pay this amount. Second one is cost plus contract. You incur cost. On this cost, I'll pay 5% as margin. What are the advantages and disadvantages in both the cases? First case, the contractor may compromise the quality because he knows that he's going to get this amount. He is trying to reduce the cost by giving unquality materials or poor quality of materials. Whereas in case of cost plus contract, contractor is assured that because whatever the cost he incurred, he will get the reimbursement of the respective cost plus profit margin. Advantage is there, disadvantage is there. Advantage is that contract is assured a fixed percentage of profit, because if I spend 100 crores, 5% means 5 crores is profit. Useful when work to be done is not definitely fixed at the time of making the estimate. Contractor can assure himself about the cost of contract because I can examine other parties' books because I need to certify cost. Based on that, I'll reimburse it. Disadvantage is that contractor may go on spending more amount because he knows that I'm getting extra profit. That is a disadvantage in terms of cost plus contract. Now, in terms of many mining companies and all things, they used to have a cost plus contract. Now, Escalation clause. Sir, you know, for example, as on date, somewhere about April 22, if you can understand that you are giving a car for hire. You thought the diesel price would be 100 and you are given a quotation of 40,000 per month. Some to some income tax department or whatever it is that. Now see carefully. Diesel price may go to 150. What about your 40,000? So that is the reason majority of the contract they'll be having an escalation clause. Escalation clause is of different formulas they'll keep in different organization. When I do audit of single entity companies, if I see their escalation clause are very different. Now what happens is that at least sometimes there whatever increase in prices, I'll pay 50% of that price, you bear remaining 50%. See now in terms of very mining, diesel is the huge cost. Now diesel price every day it is getting very fluctuated. Okay, what is the spending? They are spending huge amount on this. Now to protect the contractor from increase in prices, escalation clause will be incorporated in the contracts. So it empowers the contractor to recover the increase in prices, protect the contract from financial adverse effects. Contractor may increase the contract price if the cost of materials, employees, and other expense increases beyond a certain limit. In contract, in escalation clause, I may say that you are giving some prices now. If the prices are increased beyond 10% only, I'll reimburse. Or beyond 10%, any increase, you bear 50%, I bear 50%. So different types of escalation clauses will be there, but it protects the contractor from adverse financial impact. If I see majority in case of some projects, contractors, they give tenders, they submit tenders at low prices. Later on, the prices increases. Now, sometimes they may are unable to complete it also. So, lot of financial effects will affect the person, especially if you're doing a government contracts. So, to protect that, escalation clause will be kept in the contract accounts to protect the contractor. So, this is all about contract costing. Okay, so point to be remembered here before we go to the problems is that how you are supposed to find out what is the value of work certified, cost of work certified, cost of work uncertified. Cost of work uncertified, if you see this formula, work certified is value, cost of work uncertified is at the cost. This is with profit, this is value of work certified, this is cost of work uncertified. So this is a cost. Okay, now this is all important. And so progress payment, retention monies, coastal profit, and cost plus contracts we have discussed. We have also discussed about escalation clause. Okay, now so let me move to chapter number 9, job and batch costing. Question number 2 is about job costing. So simple. A shop floor supervisor of a small factory presented the following cost for job number 303 to determine the selling price. Materials, direct wages at 18 hours at 2.5, chargeable expense 5, 1/3 of expense cost 40, total amount is 160. Now for department X, Y, and Z, you may have some overheads amount. Analysis of profit and loss account for the year given. Sales returns 2,50,000, materials issued 1,50,000, direct wages 30,000, special store items 4,000, overheads 5,000, 9,000, and 2,000. Total work cost is 2 lakhs. Gross profit is 50,000. So selling expense is 20. Net profit is how much amount? 30,000. It is also noted that average hourly rates of 3 department XYZ are what? Similar. You are required to prepare a job cost sheet. Calculate the entire revised cost using 2009 actual figures as basis. Add 20% of the total cost to determine what a selling price. So chargeable expense is given 120. So they assume 1/3 of expense for cost. which is not exactly correct. You should go as based on this overheads amount. Okay. So I'll take it to the solution. See here. So they are directly taken 1/3 of the total cost. So that is not correct. So what did they do is that, so direct material, direct wages and chargeable expense are correct. They are not considered overheads. How will you calculate the overheads in this case? Let me take a material amount. Now overheads, if you see properly, so what is the amount of overheads? So overheads amount is 16,000, right? What is amount of overheads amount? 16,000. So prime cost is 120, right? Now it comes to now. So in this question, if you see here, department X, how did they calculate overheads? If you see the based on actual figures of 2009, department X, how much amount of 5,000? What is the total direct wages of department X? 10,000 into what is the department wages amount? 20. So you are getting 10 rupees. For department Y, what is the amount of 2009 basis? 9,000. What is the total amount of direct wages? Because I am recovering overheads based on direct labor. What is the cost of year 15? So you'll get 11.25. Department Z 2.5. Total amount 143.75. Selling expense 20,000 you have incurred, correct? So on total works cost, 10% of selling expense. Similarly, here works cost 143.75. 10% I've considered. So total cost would be 158.125. For that, you have added a profit. How much they said profit? Yeah, 20% on total cost to determine the selling price. So you got the selling price of the job to be 189.25. Okay. So this is the important point is that how to calculate overheads. Overheads are recovered based on direct wages. Okay. Now, let me go to the next question. Question number 5, 6, 10 are for contract costing. G Limited commenced a contract on 1st April 2018. The total contract was for 1 crore 8,50,000. It was decided to estimate the total profit to take it to the credit of costing P&L account. The proportion of estimated profit on cash basis, which work completed back to the total contract. So the proportion, how much of notional profit to be considered is proportion of estimated profit on cash basis on which work completed back to the total contract. So work completed by total contract. Okay. On that basis, you need to consider that amount you should take it to P&L account. Actual expenditure in 2019 and estimated expenditure for 2019 are given below. Because on estimated profit based on works completed by total value of contract, you need to take the profit amount to costing P&L. So now come to 2018-19, material issued 18,24,000, paid and outstanding at 10. That means these both will become cost of 18-19. Now for 1920, out of 15,20,000, you might have paid previous balance. So this should be reduced and you should add 1,50,000. Please be very careful. Planned purchase 9 lakhs, expenses paid 4 lakhs, prepaid at the end. You paid 90. The prepaid means 4 lakhs minus 90,000, only 3.6 lakhs. Paid 7 lakhs and outstanding at the end, how much amount? 1 lakh. And this prepaid would become expense for this year. 7 lakhs plus 90, 7 lakh 90,000, and outstanding is 1 lakh extra. Planned return to store. So out of the total plan 9 lakhs, 3 lakhs is returned. So 6 lakhs would be the cost. So, and 19, it is the amount value is 6 lakhs. Material at site 1 lakh 20 at 3 lakhs. Work in progress certified 51 lakhs. Work in progress uncertified. This is would be at cost. Cash received, how much amount? 40 lakhs. By the end of the year, full work certified. There will be no work uncertified. Cash received is also full. The plant is subject to annual depreciation of 20% on WDV cost. The contract is likely to complete on September 30, 2019. Prepare the contract account for 2018-19 and estimate the profit for the contract. So I'll take it from the solution. Question number 5, right? Your material. See here. This question, right? So materials 18 lakh 24,000. Wages paid 12 lakh 20. You need to add 96,000. This is question number 5. So outstanding wages added. Sundry expense, how much amount? 4 lakhs. Prepaid you have reduced. The cost is only 3 lakh 10,000. Plant purchase 9 lakhs. Plant at site is 6 lakhs because 3 lakhs plant is store sent to plant. So balance is only 6 lakhs. Depreciation, how much depreciation? 20% on WDV cost. So 6 lakhs into 20%. So 1 lakh 20,000. Now plant return to store 3 lakhs. On 3 lakhs depreciation is 60,000, right? 2 lakh 40 only transferred. Materials at site. That means total depreciation is 60 plus 1 lakh 20. How much amount? 1 lakh 80. 9 lakhs into 20%, 1 lakh 80. I have shown separately. Materials at site 12 lakhs. What is the value of work certified? 51 lakhs. Cost of work uncertified 1 lakh 60,000. So this is the notional profit for the first year. Second year, you need to calculate total estimated profit. Materials carried down, how much amount? Last year materials at site will be the opening balance 1 lakh 20,000. Plant at carry down, because this is carried on 4 lakh 80. Value of work certified and cost of work certified would be the balance for the opening balance for the current year. Correct? No, last year WIP, current year opening WIP. How much current year are paid? 15 lakh 20 are paid. Outstanding wages 1 lakh 50. Last year outstanding wages you'd have paid from the last current 15 lakh 20 or reduced this. Sundry expense 7 lakhs you have paid. Last year prepaid 90,000 to be added. Current year outstanding 1 lakh to be added. Okay. Planned returns to how much amount? Planned returns to store 4 lakh 80 and depreciation is on 6 months only. So 6 months means 10%, 48,000. Materials at site 3 lakhs. What is the total value? Cost of work certified would be total value of the contract, how much? 1 crore 8 lakh 50,000, because uncertified would be 0. So what is our notional profit? 2,000. So total estimated profit would be 17 lakh 50,000 plus 2,000, 17 lakh 52,000. So this is the estimated profit of the contract. Clear? Right. Come to question number 6. Compute the estimated profit on contract which has been 90% complete from the following particulars. Total expenditure up to date 22 lakh 50,000. Estimated further expenditure to complete the contract 2 lakh 50,000. Contract price 32 lakh 50,000. Work certified 27 lakh 50,000. Work uncertified 1 lakh 75,000. Cash received, how much amount? 21 lakh 25,000. So how will you calculate the estimated profit on contract? So estimated profit, total contract price, how much amount? If it is normal 90%, we'll consider total contract price, how much amount? 32 lakh 50,000. Correct? Out of this 32 lakh 50,000, what is the cost of work certified? And what is a total estimated expenditure? Expenditure incurred up to date and further expenditure. So out of 32,50,000 estimated profit, total I am expecting my contract price to be 32,50,000. Out of this, how much cost is already incurred? 22,50,000. That includes both cost of work certified and value of cost of work uncertified also. So this 22,50,000 includes cost of work certified, cost of work uncertified. So further expenditure is 2,50,000. Estimated profit would be 7,50,000. If they ask you notional profit, what is the value of work certified? Value of work certified is 27,50,000 minus cost of work certified. How will you get cost of work certified? What is the cost incurred up to date? 22,50,000 minus cost of work uncertified 1,75,000 because it is already in the cost. So 22,50,000 minus 1,75,000 is 20,75,000. So 27,50,000, and so the balance would be the notional profit. So this is estimated profit. This is notional profit. Okay. Next one. Problem number 10. AKB Builders Limited commenced a contract on 1st April 2015. The total contract was for rupees 5 lakhs. Actual expenditure for the period 1st April 2015 to 31st March 2016 and estimated expenditure for April 1st 2016 to December 31st 2016 are given below. This is only 9 months. This is 12 months. So materials issued, labor paid, outstanding at the year means you need to add plant, sundry expense paid, prepaid at the end, similar to last question. Establishment charges for 9 months also it is given. A part of material was unsuitable and was sold for 18,125. Cost being how much amount? 15,000. A part of plant was scrapped and disposed for 2,875. The value of plant at site on 31st March 2016 was 7,750. Value of materials at site was 4,250. Cash received on account to date was 1,75,000, represents 80% of the work certified. The cost of work uncertified was valued to be 27,375. The contractor estimated further expenditure that would be incurred on completion of the contract. The contract would be completed by 31st December 2016. Further sum of 31,250 to be spent on plant and residual plant would be 3,750. Established charges would cost the same amount per month as in the previous year. 10,800 would be sufficient to provide for what amount? Contingencies. Contingencies also you're supposed to include it. Now, simple question. I'll take to this question. So this is ICI material question. So materials issued how much? 90,000. Wages paid 75,000 for we need to add outstanding amount. Plant, what is amount? 25,000. Sundry expense, prepare or reduced. Establishment charges 14,625. Materials are sold how much amount? 18,125. Because profit are not recognized separately, so it includes profit also. Plant sold how much amount? 2,875. Plant at site how much amount? 7,750. Because out of 25,000, 15,000 is this cost. 2,875. The balance would be the 7,750. Correct? Because plant 25,000 minus 2,875, 22,125. So material at site they also given What is the material at site? Plant is 7750, they are given. Material site is 4250. So work in progress certified 80%. What is the total contract price? Total contract price is 5 lakhs, right? So what is the work certified? They said in the question, cash received on account to date was 1,75,000, representing 80% of work certified. So if work certified is 1, cash received would be 80%. So I know 1,75,000 is the cost, cash received 80%. So it will get work certified to be how much amount? 2,18,750. So work uncertified is also given 27,375 because we need these two only. Because in this question they said cash received is 80% of work certified. So obviously I know cash received divided by 80%, I got work certified. So work uncertified would be 27,375. So notional profit is 58,500. And costing P&L, whatever is that material sold amount that I have taken to P&L account here. Otherwise, if you write 15,000, no need to write 3,125 here. So it is better you write on total amount, debit side you transfer to P&L account. So this is important, which you have missed in the examination. Okay. So notional profit is profit for the year is 58,500. Earlier we used to have 30%, 40% completion, different formulas. That is not there in the CA Inter syllabus. Now, estimated profit. So material consumed 90,000 plus 3,125. And what is this 18,125 was sold, right? So ultimately was sold 15,000, right? So 75,000. Further consumption, they said 85,750. Total material cost would be 1,60,750. Wages, original 87. Last, if you see the wages cost, 81,250 plus further cost would be 87,325. Out of that, 6,250 is paid from the previous expense that I have reduced here. So outstanding of the current period is 8,300. Total cost is 1,70,625. Plant use 25,000. After that, you have sold 2,875. So for 22,125, extra cost is 31,250. What is the closing balance of plant amount? 3,750 is given. So 49,625. Establishment charges 14,620 is per year, 9 months, 10,969. Sundry expense 7,250 plus further expense of 6,875. Reserve for future consists 10,800. Now tell me what is the total contract price? 5 lakhs. So estimated balancing figure would be 68,481. Already notional profit you have recognized 58,500. The balance would be the profit for the next period. Understood? So estimated profit you can work out by using a contract account or by a statement. Simple. For first year we have prepared the notional profit. Second year, first year expense plus estimated cost you need to prepare. Reduce from the contract price, you'll get the estimated profit. Because I already discussed estimated profit is total contract price minus estimated total cost. This includes already incurred and going to be incurred. Understood? So you need to understand in the examination while working out this 9/12, because this is for 9 months only, and profit in this separately, only cost to be reduced. 90,000 is cost, means you should reduce cost only. That is the reason total sales minus profit is considered here. Okay, reserve for future contingencies to be included for estimated profit. Okay, and whatever the profit on sale of materials, you should take it to costing P&L account. So this is the question in terms of study material. So one question you may have in terms of escalation clause that you can refer to our material or even the institute material. Okay. So if they are asked to work out 3 years, simple, every year debit expenses, planted side, cost of value of work certified and cost of work uncertified. This would be for the next year. Opening balance. Again, in that respective cost and work in progress certified, cost of work uncertified. Third year, the same opening balance, again cost, finally you will transfer to contractee account because you are giving that asset to contractee. Balance would be the costing P&L account, notional loss for the year. So all the notional loss will be taken to costing P&L for the respective years. So this is one important question which you need to revise if they are given for 3 years. Remaining questions, yes, you should be very careful to calculate outstanding prepaid in the current year would be the expense for the next year. Outstanding in the current period, they may pay. They may say outstanding year, and the next year they may say instead of giving paid, if they give you only expense for the next period, you should not include outstanding. If it is only paid, you should reduce it from outstanding. You should reduce outstanding expense to get the expense for the next period. Okay, so be little bit clear in terms of grammar. So more or less you will be clearing to this job costing and batch costing. So what did we discuss in terms of job costing and batch costing? So in terms of job costing, yes, we have discussed what is job costing. So what is accumulation of job from material, labor, and overheads, and what is the format of job cost sheet. And we have discussed about spoiled work and defective work. What is the treatment of defective work? If it is a normal allowance, you need to charge against a batch. If it is due to bad workmanship, take it to abnormal cost as costing P&L account. And if it is due to the fault of inspection department, please charge inspection department. Accounting for cost of job is also worked out, and advantages and disadvantages of job cost is also worked out. Contract costing, yes, we have discussed what is work certified, value of work certified, cost of work certified, cost of work uncertified. Cost of work uncertified would be at the cost amount, retention amount, progress payments with different questions. We also discussed cost plus contract. We have discussed escalation clause and respective questions. The questions may be to work out the contract account for 3 years, they may give you, or notional profit is different and estimated profit is different. Please be clear with this. Okay. So we have completed ninth chapter for marathon session. So we'll be moving to the next topic of material cost so that we can complete 10 chapters. I'm assuring if we do these 10 chapters also, we'll be getting 80 to 90 marks in the examination. Okay. Sorry, 70 to 80 marks in the examination. Thank you. Very good morning, students. We are moving to the next topic, 10th chapter of the marathon session. Hope you have enjoyed up to now watching the 9 chapters. Now we are moving to the 10th chapter. So material, labor, and overheads is the normal basic chapters, which is more important for theory as well as problematic. Material cost is one of the important chapter in terms of theory. So surely you'll get a theory question from the material chapter in terms of examinations. Okay. Now, in terms of material chapter, what are we going to discuss? So it is better you look after our material. So it is 100% covered with respect to our material. So even it is marathon or even it is our material, I'll be taking both simultaneously to make you to understand the different topics of material costing. So let me close other material. Now, so in basically what is there in terms of material cost? So first one is material procurement, how the materials are valued, and storage records of materials and inventory control and valuation of material issues, then accounting of scrap, waste, defectives, spoilage, and the consumption of materials. Now, how the materials are valued or recorded in the stores ledger? Because there are some expenses which are supposed to be removed from the cost of materials. There are some expenses which are supposed to be included. So that I'll be discussing from our material. Now, generally, purchase price of materials is considered, and all insurance charges, commission, brokerage, which is with respect to materials procurement is added, freight inward is added, cost of containers. If it is a normal reasons, wastage due to normal reasons is also added. And if the duties and taxes where input is not available, that is a form part of cost. If the input is available, that doesn't form part of cost, that is taken as a part of assets. Deductions and exclusions. Sir, any discount, rebate and subsidy received will be reduced, and duties and taxes for which credit or refund is available. If the refund is available, it is reduced. The refund is not available, it is form part of cost. Penalties and charges we do not include as a part of material cost, any demerit charges, etc. Other expenses not borne. If I discuss a little bit more in terms of our material, so trade discount will reduce it from the cost of the invoice. Quantity discount, like trade discount, quantity discount is also shown as a deduction from invoice. Cash discount is not cash discount is not deducted from purchase price. The reason is that cash discount is given for early payment of amount to reduce the interest cost. So cash discount should not be deducted from the purchase price. Subsidy grant and receipts is supposed to be reduced from the cost of purchase. Duties and taxes, if it is refundable, doesn't form part of cost. If it is not refundable, it is form part of cost. Penalty and charges, any penalties and charges is doesn't form part of cost because those are abnormal costs that should be taken directly to costing, profit and loss account. Other expense like insurance charges during goods in transit is form part of cost. Commissioner brokerage paid to procure the material is part of cost. Freight inward is part of cost. Cost of containers, very important in terms of examination. Treatment of cost of containers, non-returnable containers and returnable containers. If the containers is added with the cost of purchase of materials because non-returnable, so that is a form part of cost of purchase. If returnable containers are there, so the amount doesn't form part of cost, only shortfall. For example, your cost is 100 but you got only 50 rupees, so 50 rupees would be the cost. So that is a concept of cost of containers. Shortage due to normal reasons, shortage due to abnormal reasons. If shortage is materials is due to normal reasons, it doesn't form, it is form part of cost. For example, you procured oil to sell in the pump, you know that 5% is normal loss. Now for 100 units, if the cost is 100, 5 is normal loss. Now for 95 units also cost is how much amount? 100. So the amount of this 500 should be recovered from good units. It is due to normal reasons. Shortage is due to abnormal reasons. Please take that amount to profit and loss account. Now if it is abnormal reason, what is the cost of 95 units? 95 rupees only. This 5 will be taken to costing, profit and loss account. Okay. Now, how the material is procured, sir? First one, you should get a bill of material. So for this product or for this production, what are the total requirement of material is required? That is called BOM. So first BOM is done. So first BOM you should receive BOM from the, what is the total documents required? First process is BOM. Then material requisition note is supposed to be given. So the department which requires material, they are supposed to give material requisition note to stores. If store is available, the items will be given. If stores are not available, store department should send requisition for purchase department. Purchase department, after verification and after selection of vendors, they will issue a purchase order. So after purchase order, you'll get the goods. The items are not of quality, you'll return it off. So this is the concept of how materials are procured. How inventory is calculated, sir? Inventory is control. Inventory control is very important because lot of amount in terms of manufacturing sector, the amount is whole in terms of inventory. So if you keep more amount of inventory, more is the inventory carrying cost, more is the insurance, more is the storage cost, etc., etc. But if you do not keep proper inventory, you may lose some types of sales also. So optimum quality, optimum inventory is supposed to be maintained. So how the inventory control is maintained, sir? By setting up of quantitative levels. So reorder level, maximum level, reorder quantity, danger level, buffer stock, etc. on the base of relative classification like ABC, FSN, VED, etc. using ratio analysis and physical control. Now, how will you calculate inventory control by setting quantitative levels? Reorder stock level means when to order. This is very important. So if I get a quantity to some extent, when I should place an order. Reorder quantity, how much to order, how much I should place an order. The reorder quantity in the optimum is economic order quantity. Maximum stock level, up to how much stock I can keep. Minimum stock, at least how much to keep. Average stock normally kept. Danger stock level that is kept for emergency requirement. Buffer stock to meet the sudden demand. So these formulas are very important. When it comes to reorder quantity, that is economic order quantity. So economic order quantity where the associated cost, what are the associated cost? Carrying cost and ordering cost is kept minimum. At EOQ, ordering cost is equal to carrying cost. What is the formula for EOQ? Square root of 2 into AO by C. A is annual requirement. C is cost per order, ordering cost. C is carrying cost per unit per annum. If it is annual requirement, carrying cost should be per annum. How will you calculate carrying cost? Carrying cost is calculated on the cost of purchase. Okay, so be careful. If it is annual requirement, carrying cost per unit per annum. If it is a monthly requirement, carrying cost per unit per month, you are supposed to consider. Now, JAD system is a pull system. We used to have a push system and pull system. Push system means traditional system. You produce the goods and you push it for sales. Pull system means you get the order, then you produce the goods. So JAD is pull system, and whereas traditional costing is push system. Now, how these levels are being maintained? So very important. You can look after to our material. So these formulas are very important. Now, economic order quantity, yes, square root of 2A by C. So we have two associated costs. So carrying cost and ordering cost. When the number of quantity increases, ordering cost decreases. When the number of quantity increases, carrying cost increases because you keep more amount of inventory. So there is a level where the total cost kept minimum. So that is we call as annual relevant total cost. So that is we call as EOQ. So EOQ, at EOQ, ordering cost is equal to carrying cost. To find out the total associated cost at EOQ, square root of 2 AOC. So you'll get what is the total ordering cost and carrying cost. At EOQ only, carrying cost is equal to ordering cost. So whatever the amount you get, you can take off as carrying cost, off as ordering cost, not in other cases. Only at economic order quantity. So there are assumptions for economic order quantity. You need to consider it. Okay. Now, this is the stock control sheet. So this is the buffer stock, minimum level, reorder level, how much you're ordering, maximum stock level. Okay. Now, first one, reorder level. Reorder level tooling. Sir, at what level I should reorder? Let us assume first thing, sir, I need 5 days to get the item back, maximum 5 days. So each day, what is the maximum usage? Every day you'll use maximum 1000, sir. 5 days is maximum reorder period. So at least you should keep, when you need to reorder, so at least when you get this quantity level, you need to place a reorder level. So first case is that maximum reorder period into maximum usage. Maximum reorder period into what? Maximum usage. Now, second one, if you see second one, when you are supposed to reorder, at least when you are having minimum level plus average stock quantity and average reorder period. That means, for example, minimum level I supposed to maintain in the organization. Now, instead of maximum period, I'll take what is the average rate of consumption and what is the average lead time. Lead time is placing an order and receiving the item. First one is extreme, maximum. Sir, if you are thinking that I'll get units in 5 days, please be conservative. So 5 days, what is the maximum usage? When your stock reaches this quantity, you place an order. That's the first one. Second one is you need to maintain minimum level, sir. Plus, instead of maximum, what is the average consumption and what is the average time to obtain fresh supplies? That is average lead time. So there is a formula. Now from this formula, reorder level is equal to minimum level plus average consumption into average lead period. Now minimum level is equal to reorder level minus average consumption into average lead period. That is the minimum level formula. So from this formula only we can derive the minimum level formula. Maximum level. So what is the maximum level? So if you see the maximum level, this is reorder level, this is reorder quantity plus minimum consumption minus minimum reorder period. Because after this total reorder level, I'll reduce this minimum level. Okay. So maximum level is equal to reorder level plus reorder quantity minus minimum consumption minus into minimum reorder period. So this is the minimum stock you always keep. So total, because in terms of reorder level, you'll have minimum level, right? So in the reorder level, you need to reduce the minimum consumption. So maximum level is equal to reorder level plus reorder quantity minus minimum consumption into minimum reorder point. The first reorder level, please speak with me. Reorder level is equal to maximum usage into maximum lead period. Second way, minimum consumption plus average consumption, minimum level plus average consumption into average lead time. From this formula only can derive the minimum level. Maximum level is reorder level plus reorder quantity minus maximum minimum consumption into minimum reorder point. Average inventory level, half of the maximum level plus minimum level or minimum level plus half of the reorder quantity. So two formulas. So minimum level plus half of the reorder quantity. So you measure times you'll be using this formula. So average inventory is equal to minimum level plus half of the reorder quantity. Reorder quantity is not equal to EOQ. You can order either in EOQ quantity or some other quantities. At EOQ, the cost is less. That's it. The associated cost with the purchase, that is carrying cost and ordering cost, will be kept minimum. Next one. Next one. What we have, danger level. It is a level at which normal issues of raw material inventory are stopped and emergency issues are only made. So that means when your quantity reaches danger level, that is for emergency purchase. So beyond that, stock should not go down. So what is the average danger level? Sir, at least for emergency purchase, what is the lead time? If I want urgently, I'll need 1 day. At least you keep that 1 day as a danger level. Otherwise, your company will get shut down. Okay. So these are the concepts of and buffer stock is that kept for contingency. Okay. Now I'll write down one by one formula for your understanding. So first one, reorder level, two formulas. So very important, they can ask for reorder level is equal to maximum reorder period into maximum usage. or minimum level plus average lead time into average consumption. So from this minimum level is equal to reorder level minus average consumption into average lead period. Next point, our maximum level. What is the maximum reorder level plus reorder quantity minus minimum consumption into minimum reorder period? Average inventory half of the minimum level plus maximum level or minimum level plus half of the reorder quantity. Danger level, emergency lead time into average consumption. This all formulas are derived from the stock control chart. Buffer stock which is kept for contingency. Okay. Now, next one. On the basis of relative classification, ABC analysis. On the base of value and frequency of inventory. We also speak many times ABC analysis. So what is ABC analysis here is that there are some items which the quantity is less and value is more. There are some items where quantity is more and value is less. So that is the concept of ABC analysis. So here normally 70, 20, 10% will be there. So quantity is 70 means value is 10. If the quantity is 20 means value is 20. If the quantity is 10, value would be 70%. Because in some organization, so like for example, in our house, we have a number of items, but gold value when compared to other items would be more. So that is the ABC analysis. You need to control your items based on ABC analysis. More focus on those items where value is more and quantity is less. Next one. We have other analysis, HML. In this, all items are classified into high price, medium price, and low cost items. So high price items are given more value, more control. VED items are classified as vital, essential, and desirable. So this system is particularly in terms of spare parts inventory. So if there is some vital items, vital tools, if that is not available urgently, your production may get shut down. So that is one way. FSN, fast moving, slow moving, and non-moving. That is one way of classification. Golf, government supply, ordinary supply, local supply, and foreign supply. Because if it's local supply, you can get items fastly. Foreign supply need more amount of time, like that. Source, seasonal items and unseasonal, off-seasonal items. So these are the ways of classification. Just in time, I already discussed demand pull system. So because in terms of Maruti, if you see, they always ask their vendors to be within their vicinity so that they don't hold the inventory. Whenever they require, they place the order, they try to reduce the cost. Now, using ratio analysis, input output ratio, how much input to be given, how much is the actual output. Inventory turnover ratio is very important. Cost of material consumed during the period divided by cost of average stock held during the period. That is inventory turnover ratio. So if number of days, if you want to calculate 365 divided by inventory turnover ratio, you'll get number of days. Okay. So inventory turnover ratio is cost of material consumed during the period. What is material consumed? Opening stock plus purchase minus closing stock. Average stock 1/2 of opening stock plus closing stock. Now, in terms of physical control, so two bin system is supplemented to the record of respective quantities on the bin card and stores ledger card. Establishment of system of budgets, perpetual inventory records you try to maintain on day-to-day basis so that you'll have a control and you can go for stock audits, continuous stock verification. Okay. Now, valuation of materials issues. So there are number of methods: cost price method, average price method, market price methods, and notional price methods. So cost price method, specific price method. So if you can able to do specific price method, please go. AS2 also allows. Specific price method means when you know each cost of the material is this cost, you record at that price only. But if specific price method cannot be followed, you can go with FIFO, LIFO, and weighted average method. FIFO method means first in, first out. LIFO method is last in, first out. Base stock method means you'll keep some base stock, then only you can go with FIFO, LIFO methods. So that is the cost price method. Average price method, simple price average and weighted average price method. Market price method means replacement price method. For example, if I'm issuing one item now, if I want to replace the same, what is the cost? So based on that, you maintain the material issue. Realizable price method. If I'm having an item, if I want to sell this one now, how much I'm going to get? So based on that, you can record the market prices. Replacement price method and realizable price method. Notional price method. So standard price method. So you fix the price. At the end, you find out the variance. Inflated price method and reuse price method. Okay. So this is the valuation of material issues. Normal and abnormal loss of materials, very important for examination perspective. Please concentrate now. If it is a waste, waste is a portion of basic raw material lost in processing, have no recoverable value. So you have lost in terms of production and you will not get any item from that. Scrap is that you are getting some residue out of the production. So that is having low value. Spoilage means goods damaged beyond rectification to be sold without further processing. Spoiled. Defectives means, yes, it can be rectified with some amount of cost to be incurred. Obsolescence is that it is a loss in the intrinsic value of an asset due to supersession. The time is over, so it becomes outdated. Now, what is the treatment in each case? If it is a waste, cost of normal waste is absorbed by good product. If it is a normal loss, how we do the same concept. Abnormal, take it to P&L account. Scrap, any amount which is, it will be borne by good units. If any realizable value, please reduce it from cost. Abnormal, please take it to costing P&L account. Treatment of spoilage. So if it is a normal spoilage, it is spread over all the products. If it is abnormal, take it to P&L account. Defectives. So any costless chargeable realizable value on sale of defectives are charged to material cost of goods production. Abnormal defectives take it to P&L account. Obsolescence does not form part of manufacture. Okay. So abnormal take it to P&L account. Normal will be charged to good units. So this is the concept of materials. So I'll also discuss from our valuation of material receipts we have discussed. Realizable price type. So inflated price method, the issue price is based on inflation. So that is considered. Difference between waste and scrap is important. So waste is that you'll not see, it is invisible, no recoverable value. At least scrap you may get small amount. Scrap and defectives can be rectified with some cost. Scrap we cannot get rectified. Bin card and stores ledger. Bin card is kept in the storekeeper. So that is just says that how much quantity is available here. Stores ledger includes value and quantity both. Bill of materials and material requisition. Bill of materials is prepared by engineering department. So it is a complete schedule of component parts and raw materials required for particular job or work order. So it can replace the stores requisition. It is used for quotations. It is a quantitative control. Material requisition is prepared by consuming department. I want all these materials. So it is a document authorizing storekeeper to issue materials to the consuming department. It cannot replace bill of material. It is useful in arriving historical cost. It shows the material actually drawn from stores. So bill of materials is prepared by engineering department. Material requisition is for the consuming department which needs the material. Normal loss and abnormal loss. Defectives we have discussed. Inventory turnover also we have worked out, right? So average number of inventory holding is 360 days divided by inventory turnover ratio, or 12 months divided by inventory turnover ratio in terms of months. Okay. So these are the topics in terms of materials cost. So here the levels, reorder level, reorder quantity, minimum level, maximum level, economic order quantity. So these are all supposed to be worked out. And defective, scrap, waste. So this is important. Difference between those two, and differences of bin card and stores ledger, bill of materials and MRN is also important. So we have valuation of material receipts and ABC analysis, this HML, VED, FSN, Golf, SOS, these are also important. You need to work out on this. So, and what the cost to be incurred and what is the valuation of material receipts is supposed to be considered. So this is the total concept of material cost. Okay. So Marthan material will be discussing with question number 10. So we have few questions which you can, I'll say directly the answers. You can just practice those questions. Okay. So what is important only I'll be discussing here. Hope students you are listening and understanding. So please share to your student friends also. So they'll also get benefited by listening to these classes. Okay. Now first one, two components A and B are used as follows. Normal usage is given. Minimum usage, maximum usage, reorder quantity, reorder period is given. So how will you calculate the reorder level? The reorder level you can calculate based on maximum consumption into maximum usage, or minimum stock level plus average rate of consumption into average reorder period. Average you can take based on 4 and 6 and 2 to 4. Minimum level from reorder level you can work out. Maximum level, how will you get maximum level? Reorder level plus reorder quantity minus minimum consumption, minimum reorder period. Average stock level off of uh, minimum consumption plus maximum consumption, or you can work out like minimum stock level plus off of the reorder quantity. So I'll open those questions also. So which question number? Question number 2, right? So this is what we have worked out. So reorder level is maximum usage into maximum reorder period, or this formula. Minimum level, and from here only you can work out minimum level, and maximum level, reorder quantity, minimum consumption, minimum reorder period. Average stock level is this one, correct? So this is question number 1. Next one. A customer has been ordering 5,000 special design metal columns at the rate of 1,000 per order during the past year. The production cost is 12 rupees per unit, 8 rupees for material and labor, 4 rupees for overheads. It costs 1,500 to set up for one run of 1,000 columns. Inventory carrying cost is 20%. Since the customer may buy at least 5,000 columns this year, the company would like to avoid making 5 different production runs. Find out the most economic production run. So this is also question number 7. So most economic production run is EBQ, square root of 2 into what is annual demand number? 5,000 units into 1,500 divided by carrying cost per unit per annum. So which you are getting 2,500 units. Okay. So this answer. So annual production, batch setup cost, carrying cost per unit per annum. Okay. Then we have a problem number 9. So this is also very important point. Mrs. Tubes Limited are the manufacturers of picture tubes for TV. The following are the details of the operation during the current year. Average monthly market demand is given. Monthly market demand is not required, right? You no need to worry about that. Ordering cost is given, carrying cost per unit per annum is given, cost of tube. So based on 200 into 50% only inventory carrying cost. Normal usage, maximum usage, minimum usage, maximum usage, and lead time to supply. Economic order quantity. So question number 9, they are asking us to calculate economic order quantity. Now here, majority of the students, what they do is that they consider 2,000 as annual requirement. No, here you need to go with the normal usage. How many normal usage? Of 100 into 52 weeks. This is the annual consumption. So your EOQ is based on this 5,200. Please understand, this is only the important point here. So majority of the students, what they think is that based on monthly demand, they try to calculate the economic order quantity. Not correct. Annual consumption is required. So annual consumption is not given. So we go by the normal consumption, that is average consumption into 52 weeks. That is economic order quantity. If the suppliers are willing to supply quarterly 1,500 units at a discount of 5%, is it worth accepting? So you need to find out what is the cost of EOQ. Square root of 2 AOC directly you can work out to carry out the total cost. Procurement cost plus associated cost, this one. Now when it is a discount, purchase price will come down, and you cannot work out this formula square root of 2 AOC because it is not at EOQ. Find out separate ordering cost. How many orders you place? 4 orders, 100 rupees. Carrying cost is half of the order size into carrying cost per unit per annum. Your carrying cost per unit per annum, you need to work out based on 595% because it is not on 500. And your purchase price is only 500 into 95%, but carrying cost is also based on 500 into 95%. So please highlight this important point here. Okay. Next one. So if the total price reduced, we can accept. Normally, the price is same, and if the price is same, other than EBQ, other than economic order quantity, at any level, the cost would be more. Less than economic order quantity, also cost is more. To compensate that, what vendors they do is that they try to reduce the purchase price. Maximum level of stock, you can go with minimum level of stock, and the reorder level also, right? So 3 important points. So reorder level is maximum level stock is reorder level plus reorder quantity minus minimum consumption into minimum reorder period. From minimum level of stock, you can work out based on reorder level minus average consumption into average lead time. So reorder level is maximum consumption into maximum lead period, or you can work out reorder level as minimum level plus, what is the formula? Minimum level plus average rate of consumption into average time to obtain the purchase, that is average reorder period. Okay. Now question number 30 I'll move, then I'll go to question number 12. Question number 13 is simple. Inventory turnover ratio. Cost of raw material consumed, opening stock plus purchase minus closing stock divided by opening stock and closing stock, average stock. Number of days for which the inventory is old. 12 months, 360 days divided by inventory turnover ratio. If it is in months, 12 months divided by inventory turnover ratio. So this is the average inventory holding period, correct? So 360 days divided by, or 365 days divided by inventory turnover ratio. That is, you need to apply for problem number 13. Problem number 12, normally it is a little complicated, and in the examination, if they wanted to give complicated, they look after these questions. Come on, students. IPL Limited uses a small casting in one of its finished products. The castings are purchased from a foundry. IPL Limited purchases 54,000 castings per year at a cost of 800 per casting. The casting are used evenly throughout the year in the production process on a 360 day per year basis. The company estimates that it costs 9,000 to place a single purchase order and about 300 to carry one casting in an inventory for a year. So carrying cost per unit per annum, 300. The high carrying cost resulted from the need to keep the castings in carefully controlled temperature and humidity conditions from the high cost of insurance. Delivery from the foundry generally takes 6 days, but it can take as much as 10 days. The delays of delivery time and percentage of their occurrence are shown in the following tabulation. Compute the economic order quantity. So economic order quantity square root of 2 into 54,000 into carrying cost 300. Sorry, ordering cost is 900 divided by carrying cost 300 square root. You will get the answer for question number 12. Question number 12, this one. So square root of 2 into 54,000 into 9,000 divided by 300, 1800. castings. To this is simple. Next point. Assume the company is willing to assume 15% risk of being out of stock. 15% being out of stock. What would be the safety stock and the reorder period? First, you need to work out economic order quantity. Economic order quantity, how will you work out? Square root of 2AO by C, 1800 castings. Second point is very important. Assume the company is willing to assume 15% of risk being out of stock. What is the safety stock and the reorder period? Now see here, what is the normal minimum lead time? 6 days. Maximum lead time, how much amount? 10 days. Okay. So minimum 6 days, maximum how many days? 10 days. Now 6 days, what is the probability? 75%. 7 days means 75 plus 10, 85. 8 days means 90. 9 days means 95. 100 days means 100%. So by 10 days, you'll get maximum 100%. Now it is about the risk you are taking. If you want 15% being out of stock, 15% risk is accepted. 15% means you are expecting that what is 85% probability of coming. Now you need to maintain minimum 6 days reorder period. The reason is that below 6 days you will not get item. So 6 days consumption is compulsory. Now tell me how many days extra safety stock you need to keep it, because your 15% risk you are accepted. 1 day safety stock. Correct? So if you see the point here, if safety stock, if company assumes 15%, you need to maintain for 1 day, because 6 days is minimum you need to maintain. 6 days you'll get only 75% probability. To get 85%, 1 day you need to maintain safety stock. 1 day means how many units? 150. Reorder point, safety stock is 150. Reorder point, minimum level plus average consumption into average lead time. What is average consumption per day? 150 units. How will you get 150? 54,000 divided by 300. So 360 here. 360. So 54,000 divided by 360. Per day, how much amount? 150. So 1 day will keep safety stock because you are taking a risk of 15%. So total will be 6 plus 7, 7 days, 1050 castings. Next, if the safety stock, if company assumes 5%, so you want to take only 5% risk. That means 9 days. 6 days minimum. Extra how many days safety stock you need to maintain? 3 days. 3 into 150. How much amount? 450 castings. Then what would be the reorder period? So total for 9 days, I need to keep minimum. So 1350. Fourth one, if assume 5% out of risk, that is 9 days, what would be the total cost of ordering and carrying inventory cost per year? Sir, you are placing to order based on EBQ, economic order quantity, EOQ. So 30 orders, ordering cost is 30 into 9,000. Carrying cost, what is carrying cost per unit per annum? So carrying cost is 450 is minimum, because 5% you wanted to take the risk. That means 6 days is minimum, sir. Safety stock this is. For extra 3 days, I need to maintain stock. 3 into 150, how much amount? 450. So 450 stock is safety stock plus half of the order size into carrying cost per unit per annum. So you'll get 4,05,000. Very important this point. Sir, when you're taking a risk, sir, 6 days means 75% probability. 7 days means more than 75 or less than 75. You're getting more. 10% extra between 6 to 7. 75 plus 10, how much amount? 85. 8 days, 90%. 9 days, 95. If you want to take 25% risk means you'll keep only safety stock for 6 days. If you want to take 15% risk out of being stock, 15% stock, 15% of risk being out of stock. So 15% risk I can take, sir. That means I should get conformity of 85%. So that means 7 days. 6 days minimum you need to keep. So when you want to take risk of only 15%, 1 day safety stock. If you want 10% risk, 2 days safety stock. Only 5% risk is 3 days safety stock. I don't want to take any risk, sir. Keep 10 days safety stock. Okay. So this is very important. And refer to the original data, and assuming that process range in the company reduce its cost of placing a purchase order only to 600. In addition, company estimates that when the waste and inefficiency caused by inventories are considered, true carrying cost is 720 per unit. Find out the new EOQ. Square root 2 into 54,000 into ordering cost is 600, carrying cost is 720. Number of orders, how much you place? 180. What is the frequency of orders, sir? Total you need 180 orders you need to place in 360 days. That means for every 2 days you need to place an order. So this is the revised EOQ. So one of the important topic and tough topic in terms of material cost variance. And let's do this problem again. So you will have, so what is if you want to take 15% risk means you are happy with, you need to get the items in 7 days. The 6 days is minimum lead period, 1 day safety stock. Okay. 5% risk means 9 days I'll keep. 6 days always you'll keep. 3 days safety stock you'll keep extra. Okay. So while calculating carrying cost, see here, safety stock 5% risk means 3 days stock you'll keep it, which is 450. Half of the order size into carrying cost per unit per annum. So 4,05,000. So revised rework you can calculate, and number of orders to be placed also worked out. Okay. So this is the concept of economic material cost. So we have done good number of problems. So if you have time, please take out material and do all the questions. So here you may get, so like in the question number 6, carrying cost. Okay, duration obsolescence is carrying cost, storage cost, that is also carrying cost. Interest cost is also carrying cost. Okay, so this all explained in the exam, in the classroom material. So like question number 9, they'll be getting into examination. Please be careful. So order quantity, this 10th question is also same. So obviously when the purchase, when the vendor asks you to buy more quantity, they'll try to give discount. So you need to calculate purchase price plus associated cost, that is ordering cost and carrying cost at each level. Wherever I'm getting, you can take it off. So safety stock increases as demand increases. No, in ABC analysis, high cost of items are more likely to fall in category. Low cost items are C. So to protect against stockouts, large batch size is must. No. So to stock, you need to keep more amount of stock. That is important. Question number 11 also we have discovered. See, not true, not true. So only third point is true. You need to keep loss stack because you don't want any stockouts. UOQ is based on balancing between inventory carrying cost and not shortage cost, ordering cost. Lead time is a time interval elapsing between placement of replenished order and receipt of last installment against the order. No, it is about placing the new order and next installment of order. So second point also, if you see in ABC, changes with cost and consumption of items. Okay, so this is the point questions to be true or false. 12th question you have worked out. 13th question also you can work it out. So 15th is similar to that. So lot size if changed, what is extra cost? So you always remember these two formulas here. So ordering cost, manual working you can do. So number of orders into ordering cost, carrying cost is half of average inventory into carrying cost per unit per annum. Why I'm taking average is that the assumption rework says that lead time should be 0. That means you should place order only it becomes 0. So sometimes I may have 100, 90, 80 to 0. So I always keep off of the stock. That is assumption under EOQ. Okay. So and FIFO and LIFO stores ledger, you can just work it out. So I do not want to take it in Mardhan session because that is easy, which you can work it out. Okay. So this is also stock out test, number of times stock out. So this is also you can discuss in the, you can see our material. Okay. So major topics of materials also completed. Please understand that the topics you need to revise again. This is more of marathon session. If you go and revise again, and if you want to listen full-time classes, please take it for subscription for 1 month. Whatever the difficult topics, you just go ahead. So this is an examination time, so don't take any choices, and just understand and each and every topic and do revision. Okay. Thank you. So we have completed 10 chapters. We are moving into the 11th chapter. Very good morning, students. Welcome to the marathon session. First 10 chapters are covered in first video of marathon session, which is already uploaded in the YouTube channel. The next topic we are going to discuss about 5 chapters. So cost accounting systems, and we'll be discussing about process and operation costing. Next, we'll be discussing about joint and byproducts. Then the overhead chapter and the introduction to cost and management accounting. So first 10 chapters will fetch you approximately about 75 to 80 marks. Remaining these 5 chapters will fetch you around 40 to 50 marks, including choice questions. Now, we are moving to cost accounting system, very important chapter, simple chapter. What are we going to learn in this chapter? In terms of cost accounting system, we are going to learn about few topics like integrated accounting system, non-integrated accounting system, reconciliation between financial accounts and cost accounts, and the treatment of under absorption of overheads and over absorption of overheads. These are the major topics we are going to discuss in terms of cost accounting system. Sir, any accounting system is established with a view to achieve something. Now, financial accounts, what is the objective of financial accounts is to find out the profit or loss and the what is the position on the particular date, that is a balance sheet date. In terms of financial accounts, we'll be having real accounts, personal accounts, and nominal accounts. But the objective of cost accounting system is only for the cost ascertainment. That means we need only nominal and few real accounts. We do not need any personal accounts in terms of cost accounting systems. Okay, now let me share our notes. Please understand the process of the entry flow of cost accounting systems, then it will be very easy to understand these topics. Okay. Now, in terms of cost accounting systems. So cost accounting system is maintained under two methods. First one is non-integrated accounting system and integrated accounting system. So what is non-integrated accounting system and integrated accounting system? When separate set of accounts are maintained for financial accounts and cost accounts, that accounting system is called non-integrated accounting system. What is integrated accounting system, sir? When same set of books are maintained for financial accounts and cost accounts, that system is called what? Integrated accounting system. Now, in terms of non-integrated system, how to maintain the books of accounts? So normally, the double entry system is followed for the arithmetical accuracy. So that is the reason we'll be following the double accounting system under non-integrated accounting system as well as the integrated accounting system. Now, in terms of non-integrated accounting system, as I already said, I need all nominal accounts, few real accounts. I don't need any personal accounts for cost ascertainment. In terms of real account, I need information of stock. If you see the trading and profit and loss account, opening stock, purchases, expenses, right? In terms of here, closing stock, sales, any other income. And tell me, all these accounts are nominal accounts, whereas opening stock and closing stock comes as a part of what a real account. In real account, you may have debtors and creditors. Those are not required for cost ascertainment. Now, to maintain the double accounting system, I repeat the word, to maintain the double accounting system, if any real account and personal account is supposed to be debited or credited, we'll follow a memorandum account called general ledger adjustment account or cost ledger adjustment account. Both are same. Why we are maintaining general ledger adjustment account and cost ledger account is simply, sir, I don't need all type of personal accounts in my double accounting system. I also don't need some of the accounts in real accounting system. For double entry system, I need to debit or credit. For example, I am purchasing raw material. Raw material is stores ledger control account, debit. I need to make payment to creditor. I don't need creditor accounts and debtor accounts for cost ascertainment. In such a case, in replacing all these accounts, I'll be using an entry called general ledger adjustment account. So this is the important concept. So if you see any balance sheet, now in terms of stock will be there, which is supposed to be maintained. Remaining all accounts are represented by a concept called what general ledger adjustment account. So this is the, so what is meant by general ledger adjustment account? Sir, to replace the nominal account, to replace the sum of the real accounts and personal accounts, I don't need them for the cost ascertainment because the objective of cost accounting is cost ascertainment. Now for the arithmetical accuracy, we are following double accounting system. So to replace these accounts, I am following a single account called general ledger adjustment account or cost ledger account. Clear? Now, what about the integrated accounting system, sir? In integrated accounting system, we will not maintain general ledger adjustment account or cost ledger because in terms of integrated accounting system, both one set of books are maintained both for financial accounts as well as for cost accounts. So wherever, for example, you are purchasing item, stores ledger, you are debiting, you will create what created. So this is useful both for financial accounts as well as current account. So general ledger adjustment account or cost ledger account will be applicable only in case of what non-integrated accounting system. Clear? Now, what is the entry flow in terms of non-integrated accounting system? You will be having, these are the accounts in terms of non-integrated accounting system. First one, we have material. So in terms of our accounts, what is the entry flow or process flow? We'll be having material control account. We'll be writing here. Please follow. This is very important. Material control account or stores ledger account or stores ledger account. And what is the next expense amount? Wages control account. Then we'll be having factory overheads account. All these three are moved to WIP account or moved to what? Work in progress account. From work in progress account, it will be moving to finished goods account. While coming to finished goods account, administration overheads will also come to finished goods account. Now from finished goods account, it will be moving to cost of goods sold account. Cost of goods sold account. From cost of goods sold account, it will go to cost of sales. In between, you'll be having selling and distribution overheads. Now, when it moves to cost of sales account, now from cost of sales control account, you'll be moving to costing profit and loss account. So these are the entry flow or process flow in terms of non-integrated accounting system. Now, So what are the ledgers we are supposed to maintain under these non-integrated account system? Remember, this is a very important flow. Now I'll maintaining all the ledgers. Stores ledger control account. Sorry. Stores ledger control account. Wages control account. Factory overheads control account. Then, so you'll be having WAP control account. Then after moving from WAP control account, you'll be going to finished goods control account. Now, in between, you may have administration overheads control account. From finished goods control account, it will go to cost of goods sold account. From cost of goods sold account, it will move to selling and distribution overheads will be there. That is selling and distribution overheads account. Then cost of sales account. In terms of non-integrated system, we'll have general ledger adjustment account. So this is the flow. Now, what all will be debited under stores ledger account? Sir, any opening balance will be available. Opening balance of stores, opening balance brought down. Now, if the materials are procured, we are debiting stores ledger control account. In terms of non-integrated account system, we need to debit either cash, bank, or creditor. So we'll not have those things in terms of non-integrated account system. Those all accounts are replaced by an account called general ledger adjustment account. So GLA account. If items are returned, again you will reverse the entry. Normal, what is the financial accounts entry? Creditor account debit to finished goods, right? So by GLA account. Now from stores ledger, where it will move from stores ledger, it will go to WIP account. So to the extent of materials issued, it will go to by working progress control account. It will go by work in progress control account. This is related to direct material. If it is related to indirect material, it will go to finished factory overheads control account. Indirect material. Now, any balance would be the closing balance of raw material. So by balance carried out. So stores ledger accounts are debited by opening balance and any procurement. If any items are returned from production or factory rates, it will be again debited because the stores getting increased. Now, whatever if items are returned, it will go to GLA account. If items are issued, if direct materials are issued, it will be debited to WAP account. If indirect materials are issued, it will go to factory rates control account. Balance would be the closing balance of stores ledger account, which will be appearing in the closing trial balance. Clear? Now, in terms of wages control account, there will be no opening balance for wages, correct? Now, what will be there? Any payment, whether it is indirect labor payment or direct labor payment will be debited to general ledger adjustment account. Now, if the wages are related to direct wages, it will be going to WAP account. If the wages are related to indirect labor, it will be going to factory overhead account. So this is direct and this is indirect. So this is how wages control account gets closed. Stores ledger control, there would be balance, but in terms of wages control account, there would not be any balance because there will be no closing stock for labor. Now, in terms of factory overheads control, you'll make direct there will be opening balance provided if the under recovery or over recovery of overheads are not transferred to costing P&L account, there would be balance in the factory rates because the treatment of under recovery of overheads or over recovery of overheads, if the amount is, we can carry forward to the next year, we can take it to profit and loss account, or by using a supplementary rate, you can transfer, you can apportion between cost of production, finished goods, and cost of sales account, right? That discussion will be there in the overhead chapter. So opening balance, or there will be opening balance both under recovery or over recovery. Any payment GLA account, and any issue of from the stores, it will be stores ledger account. Any payment from wages control, it will come from wages control account, and it will be transferred to WIP account. If any balance of under recovery or over recovery, the balance would be available on debit or credit. So if it is on credit, it is under recovery. If it is on debit, it is over recovery, right? Now, from all these three, you are moving to bottom of, you are moving to WIP control account. Opening balance of WIP would be available. Now, you are getting input from stores ledger, which is direct, and to wages control account or direct labor account. Why you are using control account, sir? Because the objective of costing is what? Cost control, cost ledger. So we always keep control accounts, okay? And from factory overhead account, you'll be having, from WIP control account, we will be transferring to finished goods account, and any closing balance will be available in the ledger itself. Now from finished goods, from WIP it is moving to where? Finished goods to WIP control account. In terms of finished goods account to WIP account, now if any items are moving from finished goods account, it will go to by cost of goods sold account. From finished goods account, you will be adding from administration any payment to GLA, transfer to finished goods account, right? If it is related to production. So to administration overheads account, now any closing balance will be available in the balance. So by balance carried out. Now to cost of goods sold, you will be having cost of goods sold, or you can maintain directly cost of sales account also. So to finished goods account, which is carried from finished goods account, from here we will be transferring to cost of sales. Now cost of sales is debited with finished good, with the cost of goods sold account, that is COGS account. Any payment of selling and distribution account to GLA account, the balance would be transferred to cost of sales. So to selling and distribution overheads account, the balance would be transferred from cost of sales. So if any items are written back, it will go to finished goods. Other the balance would be available here. So the cost of sale. From cost of sales account, it will go to costing P&L account. In terms of costing P&L account, debit is costing P&L account, and any sales would be on the credit. The balance of profit or loss will be transferred again to GL account, because capital account, the balance would transfer to capital account. Here capital account is not maintained. It will be there in terms of GL account. So that GL account will get closed. So this is the concept of the entry flow in terms of non-integrated accounting system. So what all our ledgers will maintain? Will be maintaining stores ledger control account, all receipts. So all opening balance of stores ledger will be available, and any procurement will be debited to stores ledger account. Any issue from stores ledger will be credited to, if it is a direct material, it will go to directly to work in progress account. If it is indirect material, it will be transferred to finished overheads account. Sorry, factory overheads account. In terms of wages control account, all payments are debited, and if it is related to direct labor, please transfer to work in progress control account. If it is indirect labor, it will be going to factory overheads. From factory overheads, it is all accumulated, and it will be transferred to WIP control account. From WIP control account, it accumulates direct material, direct labor, direct and factory overheads, and it will be transferred to finished goods account. And any balance of WIP will be lying there itself. Now, in terms of from WIP control account, it is moving to finished overheads account. So finished goods control account. The finished goods control account is debited with the opening balance of finished goods and transferred from WIP, and any admin overheads will be debited. The amount will be transferred into cost of goods sold account. Now the balance will be available here. Okay. Now from cost of goods sold account or cost of sales, both are of same. From selling and distribution, it will move to cost of sale. If you remember the cost sheet, at respect to it, for example, administration overheads are considered in terms of cost of products, cost of goods sold. Selling and distribution overheads are considered in terms of cost of sales. Amongly, the process of entry flow will be there. In terms of costing P&L, all cost of sales are debited on debit side. Sales will be on the credit side. Any balance, whether profit or loss, will be transferred to general ledger adjustment account. So general ledger adjustment is a memorandum account. It will get closed by transferring profit or loss. So this is the flow of entry system in terms of non-integrated accounting system. In terms of integrated accounting system, entries are same. The only difference, instead of GLA, wherever we are using GLA, we'll use that respect to real account or personal account. For example, your purchased items, what you are supposed to source ledger account is common, and instead of GLA account, one is supposed to make a payment to creditor. So to creditor account. Creditor account. Now we have made a payment of wages in terms of cash or bank. So you'll write down respect to cash or bank. So GLA account will not be available in terms of integrated accounting system. Integrated accounting system is both financial accounts and cost accounts are maintained in the same set of books. So there will be advantages of non-integrated and advantage of integrated, and both disadvantages also. The disadvantages of non-integrated accounting system is a costly affair because you need to maintain, say, two different set of books, two different types of labor are supposed to be included, where stationary cost would be high, and reconciliation is very complicated in terms of non-integrated accounting system. Whereas in integrated accounting system, you are maintaining all the ledgers which are of useful both for financial accounts and cost accounts. If you remember, in terms of SAP in our BPCL, we'll follow the integrated accounting system. So whatever the information required for cost accounts, we'll take it from the financial accounts entry. So you should be very careful in posting the entry itself. Okay. Next important concept which I wanted to highlight is about under absorption or over absorption of overhead. So under absorption or over absorption? Over absorption means more amount is included, more overheads are absorbed into the system. So that let us assume in terms of factory overhead account. I'll try to explain in terms of factory overheads account. Let us assume you have spent this one. This is incurred. Debit side would be incurred. Credit side would be absorbed into WIP or whatever it is that. If it is a administration overheads, it will be absorbed to cost of production. If it is selling and distribution, it will be absorbed to cost of sales. Now, if incurred and absorption, we need to see. If absorption is more, incurred is less, this is called over absorption. If incurred is more and absorption is less, this is called under absorption. Sir, if you want to know the entries, it is very simple. Let us take a small example. Factory overhead account. You have incurred 90,000. By using different safe, you have observed 1 lakh. Now you wanted to close this 1 lakh. That means what you are supposed to do, you should debit factory overhead account and you should transfer to what amount? Costing P&L account. Whether it is costing P&L account or supplement rate, that we'll discuss in the overhead chapter. If it is a over absorption, debit factory overhead account to costing P&L account. If it is, for example, incurred is 1 lakh and absorption and absorption is 90,000, then it's under absorption. You need to credit factory audits account and you need to debit costing P&L account. Okay, so this is the concept, because this concept is very important in terms of reconciliation between financial accounts and cost accounts. Okay, now this is the important topics in terms of under absorption of overheads or over absorption. So ultimate objective is that if it is over absorbed, you should reduce it. You should create costing P&L account, because costing P&L amount got debited with more amount. You should reduce that amount. If it is under absorption, costing P&L amount debited with less amount, so you need to debit costing P&L account. Okay, so ultimately the incurred amount should go to costing P&L account. If absorption is more, because it is already got more debited in terms of costing P&L, so we are reducing it by creating costing P&L account. If less amount is absorbed, that means costing P&L got less amount. We need to increase in terms of costing P&L account. We are debiting the costing P&L account. So this is a simple observation in terms of overheads control, whether it is factory overhead control or administration overheads account, or whether it is selling and distribution account. Both are of the same concept. So instead of factory overheads, you may have administration overheads, and you may have a different selling and distribution. It may have selling and distribution account. Clear? No. So yeah, that is what. If it is a over recovery, overhead account control account to costing P&L, under recovery costing P&L account to overhead control account. So this is the entry flow. Now, when you are doing reconciliation between, because the cost accounting profit would be different and financial accounts profit would be different, because you are including certain items in financial account, you are not including certain items in cost accounts. Now, because of that, you may have a different profit under financial accounts and different profit under cost accounts. You need to do reconciliation of the reconciliation between financial accounts and cost accounts. Now, this is already we discussed in cost sheet. There are certain items which are included only in the financial accounts, not in the cost account. That is a purely financial expenses. Next one. There are some items of income which are considered only in the financial accounts, but not in the cost account. So these all are very important. You need to understand clearly with these concepts. So purely financial expense, purely financial income. So these are only available in the financial accounts, but not in the cost accounts. Next one. There are some items only included in the cost accounts, but not in the financial accounts, like opportunity cost, charges in lieu of rent where premises are owned, interest on capital, salary of the proprietor, notional depreciation on the assets fully depreciated, which book value is nil. So these items are available only in the cost accounts, but not in the financial accounts. Obviously, when different amounts are debited in considered in one accounting system, not considering another accounting system, so you'll be having. So the reconciliation can be done by using a statement or by using a memorandum reconciliation account. Now, so these all are very important in terms of. So this is the reconciliation statement between cost accounts and financial accounts. So you can take as a base. In the question, if it says that you should take this as a base, like you should take only cost accounts as base, you need to consider that only. If financial accounts are supposed to be considered, then you should consider only the financial accounts as base. Then it is more like a BRS, the difference of cash book and bank book. Okay, that is a concept here. Understood? Now, the next important point is about single plan and partial plan. Now, in terms of single plan, variances are computed and analyzed and accounted at the time of each transaction wise. That is single plan. That means, for example, at the time of procurement only, you have understood that you are supposed to pay 10 rupees, but you paid 11 rupees. Now, at this case only, you will enter material price variance. That is a transaction of single plan system. If it is a partial plan system, what we'll be doing is that you will record at 10 rupees only. Now at the end of the period, you will find out the reconciliation. At that time, you will record the variances. So for each transaction wise, if you are maintaining the, if you are recording the variance, that is called single plan. If the variances are accounted at the end of each period, that is called partial plan. And single plan is little complicated, whereas normally majority of the organization they do partial plan. So there is a difference between partial plan and single plan. So this all you can understand in terms of our regular classes. Okay. Abnormal variance. So this is the disposition of cost variance, very important. How to close the cost variances, sir? Sir, if you are all overheads, if all variances are transferred to costing P&L at the end of each period, each P&L, each variance wise will be transferring to cost and P&L account, provided all the variances are abnormal. If the variances are normal, the variances are distributed between cost of sales, finished goods, and WIP account. Okay, because WIP of in terms of work in progress, finished goods will be having closing stock, cost of sales, those items which are produced and sold. So this is the apportionment between the cost of sales, finished goods, and WIP account. Okay. Now quantity and efficiency are abnormal and price variances are normal. General cases is that, so any price variance is a normal variance because which is not in our control. Whereas quantity variance are within the control of organization. So normal understanding is that all price variances are normal, which are considered, which are apportioned between cost of sales, finished goods, and WIP account. All quantity and efficiency variances are abnormal, that will be considered to costing P&L account. So there is a concept of non-integrated accounting system and non-integrated accounting system. So what did we discuss in terms of cost accounting system? So the objective of cost accounting system is to find out the cost ascertainment. Now, for the mathematical accuracy, we are following the double accounting system. Now, under double accounting system, we have two types of cost accounting system. One is integrated accounting system. Second one is non-integrated accounting system. So non-integrated accounting system means you are maintaining separate set of books for financial accounts, separate set of books for cost accounts. Whereas in terms of integrated accounting system, same set of books are maintained both for financial accounts and cost accounts. When you are maintaining the non-integrated accounting system, there would be a reconciliation of profit between financial accounts and cost accounts. Now, what are the ledgers maintained in the non-integrated account system? First one is stores, wages, and factory overheads. These three will move to WIP account. WIP account will go to finished goods. They will be adding administration overheads. Then it will go to cost of goods sold or cost of sales account, and selling and distribution accounts will be added. Cost of sales will be transferred to costing P&L account. Any profit or loss will be transferred to general ledger adjustment account. Now tell me, general ledger adjustment account or cost ledger account is applicable only in terms of non-integrated accounting system. Then we have discussed that reconciliation of profit between both cost accounting system and financial accounts, because there are certain items of income and expense which are considered only in the financial accounts but not in the cost account. There are certain items of incomes or expense which are considered only in the cost accounts but not in the financial accounts. Reconciliation statement can be prepared in terms of a statement or by an account called memorandum reconciliation account. Then we have discussed about disposition of variances. So if the variances are normal, we have discussed about single plan and partial plan. In terms of single plan, when the variance is computed for each transaction, that is a single plan. What is second one? Partial plan. So if the variances are accumulated and analyzed and accounted at the end of each period, that is we call as partial plan. So it all depends how your organization decided whether to go with a single plan or partial plan. So in terms of variances, if there is a normal variance will be a portion between cost of sales, WIP, and finished goods. If it's abnormal variance will be charged to costing P&L account. General assumption is that all price variances are normal and any quantity or efficiency variances are abnormal. Like for example, your prices are getting increased in terms of diesel and petrol. Can we control that? So those variances we assume it to be normal, and there are some impact of efficiency and quantity effects that will be considered as abnormal. So abnormal variance will be transferred to costing P&L account. normal variance between cost of goods sold, finished goods, and what is third one? WAP account. Clear? Right. Now let us move to problem number 3. We have decided to work problem number 3, problem number 4, and problem number 15 in terms of cost accounting systems. Okay, right. Problem number 3. It is a page number 30. Right. As of 31st March 2016, the following balances exist in the firm's cost ledger, which is maintained separately on a double entry basis. So whenever you observe cost ledger control account or general ledger account, please understand this accounting system is non-integrated accounting system. Now, when your trial balance, it should get tallied. What is meant by balance in stores ledger account 3 lakhs? That is the closing balance of raw material, or sorry, opening balance of raw material. Work in progress control, opening WAP. Finished goods account, opening finished goods. Manufacturing overhead account, there is a credit balance. How much amount credit balance amount? 15,000 credit balance. So what would have happened in the last year? If you may get confused with over recovery or under recovery. Let us assume that last year you have incurred 1 lakh and you have spent only 85,000. That is the reason credit balance appeared, correct? No, sorry. So last year you have incurred 85,000, whereas you have transferred 1 lakh. So what is the balance available? The balance available credit is 15,000. What does this mean? This is absorption, this is incurred. So this is the over absorption in the last period. So over absorption of overheads. Okay. So this is the opening trial balance. Okay. Now, in the next quarter, the following items arise. Finished products at cost, how much amount? 2,25,000. Manufacturing overheads incurred 85,000. Raw material purchased 1,25,000. Factory wages 40,000. Indirect labor 20,000. Cost of sales 1,75,000. Material issued to production 1,35,000. Sales returned at cost 9,000. Materials returned to supplier, how much amount? 13,000. Manufacturing overheads account charged to production. That means how much is absorbed into production amount? 85,000. You are required to prepare the cost ledger control account, stores ledger control account, work in progress control account, finished goods ledger control account, manufacturing overheads control account, wages control account, cost of sales account, and trial balance at the end of the each quarter. Now we'll prepare those ledgers right now. So I'll be preparing general ledger adjustment account, which is a cost ledger account. General ledger adjustment account, stores ledger. In the examination, they may ask you to write down the journal entries, or they may ask you to work out the ledgers directly. Wages control account, so I'll write down here. General ledger adjustment account, stores ledger control account, wages control account, factory or manufacturing overheads control account, WAP control account, finished goods control account. Then we have cost of sales account. Instead of costing P&L account only, I'll look after cost of sales account and trial balance at the end of each quarter. Debit, credit, you should get the closing balance, right? Now, first, whatever the information they're given, please try to put it down. Cost ledger control account, what is closing balance? 6,85,000 by balance brought down 6,85,000. Then manufacturing overheads control account 15,000, right? So by balance brought down, how much my balance brought down? 15,000. Now debit stores ledger to balance brought down 3 lakhs. Work in progress control account, opening WAP to balance brought down. How much amount? 1,50,000. Finished goods control account to balance brought down 2,50,000. Correct? So these are the amount. Now we'll move one by one. So the amount, first point is finished product at cost 2,25,000. That means from WAP it is transferred to finished goods. So by finished goods control account, how much amount? 2,25,000. In finished goods to WAP account 2,25,000. Manufacturing overheads incurred. How much is the manufacturing overheads incurred? 85,000. So manufacturing to GLA account. How much amount? GLA account. How much you are paid? Incurred. Incurred on the debit side, absorption on the credit side. To GLA account, how much you have incurred? 85,000. Now in GLA account also, by factory overheads control account or factory overheads account, 85,000. Raw material purchase, how much amount? 1,25,000. To stores ledger to GLA account, how much you have procured? 1,25,000 in GLA account, because this is a replication of all personal accounts and normal real accounts. Part of the real accounts are not required in cost accounting. That is the reason. That is the reason we are replacing with general ledger adjustment account. So by stores ledger account, how much amount? 1,25,000. Next one. Factory wages, how much they are paid? Factory wages 40,000. Correct? So factory wages 40,000. Indirect labor 20,000. So both will go to as a part of wages control account. To GLA account 60,000 by wages account 60,000. Out of wages, if it is factory wages and indirect labor is 20,000. Indirect labor will go to factory overhead account. Direct will go to WAP account. Now, similarly, we'll go factory overheads to wages control account 20,000, to WAP to wages control account 40,000. Now, how much is the cost of sales amount? Cost of sales is 1,70,000. So from finished goods, we'll move to cost of sale. By cost of sales, how much amount? 1,75,000. So to finished goods control account, to finished goods control account, how much amount cost of sales? 1,75,000. Material issued to production 1,35,000. So from stores ledger to WIP, source ledger to WIP, how much amount? 1,35,000. So in WIP account to stores account, 1,35,000. Next one, sales returned at cost. How much amount sales returned at cost? 9,000. So from cost of sales, again, it will move to finished goods, because whatever is transferred, debited, it should be at cost only, because finished goods are valued at cost. By finished goods control account, in the question itself, it is given cost. If it is a profit amount, you should turn it to cost amount. Be careful. 9,000 to cost of sales account, 9,000. Materials returned to supplier, how much amount? 13,000. So from stores ledger by GLA account, 13,000 to stores ledger account. $13,000. Manufacturing overhead charged to production, how much amount? 85,000. So from factory overheads, it will move to WIP account. By WIP account, which is absorbed, 85,000. So to factory overheads account, how much amount? 85,000. Now, all entries are posted. We'll do the balancing. First, come to stores ledger account. In stores ledger account, opening balance 3 lakhs. Procurement, how much amount? 1,25,000. You have transfer to WIP. Factor it's nothing. GL account 13,000. By balance brought down, which is the closing stock of material. How much you are getting? 4,25,000. 4,25,000 minus this amount, you're getting 2,77,000. Now this is go as a part of trial balance, right? Source ledger account, debit side 2,77,000. WIP account, finished goods account, factory overheads account, general ledger adjustment account. Right now, wages control account got balance, no balance here. Now come to factory overheads account. So total 1,05,000. Here it is how much amount? 15 plus 85. How much amount? 1 lakh. So by balance carried down 5,000. This is under recovery, because you have incurred 1,05,000. You have observed only 1 lakh. 5,000 is under recovery. When it comes to WIP account, see here 1,50,000 plus 40, 190 plus 135 plus 85. What is the WIP account total? 4,10,000. Out of this, you have transferred 2,25,000. Balance would be the by balance carried down. How much is the balance carried down? 1,85,000. In terms of finished goods account, 2,50,000, 2,25,000, 9,000 transferred to cost of sales would be the balance carried down. How much would be the finished goods account? This is 4 lakh. 2,50,000 plus 225 plus 9,000. 4,84,000 minus 1,75,000. Balance would be 3,09,000. Cost of sales, it will be transferred to balance carried down, because you don't know what is the sales amount. Otherwise, you would have transferred to P&L account, right? So how much would be balance? 1,66,000. Then you need to transfer, you need to check the balance of general ledger adjustment account. So general ledger adjustment account to balance carried down, 6,85,000 plus 125 plus 85 plus 60, 9,55,000. Simple, right? Minus 13,000 would be 9,42,000. If you see all the balances here, WIP, what is the closing balance? 1,85,000. What is the finished goods amount? 3,09,000. 5,000 factory overheads under recovery. So that is also, so that is a under recovery means debit balance, right? And what is the amount of general ledger adjustment account? 9,42,000. If you see the trial balance got matched, 9,42,000, 9,42,000. So this is the concept of under uh, maintaining of the cost records under non-integrated accounting system. So dear students, please understand, you need to prepare respective ledgers. So we need to understand what would be on the debit side, what would be on the credit side, and then you need to balance it off. So entry process is simple. If you're writing procurement of direct material, stores ledger account debit to GL account, unless if you know the ledger, it will be easy to write down the general entry also. Okay. Now this is question number 3. Then we'll be moving to problem number 4, which is of generalize the transaction if it is an integrated accounting system. So very simple in terms of journal entries. And whether this is integrated accounting system or non-integrated accounting system. Journalize the financial following transactions assuming cost and financial accounts are integrated. Materials issue direct. How much amount? 3,25,000. What is the entry will post? Tell me. Direct materials will go from where to WIP, it will be debited to stores ledger account. If it is indirect material, instead of WIP, it will go to factory overheads account to stores ledger. Allocation of wages. Total you have paid 6,50,000. Wages control account debit to cash or bank or creditors. Allocation out of 6,50,000, 25% is indirect, 75% is direct. Direct wages will move from WIP to wages control. If it is indirect wages, factory overheads to wages control account. Clear? Under absorption of overheads. No, under absorption of factory overheads. If it is over absorption means costing P&L was already with full amount. It's already debited. We need to credit factory overheads and debit what? Sorry, over absorption, right? Over absorption means already costing P&L was with more debit amount. I need to credit costing P&L and debit factory overheads. If it is under absorption, costing P&L account debit and to administration overheads. Or you can see like this. Over absorption means what? Absorption is more. If it is 2,50,000, assuming this would be 0. Now I want to close this account. What I should do? I should debit factory overheads, transfer to costing P&L account. Similar is the administration overheads. Payment to sundry creditors account debit to bank because this is integrated. Otherwise, if it is a non-integrated accounting system, will not post any entry because it is GLA to GLA account. Collection from sundry debtors also will not post because, so if it is integrated, yes, bank account to sundry debtors. If it is a non-integrated accounting system, will not post any entry because it is GLA to GLA account. Okay. Problem number 15. R Limited showed a net loss of 35,400 as per their cost accounts. It is more of, if you remember the bank BRS statement, what would be the, you can do both ways, debit balance as per bank statement or credit balance like OD statement, right? This is also like that. R Limited showed a net loss of 35,400 as per their cost accounts for the period ended 31st March 2016. Now, however, the financial accounts disclosed net profit of 67,800 for the same period. The following information was revealed as a result of scrutiny of the figures of cost accounts and financial accounts. Now, we'll do both. Finally, what did they ask you? Prepare a reconciliation statement by taking costing net loss as base. This is very important. You can consider, you can work out with financial accounts as base or costing loss, but in the question they ask you to work out based on costing net loss. Okay, now we'll work out here itself. What is a costing net loss amount? Costing net loss is 35,400. Now profit is 67,800. Now let us work out one by one. Administration overheads under recovered. Now see here, administration overheads under recovered. Under recovered means in costing accounts, cost accounts, see here, in cost accounts, the debit amount is less. You're not charged full amount, you're charged less. Now what I should do, I should debit my costing P&L account. That means I should reduce my profit or increase my loss. I repeat the word. First thing is that I should reduce my, if it is a profit number, I should reduce my profit. Because it is a loss, I should increase my loss. So add 25,500 should be added. Next one. Factory overheads over recovered. Opposite to this. Depreciation undercharged in cost accounts. That means you need to increase your cost accounts loss or reduce your profit. See here, you should think in a different way. I didn't take a simple question. I have taken a complicated question which they can ask in examination. Undercharged means my costing loss is less because I would have got more amount of loss, but I got less loss. So I need to increase my loss. So add this one. Dividend received. Dividend is not considered, right? So dividend received, how much amount? 20,000. Dividend is considered only in the financial accounts, not in the cost accounts. So this amount I should, so this dividend amount, what I should do, I should reduce it off because I need to reduce my loss. Loss due to obsolescence charged in financial account, which is not charged in the cost account. That means I need to increase my loss. So you need to add loss 16,800 add. Income tax provided in the financial accounts, but not in cost accounts. That means your costing loss would have been more if it is would have charged. So that is the reason I need to increase my loss, which is loss of 43,000. I need to add to my loss, right? 43,600. Bank interest credited. I need to reduce my loss. So minus 13 because it is considered only in financial accounts, but not in the cost accounts. I'll put like this because you may get confused. Now, next one. Opening stock, value of opening stock. What is the difference of opening stock in cost accounts and financial accounts? 15,000 more in cost accounts. That is the reason your loss is more, right? So I need to reduce it my loss. What is the amount? 15,000. Opening stock, how much amount? Sorry, 20,000, right? So 20,000 amount, I should reduce it, right? So minus. Closing stock, what is the difference? Closing stock 7,500, which is more in financial accounts is more. So I should reduce my loss of 7,500 in this case also. It is 6,500. Next one. Goodwill written off in financial accounts. It is not written off in cost accounts. If it would have been written in the cost accounts also, my loss would have increased, right? So I need to add my loss. Notional rent of one premises charged in cost accounts 60,000. I should reduce to compare with my financial accounts. Provision of doubtful debts. Yes, I need to increase loss in the cost accounts 15,000. Now see carefully. If the figure started with, if the figure started is of profit, the understanding is different. If profit is to be increased or profit is to be reduced. If the figure category is loss, then you need to understand in different way whether my loss should be increased or my loss should be decreased. Now, assuming one important point, income tax provided. Sir, if the same income tax is provided in the cost accounts, your loss would have been increased more. That is the reason you are increasing your loss by another 43,600. Same is the concept. So for 35,400, if I add 25,500 less 1,35,000, add 26,000 less 20,000, add 16,800, add 43,600 less 13,600 less 20,000 less 6,500, add 25,000 minus 60,000, add 15,000, you would be getting a profit of 67,800, which is the profit as per financial account. Normally, if you get these numbers in positive means for final total, if it is positive, it is a loss as per financial account. If the final number is negative, that is a profit as per financial account. The reason is that when you would have started loss with positive figure, if you're getting loss at the end also positive figure means that is a loss as per financial accounts. If you're starting with positive number in the initially, then the loss at the end, the negative at the end means that is a opposite to loss. What is opposite to loss? Profit. Clear? So this is the important concept in terms of non-integrated accounting system or integrated accounting system, more precisely cost accounting system. So if they ask you memorandum reconciliation account, same amount. If it is started with credit, so if it is all to be added on the debit side, reduce credit side. So the same concept, instead of statement, you can prepare in the memorandum reconciliation account. So please do this. This is a very simple chapter where you can fetch 10 marks from the examination. Please do not leave it off. Okay. So important points is entry flow of accounting system, understanding the difference between financial accounts and cost accounts. Those are the items which are included only in the financial accounts. Those are items only included in the cost accounts. Those are items which are excluded from the financial accounts. Those are items which are excluded from the cost accounts. This, you are supposed to be very thorough with this case. Then important theory part is single plan and partial plan, that also I have discussed, and reconciliation statement also I explained. So if reconciliation statement, if it is starting with loss, be careful. If it is a profit, normal like your BRS only. Okay. So please do it, and happy learning.